Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So, in this session, we are going to get started with a brand new chapter called as Standard Costing, which is chapter number 14. So, please take down the heading. Write down chapter 14, Standard Costing. Right? Guys, so from an examination perspective, this chapter is yet again very important. And for those who already have seen a bit of standard costing, or who already know a little bit about standard costing, or who have heard about this chapter, there's one thing in common which I have noticed in students. Many students struggle in this chapter because this chapter, no doubt, has a lot of formulas. But the problem is, many students are forced to believe that these formulas can be understood only by mugging up. Now, I will prove it to you. My commitment, once again, there is absolutely no need for you to mug up anything. Such an easy chapter, provided you focus on the process and learn everything conceptually, and you will get it. That's about it. No doubt we have formulas. I'm not saying there are no formulas. There are a lot of formulas, but every single formula you will be able to arrive by yourself, just like how we've been able to do that in the past chapters, right? Till date, we are almost the fag end. So this is the penultimate chapter, last but one chapter, excluding theory, right? So till date, have we mugged up any formula? No. The same thing continues here also. Zero mugging up, my commitment to you. So if you have already learned standard costing, now my humble request to you is, please forget it for the time being. So unlearn and relearn from the scratch. Trust me, it is going to give you guys a completely different perspective on this particular chapter. Right, guys? So before we get started, so I will share with you all, a small story. I think we missed this in the previous chapter as well. So yes, so I am going to share a story before we start into this particular chapter. Shall we? Yes. Okay. So how many of you know this guy? Cricketer? No. We have some athletes in our classroom. Ah, but you've seen him. Oh, what is he known for? Okay. Huh? Yes, he's a leg spinner. Okay. So the man's name is Praveen Tambe. Okay. Now I'm going to share the story about this man. Many of you guys might not have even heard him, if heard about him. But if you are an avid cricket fan, you might have definitely heard about his name. But even in that case, there are chances of you missing out on this great man. Now, I'm going to share this life story of this man, Praveen Tambe. So, born and raised in Mumbai, a very competitive place, be it any field that you pick in, and especially in the field of cricket. Now, this person, Praveen Tambe, was born to a lower middle income family, and he has this deep passion for cricket. Now, you guys are aware that there's something called Ranji Trophy. Yes, the state level tournament within India, it gets organized. So that is the first class cricket which many cricketers would like to first start their cricketing career at, with Ranji Trophy. So directly, you can't dream of joining Indian cricket team and all. There is a process through which it happens. Not anymore. Nowadays, IPL and all these things are there. Certain players have been directly picked based on their pure talent, right? But back then, so it used to happen only through district level, state level, the first class cricket, and only then you get a call. So all these things were there. Now this person, his main dream or objective was to get selected, not for Indian cricket and all. That's still a long way ahead. He wanted to get selected for his Bombay Ranji Trophy cricket team. So Bombay cricket team, he wanted to get selected. Now he initially started off his career as a fast bowler, right? Medium pace fast bowler, medium pace bowler. Now his coach asked him to change his strategy and asked him to try some spin and all, and that's when he completely changed his action and he changed his bowling style and everything, and he started working on it. Though he was a good bowler, somehow the competition was extremely high for certain other reasons. Time and again he couldn't get selected at all. Now guess what? Now we all know that, especially if you are if you are a cricket if you are a cricketer yourself, maybe if you had this passion for playing the game, even if you go tell your parents that I want to play cricket, what is a normal thing that they will say? You study parallelly if you want, you play cricket, but you can't take that as your career option. This is what many people say, right? Because out of so many thousands and thousands of people, only a handful get selected and they get the due recognition that they rightfully deserve. But so this is a very very uncertain game, and that's the reason. Uncertain game as in the game of getting selected. So that's very uncertain. That's why we always have this mindset. Now this man, he had his passion deep inside. No matter what, he wanted to play for his at least get selected in the first class cricket. But for some reason it didn't happen. Now age passed by. Now slowly this guy was entering his mid-20s and all. Now at this age, this is the age where the society expects you to be settled, right? So he had to literally forgo his mainstream cricket, the passion of pursuing his cricket. So he did some odd jobs, did certain other things because he had to run his family, got married, had children and all that. He had to run his family, but parallelly, deep inside, he had this instinct of pursuing his passion. Whenever he got a chance, he used to go to a ground and he used to play, right? So on a local level, he was quite popular because whenever there's someone who is not able to make it for the game, they used to call this guy. He used to go there as a substitute and play. That was his passion. Now, no matter what this man used to do is, someday or the other, I might get a call. Now, what he did, though he was completely out of cricket, he parallelly worked on whatever his specialization wasn't, the spin and other things. So he was focused parallelly on that. However possible, this guy was literally running day and night, and he had to maintain that fitness also, because someday when the call comes in, so he has to be fit. Just knowing how to play the game alone will not suffice. For those who follow cricket, you have a lot of things like yo-yo test and many things, so you need to be really fit. Now this guy was doing a routine normal person lifestyle. He used to go work and other things, and parallelly he used to focus on his passion with an expectation that one day or the other he might get a call. Now what happened, years passed by. Now for those who do not know, when it comes to cricketers, the earlier you start, the better it is. For example, the likes of Sachin Tendulkar, he all started at the age of 16, 17, so very young age he started. The retirement age is post 35, generally at any given point of time, they might retire. Now, what happened? Now, slowly his age passed by. He went 35 plus. Now, obviously, now no one is going to give him a call. 30 is it? 30 by itself is supposedly a very old age for a person to debut. Debut means to start his career. 35 gone, but still this guy was parallelly pursuing his passion. You will not believe, guys, what happened. One fine day, when he was the age of 41, he got a call, and on the other side, the man who was speaking was Rahul Dravid, and he got a call saying that, now we've spotted your talent. Are you interested in playing for Rajasthan Royals? So that was his debut at the age of 41. When many people give their farewell speech, this man debuted on a very high platform, and that was the first time ever he was playing a very very high level of cricket. He has never played a single Ranji Trophy, a first class cricket. No, nothing at all. He was just playing on cricket grounds, and there are people who spot the talent. So this was known to him, and through this, what happened was, so Rahul Dravid himself called this man, and guess what? I think this was in the year 2013, if I'm not wrong. That was the year he debuted. He played 41 years, and his own teammates were calling him uncle, just for the sake of you know um, uh, mocking him or something like that. I think he bagged a hat trick or something like that. He scored. He bagged the man of the match award in his first ever season. That is no joke. And for those who are saying IPL only, no, IPL, though it is just a league cricket, it is at par with international standards, because you have the best talent across the globe, and the kind of cricket which IPL showcases is something else. It's not a normal domestic or first class cricket. We all know the viewership, we all know the big money involved, and we also know the kind of talent that gets picked up. And in that forum, without any other background, this man got selected right at the very first level. Now, guys, the reason why I'm sharing this with you is because a very, very important life lesson that we all have to learn from this person. Now, he had this never say die attitude. I keep telling you all this. No matter what, age of 35, people would have given up. The moment someone crosses 30, cricket, if you cross 30, that's about it. You are not going to get any call. But this guy kept his hopes alive. Said, fine, whether I get it or not, I am doing something because it is my duty. And he just kept on doing it. Now just imagine, had he given up before before he got this call, even had he got this call because of luck, he would not have had the fitness to go and join the team, right? So it's not just the talent, it's the attitude that took him there. And guys, and after that, his career was set. Maybe I think in a year or two, I think he even played for Gujarat Titans, if I'm not wrong, or if not, he was at least a part of the team. So then he went and joined, I think, Caribbean Cricket League or somewhere. There are other league matches, just like IPL. Certain other countries have their league matches, and he was also a coach. Somehow he got a recognition, and he was able to settle down in his life, at least in the field in which he had a passion for. Now, a great demonstration of the willpower and commitment. Guys, it's definitely not easy. It's not at all easy. At the age of 40, debuting is something that is next to impossible, and this man proved that to be possibility. And for those who are now slowly on the verge of their 30 35s, who have the talent but for some reason they didn't get the call, now they at least have a hope, right? Because they have a guy called Praveen Tambe, where they can actually tell, look, if this guy can be called at the age of 41, so it's not too late for us as well. Guys, a very, very, very important life lesson. He never gave up. The easiest thing for him to do was to give up on his dreams, but this guy never gave up. And the kind of money that IPL is actually going to give people. You guys know that, right? Even for a player who is taken as a substitute, he need not even play a single season, right? Sit just on the dugout. He gets paid a minimum of 25 to 30 lakhs per season, I'm saying, right? That's about it. Life is settled. Now, this man, that's a huge, that's a huge willpower that he's got. Now, guys, many of us have this feeling that, for some people, especially in CA field, now we feel that I'm already old. There are many people who are younger to me, who are way past me. Guys, age is just a number. Now, why Praveen Tambe? I can give you an example of someone who has achieved, the dream of becoming a CA at a very, very older age. Sir SD Bala. The man, what he did, he was, he did some engineering or something like that, and he actually got into a banking job, and he was working as a banker. And suddenly, at the age of 52 or 53, he decided to do CA. At the age of 52, 53, he decided to do CA. He quit his job, started preparing for CA, He went to articleship along with kids, students who were actually the age of his children or grandchildren, maybe. Along with them, he did. And yes, of course, at that age, repeated failures or what. And guess what, guys? 13 days before his retirement, he qualified as a chartered accountant. And not just that, he went on to write a book on accounting standards, global accounting standards, which is popular amongst your practicing professionals as well as earlier it used to be popular among students also. He has written a book on accounting standards along with MP Vijay Kumar sir, another legend in the field. Now he started his dream at the age of 52 and finished the course 13 days before his retirement. And he did his articleship along with people who never belonged to his generation, kids literally. Such a nice man. I had the honor of meeting him once. Such a legendary person. Just imagine, why was he able to do that? The only thing is mindset. Age is just a number. Age is just a number. Now for those who feel that maybe you're already older, or maybe the society is putting you some the society is putting on some pressure saying that you should be settling now, or maybe something else. Especially many girls I've heard, there is a pressure in some people. This still happens right now, that to get married and all that. Guys, I am telling you now, there are numerous number of people who have been completely persistent on their dreams, and they have made it happen. And the moment they made the impossible possible, now it gave a ray of hope for many other people who were following their footsteps. And now if someone says that how can you do, they at least have a person to quote. And this is what these guys have actually done. They have created a path for so many people, which once was a path that was not reachable at all, right? A great sense of responsibility and a great most sense of determination and sheer willpower. If mentally you're strong, you can literally create even the impossible. That's something that all of us need to know, and a really great life lesson. And of course, guys, regarding Praveen Tambe, if at all you're very much interested, there is a biopic which has been taken in his name. The movie's name is Kaun Praveen Tambe. So it's a Hindi biopic. So Kaun means who. So who is Praveen Tambe? That's the name of the movie, and it's on Hotstar. If you want, you can watch a really good movie. And it was taken, they have depicted really what he went through and everything. So a real inspiration for all of us. So that was something that I wanted to share with you all, guys. And also remember the story of SD Bala sir. At the age of 53, he started and finished his course, the chartered accountant. He became a chartered accountant 13 days before his retirement. If people can do that at that age, it's not easy. It's not easy at that age. At this age, we all have so many distractions. We don't have the focus. At that age, it's not at all easy, guys, to sit and prepare for an exam like CA and all. It's not at all easy, but still there are people who've done it possible. So if at all you feel somewhere you're lagging behind just because you feel your age is it's ticking, please tell yourself age is just a number. And the moment you complete this course and come out, now all your age and all the other parameters will not even matter. All that matters is just the 2-letter word C and A before your name. That's about it. The only way you can get it is by way of earning the title, doing the course, and that's about it. For that, I'm telling you again and again, your Jan, May, and your September, these are all just your mini battles. It's okay to lose battle, but the final focus should be on the war. The war is getting that qualification, and you guys are so dedicated. Just keep pushing along. That's about it, and one fine day you will reach your destination. Here, guys, right? So that's about the motivation for the day. So shall we begin? Yes, that's about it, guys. So 2 stories I shared. Okay, Praveen Tambe and SD Bala sir. Okay, cool, guys. So I made up for the previous the motivation which I should have covered in the previous chapter as well. So anyways, okay, guys, so now please take down the learning objectives. Let's get started, shall we, guys? Are we ready? Yes, a very good chapter, an easy chapter. It's not as big as your marginal costing. It's a very, very easy chapter. Write down, guys. Learning objectives. Learning objectives. Write down number one. Number one, everyone, write down material cost variances. Material cost variances. variances. Material cost variances. Written down? Yes. Number two, labor cost variances. Written down? Write down quickly. Labor cost variances. Done? Number three, variable overhead cost variances. Variable overhead cost variances. Are we done? Next, write down number four, fixed overhead cost variances. Fixed overheads cost variances. Are we done? Are we done, guys? Yes? No. Now, that's about it. This chapter has 4 learning objectives. What are they? Material cost variances, labor cost variances, variable overhead cost variances, fixed overhead cost variances. Is that clear? That is the subject matter of your CA intermediate syllabus. Is that clear? Now, as usual, first, let us understand the background of this particular chapter. Now, this background will help you on understanding why we are studying this chapter. And with that, if we get into this chapter, trust me, it's going to be very, very simple. Shall we begin, guys? Yes, let's get started. Now, guys, first of all, our subject, cost and management accounting, has how many objectives? 3 objectives. What are they? Stock value valuation, profit computation, decision making, and control. And this chapter, standard costing, helps you achieve the objective of control. Is that clear? It helps you achieve the objective of what? Control. Please catch up running notes. Now, sir, how does it help us achieve this objective of control? Now, I will tell you guys. So now, what happens in an organization? What happens in an organization? Now, guys, before the start of every year, every company prepares something called as budget. Agreeing with me on this? Correct? Right? You guys, before you start your preparation, let us say you are 2 months or 3 months away from your exam, you budget, no, okay, roughly, this is the balance time available. So, into number of hours you do. So, number of days into number of hours, this is the total hours available, divided by 3 or by 6, depending on the groups you are going to attend. So, per subject, this is the number of hours available and all. You guys prepare a budget. Am I right, guys? So now every company, before the start of the period, they prepare something called as a budget. Am I right, guys? Now, once the budgets are prepared, now what do they do? Now, similarly, a company, they prepare sales budget, production budget, purchase budget. There are multiple budgets they prepare. Guys, correct? Now, what they do? Now, the next thing they do is they fix the responsibility to the respective people. For example, sales related budget is the responsibility of whom? The sales team. Am I right, guys? Production related area is the responsibility of production team. Are you all able to understand? Similarly, what they do, they set the target for the respective employees. They will say, look, who is responsible to do what job is clearly mentioned when they are hired. Am I right? Now, at the beginning of the period, they also tell them the target. Look, this is your target. Is that clear, guys? Right? Now, you would have seen sales people, right? They would have knocked your house. They'll say, sir, please buy this, sir. I have a target of so much. Who sets the target? The management, the company where they are working. They will set the target. Am I right, guys? Now, Once the target is set, what happens? Now the respective people are given the authority to perform their job, and they are given the full freedom and the authority to perform their job. Am I right, guys? Yes. Now once their job is performed, at the end of the period, what will I do? I evaluate the performance. How will you evaluate the performance? You compare the actual performance with the target that you had set, guys, correct? So what we do here, we evaluate the performance. Am I right, guys? And once I evaluate means what? I compare the actuals with my targets. Am I right, guys? Once I do this, now I find out what is the difference between my target and my actual. That difference is called as variance. What do you mean by variance? Vary means what? Change. How much is the difference? How much is the change between what and what? Between the target and between the actual performance achieved by the employee. Are you all able to understand? Is that clear, guys? Yes? Any problem here? No. Clear with this, guys? So I evaluate the performance wherein I compare the target with the actuals. This is called as variance. I analyze for the variance, right? And finally, once I analyze for the variance, this variance analysis, what will it tell me? It could tell me two things. Number one, he has performed well, or number two, he has not met his target. He has not performed well, guys, correct? So if he has performed well, I will reward him. If he has not performed well, I will take corrective action. Is that clear? So based on the variance analysis, I will either reward or take corrective action. Are you all able to understand? Are you all able to understand? And this is the process which we carry out in this particular chapter called as standard costing. Are you all able to understand? Is there any issue here? Guys, are you all able to understand? So based on the budget, targets are set. Once targets are set, now I give the employees the authority to perform, and once they perform at the end of the period, I evaluate the performance by comparing the target versus the actuals. And once I compare this, I analyze for the variance. So the variance could be good or it could be bad. If it is good, I reward. If it is bad, I take a corrective action. Corrective action means what? I could suspend them, or maybe give a bonus cut. Could be anything. Is that clear? Or change them to another department because they are not performing well. Anything at all. Clear with this, guys? This way it helps me achieve control in an organization. Control means what? I am able to have a significant say over the affairs of the company. I know where my company is going towards, guys, correct? The management is able to have complete control over the affairs. Are you all able to understand this, guys? Right? So all these things we do by conducting this variance analysis, guys, correct? This chapter hence is also known as variance analysis. Standard costing is also known as variance analysis. Are you all able to understand this? This chapter is also known as what? Variance analysis. Are you all able to understand this? Guys, any issues here? Any problem here till now? Are you all able to understand? Guys, clear with this? This is the big picture of this chapter. Now, let's go further. Let's go further. Now, sir, what exactly is the structuring of this particular chapter? A very important discussion. Catch up running notes. Guys, this structuring, once again I'm telling you honestly, you will not find it the way in which I'm putting it across. It will be there in a different language. This structuring is very important for you to know what you are going to study in your intermediate, what you will be studying in your final and all. And once you are aware of this, we can proceed into the chapter. Now, guys, I told you at the beginning of every period, the company prepares a budget. Am I right? In the budget, what will they prepare? The budgeted sales. They will also prepare the budgeted costs, guys, correct? Budgeted sales minus budgeted costs will give you what? Budgeted profit, guys, correct? So at the beginning of the period, I will have something called as a budgeted profit. Am I right, guys? Guys, correct? Yes. Now based on this, targets are set, authority is given. Now during the course of the period, the employees and the company, the organization, it functions normally. Now at the end, what happens? I get my actual figure. So actual sales minus actual costs. This will give me what? The actual profit. Am I right, guys? Guys, are you all able to understand this? Now, you guys tell me, will the budgeted profit and the actual profit be exactly the same? Guys, will the amount I budgeted to earn and the amount I actually earned, will it be the same? Most of the cases, no. How can you exactly predict? Guys, correct? So there will be a difference between my budgeted profit and my actual profit. Am I right, guys? Right? This difference is called as profit variance. What is it called as? Profit variance. Are you all able to understand? Variance means what? Difference. Guys, are you all able to get this? Variance means what? Difference. Now, there is one thing that I want to tell you all at the beginning. Variance can be of two types. Now, for example, I will tell you. Let us say budgeted profit, actual profit, variance. Example, I am telling you. Let us say I budgeted to earn a profit of 80 crores. Guys, correct? But actual profit is how much, guys? 100 crores. Now, you tell me how much is the variance? The profit variance, how much is it? 20 crores. Now, if I just mention 20 crores, now you will not know whether, sir, there is a difference. Is it a good difference or a bad difference? You guys tell me, is this a good difference or a bad difference? I budgeted to earn only 80, but I actually earned 100. This variance is good for me. Guys, correct? Hence, we call it as a favorable variance. So what we do, the moment we write variance, immediately we will write whether it is F or A. F stands for a variance which is favorable. A stands for variance which is adverse. Favorable variance means what, sir? Any variance which has the impact of increasing your profit is called as a favorable variance. Many students mug this up. Sir, difference positive means F, negative means A. No, never do that. Any variance which has the impact of increasing the profit is called as a favorable variance. If the variance has an impact of reducing the profit, it's called as an adverse variance. Is this clear, guys? Now, in this case, I planned to earn only 80, but I've actually ended up earning 100. In this case, what happens? 20 crore is a good favorable variance. Why? It had an impact of increasing my profit. Are you all able to understand? So if I just mention the variance at 20 crore and leave it, it will be of no use. I should know whether this variance is favorable or adverse. Favorable means what? It has an impact of increasing my profit. Adverse means what? It has an impact of reducing my profit. On the other hand, guys, let us say I budgeted to earn 80 crores. But the actual profit was, let us say, only 70 crores. In this case, how much is the variance? 10 crores. Now, immediately I will say adverse. If you just say 10 crores and leave, it makes no sense. Are you all able to understand? So, here there is a 10 crore, but dip in the profit means what? As compared to what I should have earned, I have actually earned something less. Since it has an impact of reducing my profit, I call it as an adverse variance. Is everyone able to understand the terminologies? These terminologies are a must in this chapter. F stands for favorable, A stands for adverse. When to use what, you guys know that. Is that clear, guys? Right. Now, at the beginning of the period, we arrive at the budgeted profit. At the end of the period, we have the actual profit. Now we compare in the standard costing in this chapter. What we do basically is that now we compare the budgeted profit with the actual profit. Now there will be a difference between my budget and actual profit. This is known as a profit variance. Now, guys, you tell me, why will I have a profit variance? Or in other words, why will my budgeted profit be different from my actual profit? Now, this could be because of two reasons. One could be because of the differences or the variances happening on the sales side. Guys, correct? The other one is the differences or the variances happening on the cost side. Correct? No? Right? So, profit is a function of what? Sales and cost. So, there could be differences in the sales side as well as there could be differences in the cost side, and both of this collectively results in the difference in my overall profit. Are you all able to understand? Now, if I just go to my managing director and say, sir, difference between budget profit and actual profit is so and so. Now, he'll say, why? He'll ask me the next question. No. So, every company wants to know where they have gone right or where they have gone wrong. Am I right? No. So, profit variance is classified into what? Into two. What are these two components of profit variance? One is your sales variances. What is it? Sales variances. The other one is your cost variances. So variances happening on the sales side is known as sales variances. Variances happening on the cost side is known as cost variances. Is that clear? Now further, your cost variances are further classified into 4. Now guys, when I say, sir, cost side is how much variance, I should know which cost. Guys, correct? Are you all able to understand? So cost side variances are further classified into 4. What are they? So that is the learning objective of this particular chapter. Material cost variances, labor cost variances, variable overhead cost variances, and fixed overhead cost variances. Is that clear? So cost is further broken up into material, labor, variable overhead, fixed overheads. Sir, in my material cost, what is the cost you should have incurred? Compare that with what is the cost you have incurred. Similarly, labor, how much you should have incurred, how much you have incurred. Variable overhead, how much you should have incurred, how much you have incurred. Fixed overheads, how much you should have incurred, how much you have incurred. Now break it down further and tell me component wise how much is the variance. Is that clear? This way we will clearly know which team is responsible to the extent of how much to this particular profit variance. Are you all able to understand? Any issues here? Any problem here? No. Overall, guys, to sum it up, so the company at the beginning, before the start of the year, they prepare budgeted profit. At the end, they arrive at the actual profit. The difference between the two is called as a profit variance. Guys, correct? Now, we need to find out why is there a variance in my profit. It could be a favorable or it could be adverse, guys. Now the variance in profit could be because of 2 reasons. One is the variance is happening on the sales side, and the other one is the variance is happening on the cost side. Further, cost side variances are classified into 4: material cost variances, labor cost variances, variable overhead cost variances, and fixed overhead cost variances. So what the company does is they break it down like this. Component wise, they arrive at the variances, and now at the end of the period, what they do, they stay starting point, budgeted profit, add or minus all these variances, they will arrive at the actual profit. This is called as reconciliation statement. They reconcile and find out the reasons for the difference between the budgeted profit and the actual profit. Is that clear, guys? So overall, what does standard costing involve? Preparing sales side variances, cost side component wise variances, and then reconciling your budgeted profit with your actual profit. Guys, correct? This is the scope of this chapter. However, at the CA intermediate level, it's very, very simple. Institute says in your syllabus, you just have to compute these 4 variances. What are they? Material cost variances, labor cost variances, variable overhead cost variance, fixed overhead cost variance. You do not have sales variances. You also do not have this reconciliation statement. All you need to do is directly compute these 4 variances. That's all is the scope of your syllabus at the intermediate level. Are you all able to understand? Sir, then the balance you will be seeing in your CA final. Is that clear? Self-paced online modules, it is there. Are you all able to understand overall what is the scope and objective of this particular chapter? It helps us achieve control. How? By carrying out variance analysis. And what do we do? How do we do it? Is what I have given you guys a broad overview of this particular chapter. Is that clear, guys? Is everyone able to understand? So tomorrow if someone comes back and asks you, now what is this chapter? Why are we doing? You should know the reason why we are doing it, and you should also know this is only there in your syllabus. What you study is not full standard costing. The balance are there in your CA final. Now, if you are also doing CMA, let me tell you, in CMA, there are 2 groups. So in group 1, you have a paper called cost accounting. That is your paper 8. Group 2, you have a paper called management accounting, paper 12. Cost accounting, you have only these 2, material, labor variances. And management accounting, literally you have the entire chapter, including all the cost side variances, sales variances, and basic reconciliation statement is also there in your CMA intermediate paper 12 management accounting. Just in case you are also doing CMA, so I wanted to give you guys this food for thought. Clear with this, guys? At the CA intermediate, we are only focused on these 4 variances. Are we clear here? Any issues? Any doubt here? No. Always remember, guys, when we are writing down the variance anywhere, this variance should be suffixed. Suffixed means what? After the variance, you should write whether it is favorable or it is adverse. Is that clear? Now, for example, all the cost variances, right? We arrive at the targeted cost. This is the cost you should have incurred. And we compare this with the actual cost incurred. Guys, correct? If the actual cost incurred is less than the targeted cost, we call it as, logically think, if I have incurred a cost less than what I was supposed to incur, we call it as favorable. It's good to know I have incurred less cost than what I was supposed to. In that case, my profit will increase because cost is reduced. But if I have incurred more cost than what I was supposed to, we call it as adverse. Why? Now the cost is increasing, so profit will reduce. Remember, any variance which has the impact of increasing the profit is a favorable variance, and if it reduces the profit, it is an adverse variance. Is that clear, guys? Have this in your mind. Suppose if it was a sales variance, it is exactly the opposite. Targeted sale was only 10 crore. But I actually made 11 crore. Actuals is more than the target. It means it is favorable. Whereas here, you are supposed to incur 10 crore rupees of material cost, but you have incurred 12 crore rupees. Here you have incurred 2 crore rupees more. It is an adverse variance. This is the reason why I said don't mug up. If it is positive means favorable, negative means adverse. No. The signs will change depending on whether you're doing a cost side or a sales side variance. Though sales side is not applicable at the intermediate level, but I want to tell you guys, this is the way to learn this chapter. Is that clear, guys? Now, sir, that's all of 4 variants. It's not like that. Under material, there are further many other variances and all we will be seeing. Don't worry about that. Is that clear? Is everyone able to understand? Perfect. Now, that's about the brief introduction to this particular chapter. Now, before we move on to the first material variances, there is one very important component that you need to learn, and only after learning this we can proceed to the next area. Shall we get started? Yes, please catch up running notes here. I call this segment as understanding standard cost. Understanding standard cost. Guys, a very important discussion. If you miss this out, then the chapter is gone. So please focus here. Now, shall we begin? Hello? Yes. Now, guys, let us say I have a budgeted data. Let us say I budgeted to incur a cost of 1 lakh rupees. Okay, everybody focus here. I budgeted to incur a cost of how much? 1 lakh. Actually, what has happened? I incurred a cost of only 96,000. Now, you guys tell me, everyone just focus here. I budgeted to incur how much? 1 lakh. Actually incurred how much? 96. Now you tell me, do I have a favorable variance or an adverse variance? Do I have a favorable or adverse? Favorable. Sir, what is the question, sir? You have done good. Something which if you have done good, it's a favorable variance. You were supposed to incur 1 lakh. You have only incurred 96. You have saved how much? 4,000. Sir, 4,000 rupees favorable variance. Because reduction in cost means increase in profit. Guys, correct? Now, let me tell you one more data, which I forgot to inform you. Forgot means deliberately for me to build this, this concept. Now, let us say I budgeted to incur this cost of 1 lakh to produce 10,000 units. Is that clear? Is that clear? Whereas I actually incurred 96,000 rupees to produce, let us say, 8,000 units. To produce 8,000 units. Now, guys, forget everything. First of all, you tell me, does it make sense to compare 1 lakh rupees of cost with 96,000 rupees? No. Why? Now, 1 lakh rupees is the cost pertaining to a different output level, whereas 96,000 is my actual performance for an actual output of 8,000. First of all, understand this in your mind like anything. Budgets cannot be compared with actuals. Are you all able to understand? Why? Budget is pertaining to a different output level. Actual is pertaining to a different output level. Is that clear, guys? Is that clear? Is everyone able to understand this? Is everyone able to understand this? Yes. Sir, then How will we do it? Simple, guys, logical. Now, how many units have I actually produced? 8,000. For producing 8,000 units, what is the cost you have incurred? 96. This is actual. This can't be changed. Now, with what should I compare this 96,000? Now I should find out. For producing 88,000 units, what is the cost I should have incurred? Guys, correct? So, for the actual output, how much should have been my cost? I need to arrive at that figure, and only that can be compared with 96. Am I right, guys? Am I right? How will I do that? Simple. Now, in this case, we have, this is the total cost, or I can either say budgeted cost. Guys, this is the budgeted cost for 1 lakh rupees, correct? For a budgeted output of 10,000. Now, what is the budgeted cost per unit? Simple. Based on the budget, I can arrive per unit. What is the cost you are supposed to spend? I can understand the intention using the budget. Am I right, guys? Now, budgeted cost per unit. When you are arriving at the per unit data, we don't call it as budgeted cost per unit. We popularly call it as standard cost per unit. Clear with this, guys? The standard cost per unit. How much is the standard cost per unit? Means what? Per unit, you are supposed to spend how much? 1 lakh divided by 10,000. How much is it? Rupees 10 per unit. Is that clear, guys? Is everyone able to understand? Now, what do I do? Simple. Every unit you are supposed to spend how much? 10. You have actually produced how many units? 8,000. So, for the actual output, what is the cost you should have spent? Can I say this is nothing but, look, you should have spent 10 rupees per unit. You have actually produced 8,000 units. So, overall, you are supposed to spend how much? A total of 80,000 rupees. Is that clear? And this is called as standard cost. Are you all able to understand? Or in other words, can I say standard cost is nothing but standard cost per unit into actual output. Am I right, guys? Guys, correct? And mark my words, in this chapter, the hero is your actual output. Why? All the calculations are based out of actual output. Why? Actual output gives you the actual figure. This actual figure can be compared with what? Your standard figure. Not with budget. Standard means what? For the actual output, what is the cost I should have incurred? Guys, clear with this, guys? Are you all able to understand? Hence, all our calculations are based on the actual output. This is the hero of the chapter. Only if you know the actual output, you can do the other calculation. Is that clear, guys? Is that clear? So, standard cost now can be compared with actual cost. Correct? This is nothing but cost allowed. This is nothing but cost incurred. Now you tell me this guy has performed well. You said 4,000 favorable. So 1 lakh you could have incurred. You have incurred only 96. Good boy, sir. Now, is he a good boy? He should have spent only 80,000 rupees. He has produced only 8,000. No. For 8,000 units, you should have spent only 80,000. But how much has he spent? 96. Which means 16,000 rupees he has spent more. It is adverse. Now you guys are able to understand? Yes. Hence, we do not compare budget with actual. We only compare standard with actual. And hence the name of this chapter, standard costing. Is this clear, guys? Now, we don't call this chapter budget costing. We call it as what? Standard costing. Is this clear? Is everyone able to understand? Why can't we compare budget with actual? Budget is pertaining to a different output level. Actual is pertaining to different output level. We can't do that. Hence, what do we do? For the actual output, what is the cost I should have incurred should only be compared with the cost I have actually incurred. And this is called as standard cost. Is everyone able to understand this? Isn't this logical, guys? Isn't this logical? Is everyone able to understand? Guys, everyone able to get this? Yes, clear with this? Clear with this? Yes. Now you might have one doubt you guys didn't have. Sir, I am comparing budget profit with actual profit. Overall, the objective of this chapter, budget profit is reconciled with actual profit. But sir, you said while comparing all this cost and all, sir, you are saying that standard should be compared with the actual. But you are saying budget should not be compared with actual. Then how can we do the reconciliation? Don't worry, it is a subject matter of discussion in your final. where we'll be seeing this is taken care of by a variance called sales margin variance and all. What it is a subject matter of discussion in your final. You do not worry about that right now. At the CA intermediate level, all you need to be focused on is that budget cannot be compared with actual, only standard can be compared with actual. What do you mean by standard? For the actual output, the cost I should have incurred, that is the cost allowed, is called as a standard. Is everyone able to get this? The funda of this chapter. Without this, that's about it. The chapter cannot be done. This is the entry point into this chapter. Is everyone able to get this? Guys, is everyone able to understand? Yes. Now, one more thing I want to tell you. One more thing I want to tell you, guys, very important. The concept of standard is not just applicable only on cost. For example, sir, what do you mean by this? For example, guys, instead of this rupees, let us say I budgeted to consume 1 lakh kgs of raw material to produce how many units? 10,000 units, which means per unit, how many kgs I am allowed to consume? 10 kgs. Whereas I actually consumed 96,000 kgs to produce how many units? 8,000. Now, 1 lakh I can't compare with 96,000. What I will do? Per unit, I am allowed to consume 10 kgs. While for producing 8,000 units, I am allowed to consume a total of 80,000 kgs. So 80,000 kgs is what I should have consumed, but I've actually consumed 96,000 kgs, which means my production manager has consumed 60,000 kgs more than what he was supposed to consume. Guys, correct? Or in other words, this concept of standard can also be applied on kgs. It can also be applied on hours. Are you all able to understand? The concept of standard is not just applicable on cost. You can say standard hours. You can say standard quantity of kgs. Are you all able to understand? It depends on where you are operating this particular concept of standard costing. Is that clear with this, guys? Is everyone able to understand? So here, the concept of standard is not applicable only on cost. You can say it is standard hours. Let us say this is, you are supposed to spend 1 lakh hours to produce 10,000 units, which means per unit, you are supposed to spend 10 hours. To produce 8,000 units, you could have spent 80,000 labor hours as a whole. But you have actually spent 96,000 labor hours, which means you have spent 16,000 labor hours more. Once again, in this case, we computed the standard hours or standard kgs or standard cost itself. Is that clear, guys? Or in other words, guys, understand the concept of standard can be applied on anything. It could be applied on kgs, or even if you're computing labor material. For labor, it is standard hours. Or if you want to put it in a figure, you call it a standard cost. Is that clear, guys? Is everyone able to understand this concept of standard? This is a very, very important thing. Now you guys understood? Perfect. Now with this background, let's get started with this beautiful chapter called standard costing. Let's get started, guys, with this beautiful chapter, standard costing. Write down. Number 1, material cost variances. Material cost variances. Please write this down. Are we done? Yes? Okay. Good. Write down. In the center, write down material cost variance. MCV, material cost variance. Write down standard quantity into standard price minus actual quantity into actual price. I am using all short forms acceptable in exam. Just write this down. Guys, quickly make a note of it. Branch it into 2. One is called as material price variance. Write down material price variance, popularly known as MPV. The other one is known as material usage variance, popularly known as MUV. Formula: price variance, standard price minus actual price into actual quantity. And on the other side, material usage variance, standard quantity minus actual quantity into standard price. You might not understand a thing I am yet to explain. I'm just asking you guys to write it down. Quickly do it. Now, this material usage variance is further classified into two. It is further classified into two. What and what? Yes, one is called as material mix variance. Material mix variance, MMV. The other one is called as material yield variance, MYV. Material mix variance formula: RAQ stands for revised actual quantity minus actual quantity into standard price, and on the other side you have standard quantity minus revised actual quantity to standard price. Are we done here? Are we done? Hello? Quickly write it down. Where SQ stands for standard quantity for actual output. SP stands for standard price. AQ stands for actual quantity. AP stands for actual price. And one more thing, RAQ stands for revised actual quantity. Quickly write this down. You might not understand a word of it, but it's still okay. Quickly write this down. And with this, material cost variances is over. Now, once we master the first variance, which is material variances, trust me, pinky promise. Second, labor variance, over. Third, variable overhead, over. That's all. So we have four different variances now. Fixed overheads is there apart from this. So 3/4 of the chapter will be over once you understand and master this material related variances. And it's very simple, trust me. Quickly write down. Are we done? One, quickly write it down. Then let's proceed. Okay, shall we begin, guys? Okay. Sir, what is all these things are? Now, forget whatever we have seen till now. Now, I will explain you logically. It's a very, very easy and an interesting chapter. And trust me, guys, my commitment to you, you will be able to tell all these formulas by yourself. Right? Promise, I'm telling you. Okay? For that, all I need from your side is full focus, catch up running notes. That's about it. Now, guys, let us say I have, first of all, which segment are we in? Which segment are we in? Material cost variances means what? We are comparing what is the material cost you should have incurred with what is the material cost you have actually incurred, or in other words, we are talking exclusively about our material cost alone. Forget about other components. That in the respective segment we will see. We are only focused on material related variance. Clear with this? Yes. Now, let us say, guys, let us say, for example, I have actually produced, example, I am telling you, I have actually produced 1 unit. Example, just an example. I've actually produced what? 1 unit. Remember, we standards calculation is for the actual output, guys, correct? Because actual performance is for actual output. Standard means what? For the actual output, what is the cost you should have spent? What is the kgs you should have, consumed and all that? Is that clear? Okay. Now, let us say, guys, to produce 1 unit of FG, I am allowed to consume 10 kgs of raw material, which means, can I say, standard quantity is equal to 10 kgs. Am I right or wrong? Everyone, correct? Now, let us say every kg of raw material I should have purchased by paying 2 rupees per kg. So, can I say the standard price means what? The purchase manager should have paid how much? 2 rupees per kg. Am I right, guys? So, rupees 2 per kg. I call it as what? Standard price. Agreeing with me? Whereas, what has happened? Actual quantity was, let us say, 12 kgs. Means what? What happened actually? To produce this 1 unit, I actually consumed 12 kgs. And actual price, let us say, for example, so let us say, for example, 1 second. Okay. Let us say, for example, the actual price was 1.5 rupees per kg. Is that clear, guys? Is that clear? Now, first of all, now, in material variances, what do we compare? The standard material cost means what? The material cost I should have incurred should be compared with the actual material cost. That is the material cost I've actually incurred. Now, can anyone tell me what is the total material cost I should have incurred to produce 1 unit of FG? How much is it? For every unit, I should have consumed 10 kgs, and for every kg, I should have consumed 2 rupees. Or in other words, can I say the standard material cost means the material cost I should have incurred is nothing but standard quantity into standard price. Am I right, guys? That is, to produce 1 unit, you should have consumed 10 kg, and every kg you should have purchased at 2 rupees. Am I right, guys? So how much is this coming out to? You should have incurred 20 rupees of material cost to produce every unit. Am I right, guys? Whereas, what is the actual material cost I incurred? Can I say it's nothing but actual quantity into actual price? Am I right, guys? Hello, everybody, right? Which means, sir, to produce 1 unit, I actually consumed 12 kgs, and every kg I ended up purchasing at the rate of rupees 1.5. So, what is the actual material cost you incurred? So, you incurred 18 rupees. Is that clear? Now, guys, focus here. Now, you were supposed to incur a material cost of, everyone, 20. You have actually incurred only 18. In this case, material cost variance, how much is it? 2 rupees. Don't stop there. Favorable or adverse? You have incurred less, no, it's good. It's a favorable variance. Am I right? So, write down 2 rupees favorable. Is that clear? Guys, is that clear? Now, what happens? I prepared this material cost variance. This is called as material cost variance. Am I right, guys? Now, I prepared this 2 rupees favorable. I went to my managing director and I told him, sir, material cost variance is 2 rupees. Now, the next question he'll ask me is, okay, very good. We have saved 2 rupees on the material side. The next question he will ask is, who is responsible for that? Correct? No? Guys, correct or not? Yes? Now, guys, for this reason, now, if you see, material cost is made up of 2 components. One is the quantity, the other one is the price. Guys, correct? Hence, I bifurcate this material cost variance into two. One is called as material price variance. The other one is called as material usage variance. Is that clear? Now, price, guys, price. Who is responsible for the price? Can you tell me? In an organization, material price, purchase price, who is responsible? Answer no. We have seen detailed material procurement procedure. I told you that story and all. You guys remember? P4, LIFO, issues valuation. Before that, I told you how it starts. Bin card, store ledger. Before that, I told you one detailed story. Guys, correct? Huh? Who is responsible for price? No, stores manager is not responsible for price. Purchase manager. He is the guy who deals with the suppliers. Am I right? Now, purchase manager is responsible for what? Price. He is responsible for price. So, here I will say standard price minus actual price into actual quantity. Wait, I will tell you the logic for that. But first, let us write down. Every unit, every kg, I should have purchased by paying how much? Everybody. Answer. No, please answer, guys. What are you doing? Answer. Every kg should have been purchased by paying 2 rupees. But actually, I paid 1.5. So, write down here 2 standard price minus I actually paid only 1.5 into what is the actual quantity I consumed? 12 kgs. Now, 1 second. Now, guys, this material price variance is the responsibility of whom I told you? Purchase manager. Purchase manager is responsible for the price. Hence, within the bracket, whatever is his responsibility will come in. What is that? Standard price minus actual price. Now, the question is, sir, why are you multiplying this with actual quantity? Now, guys, who decides on the quantity of purchase? The stores manager. Or basically, it's not the stores manager. From him, who asks him to purchase? The production manager. Guys, correct. Or in other words, the production manager asked me to purchase how many kgs? 12 kgs. Actual. On every kg I purchased, I was responsible for the price. Are you all able to understand this? Guys, are you all able to understand this? For every single kg I was asked to purchase, I should have purchased it at 2 rupees. But I purchased it at 1.5. Is that clear, guys? So I am responsible for the price difference on every single kg that I was asked to purchase. Who asked me to purchase? The production manager. Is that clear, guys? Hence, I am dependent on the production manager for the quantity, whereas I am responsible only for the price. Is that clear, guys? I am segregating and saying, look, I want to pin it on person and say, look, you are responsible to this extent, you are responsible to this extent. Are you all able to understand this? Yes. So on every kg he was asked to purchase, that's why actual quantity. On that, I am responsible for the price difference. Are you clear with this? Now you tell me, I should have paid 2. I paid only 1.5. Favorable or adverse? Think and answer. Simple logic. You paid less. It's good for the company. Guys, clear with this. You saved how much? 0.5 rupees on each of the 12 kgs you purchased. So how much is it? 6 favorable. Guys, correct? So you saved 6 rupees for the company. Or in other words, because you saved profit increases by 6 rupees. Is that clear? Now, on the other hand, we have material usage variance. Who is responsible? Production manager. Now, guess. He is responsible for quantity. So, within bracket, what will come? Yes, that's all. Standard quantity minus actual quantity. Guys, correct? But this time, I will put into standard price. Why? I will tell you. Don't worry. Now, what is a standard quantity? Every unit you should have, for the actual production, you should have consumed 10 kgs. But you have consumed 12 kgs. What is the standard price? What is the standard price per kg? 2 rupees. So 10 you should have consumed. 12 you have consumed. You have consumed 2 kgs more into 2. How much is it? 4. Adverse or favorable? It is adverse. It is a bad variance, guys. Now, you might have a doubt. Sir, this we understood. What is this? Standard quantity minus actual quantity. What is the logic for that? Now, you should have consumed. You are responsible for quantity. Am I right, guys? Who is responsible for quantity? So, the production manager. Correct? The production manager is responsible for the quantity. Am I right? Now, sir, standard quantity. I should have consumed 10, but I have actually consumed 12. So I am responsible for quantity, no doubt. But sir, why are you multiplying this with standard price? Now guys, now we saw here purchase manager. Purchase manager. He was dependent on the production manager for the quantity. Am I right, guys? Hence, we multiply this with actual quantity. Correct or not? Whereas, the production manager is not dependent on purchase manager for anything. Are you all able to understand? If I still go ahead and put actual price here, I am passing on the efficiency or inefficiency of the purchase manager to the production manager. Is that clear? Hence what I do, no, I will not take actual price, I will only take the standard price. Why? Because I am not dependent on purchase manager for anything, and if I still take actual price here, I am passing on the efficiency or inefficiency of the purchase manager to the production manager. Are you all able to understand this? Now you guys are able to understand. So I am responsible only for the quantity. So here 2 kgs, sir, more I have consumed. Now I need to convert this into value, no? Now if I take actual price and multiply, I am passing on the efficiency or inefficiency of that fellow, which I can't do. Hence I multiply with standard price. Is everyone able to understand this? That's all it is, guys. That's all it is. Are you all able to get this? Is everyone able to understand this? And the most important thing is, now your material price variance plus your material usage variance should give you the total material cost variance. Is it tallying? 6 favorable, 4 adverse, net of you do, how much you get? 2 favorable. Is it matching? Guys, are you all able to get this? Are you all able to get this? Yes. So now what the company will do is, look, the purchase manager has been super efficient. He has saved 6 rupees for the company. Ideally, the overall variance should have been 6 favorable. But what happened? The production manager has been inefficient to the extent of 4 rupees is lost. That's why net off, I am only having a 2 rupees favorable variance. Are you all able to understand this? Guys, are you all able to understand? So now what will I do? Now this purchase manager, I will reward him, and this production manager, I will take actions, corrective actions, or I will punish him. Is this clear, guys? Now clearly I am able to segregate and find out who is good in my organization, who is not efficient in my organization, to what extent they are contributing towards my profit variance. Are you all able to understand? This helps achieve the objective of control. Is everyone able to get this, guys? Random? No, we are not doing some random calculations. Every single thing is logical here. Are you all able to understand this, guys? Is that clear? Now you guys tell me the formula. First, material cost variance. Standard quantity into standard price minus actual quantity into actual price. That's about it. Standard material cost minus actual material cost. So you just need 4 ingredients. Am I right? Standard quantity to standard price minus actual quantity into actual price. Bifurcated into 2. Material price variance. Responsibility. Purchase manager. So within bracket, price will come. Standard price minus actual price into actual quantity. Why? I am dependent on the production manager for the quantity decision. For every quantity he asks me to purchase, I am responsible for the price. Is that clear? On the other hand, material usage variance. Responsibility, production manager, within bracket, standard quantity. So standard quantity minus actual quantity into standard price. Why? I am not dependent on the other guy. If I take the actual price, his efficiency or inefficiency will be passed on to me. Are you all able to understand? As simple as that, guys. What is the big deal here? That's all it is. That's all it is. Is everyone able to understand this? This is all the chapter says. And guys, trust me. Next labor variance we are going to see now. There, instead of quantity, you will be having hours. Instead of price, you will be having rate. Everything else is same. Everything else is same. So you will have standard hours into standard rate minus actual hours into actual rate, bifurcated into material rate variance. Then material labor we will see efficiency variance, but the formulas are same. Wherever Q is there, put it with H hours. Wherever P is there, put it with R rate. That's all is the difference. Logic is the same. That's the reason I'm spending so much here. So much time here. Are you all able to understand? Once again, tell me the formula, everyone. Material cost variance formula. Standard quantity into standard price minus actual quantity into actual quantity to price will give you the amount, no? Standard quantity to standard price gives you standard cost. Actual quantity to actual price gives you the actual cost. Material cost. That's all. Bifurcated into 2. Don't look at me. Material price variance. First, responsibility. purchase manager. So within the bracket, what will come? Rate. So yes, standard price minus actual price into actual quantity. Why actual quantity? So the purchase manager is dependent on the production manager for quantity. Whatever quantity is asking me to purchase, I'm responsible for the price. Is that clear? Whereas the other side, material usage variance, responsibility, production manager. So within bracket, quantity will come. Yes, standard quantity minus actual quantity into standard price. Why standard price? Because the production manager is not dependent on the purchase manager. If I still go ahead and take actual price, then his efficiency or inefficiency will be wrongly passed on to me. I don't want that. Is that clear, guys? So clearly at the end, I can say, look, the purchase manager is attributable to the level extent of 6 favorable, whereas your production manager to the extent of 4 adverse. Are you all able to get this, guys? Is this clear? You tell me, is this difficult to understand? Is this difficult to understand? Very, very, very easy. Is that clear, guys? Are you all able to understand? Right? That's about this area. Now we saw material cost variance, right? Bifurcated into material price variance and usage variance. Is that clear, guys? Now, guys, 1 second. Now, in some cases, to produce a unit, I might need more than one type of raw material. Let us say A, B, and C. Guys, correct? Now, if I need more than one type of raw material to produce a single output, in that case, only in the case where I use more than one type of raw material, in that case, my material usage variance is further classified into two. What and what? Material mix variance and material yield variance. Is that clear? So, these two, when will it come? Only when I use more than one type of raw material to produce a product. Is that clear? Sir, how to do that and all? With the help of a sum at the respective point, we will see. Is that clear, guys? So, if a company deals only in one type of raw material, it stops here. If I have more than one type of raw material, then I will also further bifurcate usage into mix and yield variance. Once again, remember, mix plus yield should give me usage. Is that clear? And price variance plus usage variance should give me material cost variance. Are you understanding this? Is everyone able to understand? Right? Any issues here? Any problem here? Right? Now, sir, how to do this material mix and material yield variance at the appropriate time? We will see. Don't worry. Is this clear? Now, on this note, shall we get started with question number 1? Let's get started. Please take your solved question bank. Let's get started. Let's get started. Now, I don't want you guys to look at the question. Look at the solution. Please do not look. I want you guys to read the question carefully and answer it. Okay? Will you guys do that? Now, once again, I am telling you, the hero of the chapter is actual output. Don't say quantity. Output. Actual output. Quantity means quantity of raw material. Output means FG. We are talking about actual output. That is the base for you to compute all the standard figures. Is that clear? Guys, okay, will you do it correctly? Okay. Now, question number 1. A manufacturing concern furnishes the following information. What have they furnished? Standard. Now look at this. Standard material for 70 kgs finished product, 100 kgs. Once again, what is the meaning of this? No, what is the meaning of this? Standard material for 70 kg finished product is 100 kgs. Okay, let me read it fully and then you tell me. Standard, under standard they have given all this. Okay, under standard they have given all this. So, next, price of material 1 rupee per kg. Next, they have given what? Actual figures. First was standard. Actual figures is given. Actual output, how much is it? 2,10,000 kg, which means what? Output means FG. So here both FG as well as raw material are in kgs. Be careful. Material used 2,80,000. What is the meaning of this? What is this? What quantity? Have the confidence. That's all. This is the actual quantity of raw material consumed. Is that clear? Cost of materials is given. How much? 2,52,000. Means what? With this, what can I find out? Yes, actual price I can find out. How will I do? Sir, 2,52,000 is the actual cost for purchasing how many kgs? 2,80,000. Divide the two, you will get what? Actual price. Guys, correct? Now, you need to calculate usage, price, cost variance. 1 second, guys. For you to compute this, you only need 4 figures. What are the 4 figures? Standard quantity, standard price, actual quantity, actual price. Now, actual quantity of raw material given, correct? Actual price per kg of raw material, we can find out this by this, correct? Next, standard price per kg, this is also given here, 1. Now, standard quantity alone, if you compute this entire sum, you can do it. Correct, Alia? Yes or no? Now, I will give you 1 minute time. Try to figure it out. Logically think. Don't just, wait for me to do the answer. You attempt it first. Online folks, pause the video now. Attempt by yourself and then we will get started. Exactly 60 seconds time, and after that continue watching the lecture. Now guys, first of all, what have they given here? Material for 70 kgs finished product is 100 kg. What does it mean? What does it mean? Now, what have they mentioned here? Material for 70 kg FG is 100 kg. Means what? If the raw material is 100 kg, the FG output will be how much? 70 kg. This is the meaning. Read it carefully. Material for 70 kgs of FG, which means if my FG is 70 kg, the material will have to be 100 kg. Now, what is my actual output? 2,10,000. So, if I want an actual output of 2,10,000, how much should be my raw material input? This is the standard quantity. Simple. If 2,10,000, right? Oh, sorry. If I need to input 70, right? Sorry, if I need to input 100 to get 70, how much should I input for 2,10,000? Simple. 100 divided by 70 into 2,10,000. If you do, you get how much? 3 lakh kgs. So 3 lakh is going to be the standard quantity. Means what? The kgs of raw material I should input to get an actual output of 2,10,000. That's why I said here actual output is the hero of this chapter. Everything is based on that. So for me to get this, I should have inputted 3 lakh kgs. So standard quantity you got, standard price 1, actual quantity of raw material 2,80,000, and actual price. So this by this, if you do, you will get it. Is that clear? Are you all understanding? And now you got the four different parameters. Just go and plug and play. That's all. Is that clear? Let's do this, guys. Let's do this. A very, very simple thing. Conceptual clarity will take you heights, guys. It will certainly take you heights. Shall we do this? Write down question number 1. Write down first standard quantity. Standard quantity. So this is equal to, maybe you can take a red ink and do it. So how will you do it? Yes, come on, tell me. 100 divided by 70 into 2,10,000. Am I right, guys? Yes. So for me to get an output of 100, sorry, for me to get an output of 70, I need to input 100. Then which means for me to get an output of 2,10,000, how much should have been my input is what we are calculating right now. So how much is that? That's going to be 3 lakh kg. In most of the questions, calculating the standard quantity is the most important thing. That's where many students struggle. Next, standard price. How much is it? For every kg of raw material, what is the price? I'm supposed to incur 1 per kg. How did you know? Given. Next one. Actual quantity means what? Actual quantity means not output. Correct. Consumed. That is actual kgs of raw material. How much is that? 2,80,000 is what I actually consumed. So, yes, very good. Within bracket, given. Every figure, write down how you got it. Next one, actual price. This is not given. This needs to be computed. How do you do it? Simple. I incur a total of 252,000. For how many kgs, guys? 2,80,000, which means per kg, what is going to be my cost? 252 by 280 is going to be 0.9 per kg. Is that clear, guys? Are you all able to understand? So now what do we do? Yes, come on. Shall we do it? Everybody tell and write. Sir, how do we do it, sir? Can we put it in a branch format? Absolutely, yes. In exam also, you can follow the branch format. Is that clear? Write down. Write down. First one. Material cost variance. Formula. Yes. So, standard quantity into standard price minus actual quantity into actual price. Guys, tell and write in the classroom itself. It will be in your memory. That's about it, right? So standard quantity, plug and play. 3 lakh kgs into rupees 1 minus what is the actual quantity? Yes, 2,80,000. Yes, 2,80,000 kgs into rupees 0.9. Is that clear, guys? Any issues, any problem here? No. So now please don't take your calculator. 3 lakh into 1 is 3 lakh, right? And 2 lakh 80 into 0.9, that also you need not take calculator, given in the question. This is how we arrived, no? 2 lakh 52,000. Guys, correct? This 0.9, how did we arrive? 252 by 280 only, no? Hello, guys, correct? That's all it is. How much is that? No. This is 2 lakh 52. Yes, 2 lakh 52,000. Are you all able to get this? Yes, 2 lakh 52,000. So now, how much is the difference? You should have incurred 3 lakh. You have incurred 252. How much is that? 48,000. Monkey or donkey? Favorable. You have saved some money for the company. Very good. So now what do? Branch it into two. What and what? Material price variance, material usage variance. Price variance responsible purchase manager. So formula within brackets, standard price minus actual price into but actual quantity. Very good, very good. On the other side, usage variance responsibility production manager within bracket, standard quantity minus actual quantity into standard price. Why? I am not responsible. I mean, I am not dependent on the purchase manager. If I take the actual price, then his efficiency or inefficiency is wrongfully passed on to me. Come on, guys, tell me. Standard price 1, actual price minus 0.9, the whole into 2,80,000 kgs. Am I right? So I actually consumed 2,80,000, and on every kg I saved how much? 0.1 rupees. So overall I get how much? 28,000. Favorable, adverse? Absolutely favorable. So, sir, why has he been able to save? Because this shows that he has good negotiation skills. Are you all able to understand? That's the best he can do, no? He has good negotiation skill. He has actually saved some money for the company. So saving in amount will increase the profit, am I right? And how about your material usage variance? Standard quantity, how many kgs you should have consumed, guys? You should have consumed 3 lakhs. However, you consumed 2,80,000 into standard price 1 rupee. So how much is that? So you have consumed 20,000 kgs less. Am I right? Into 1. That gives you 20,000. Favorable or adverse? Once again favorable. So now, guys, now material price variance plus material usage variance should give your daddy. These are two kids. On top you have daddy. Am I right? Daddy or mummy, whichever you like. Okay. So guys, this is what it is. Are you all able to understand? Right? So if you add these two, you will get the top figure, daddy figure. Is that clear, guys? Is everyone able to understand? As simple as that. What is the big deal? There are so many students mugging this up. Now you know there are some students, what they do. Now some people, some faculties, they teach it like this. With all due respect, somehow I don't like this. They say prepare first table number 1. They will say SQ into AQ, whatever it is, AP. Then table number 2, AP into PP, whatever it is. They will just ask you to multiply. Then they will say, first variance is table column number 2 minus column number 1. This variance is column number 5 minus column number 6. Somehow I don't like that. With all due respect, I am not saying any method is good or bad. I am just saying, in my opinion, I definitely, because when I was a student, I was also taught the subject like that. I somehow could never accept this y2 minus 1 5 minus 4, which column number randomly you are doing. There is no logic also. I don't understand. Then it took time for me to figure out the reason. right? Because at the intermediate level itself, I couldn't accept. I was struggling in standard costing because I was taught like that. What I did, I referred some. That's when I referred on the internet and all these things. Now, back then, Chat GPT and all was not there. It came very recently, so AI tools were not there. But that's when I got to know about this Colin Drury book and all, where I read a few things, and that's how I was convinced. Okay, this is the logic for that. So a lot of research has gone behind it. That's why I'm giving you guys right away the logic here itself. Don't take the pain of mugging up or remembering things. Now, if someone wakes you up in the midnight, will you be able to answer? That's all it takes, guys. That's all it takes. Is that clear, guys? Don't mug up directly. Whenever what you need for you to arrive this, you just need 4 figures. Standard quantity, standard price, actual quantity, actual price. First, find out these 4. Arrive at the figures. That's what we did. Correct? Next, what do you do? Put this chart, right? Write the formulas, plug and play. That's about it. Final, do one check. MCV should be equal to material price plus material usage. That's about it. Are you all able to get this? Is there any issue here? Is there any issue here? And that's about this particular question. Please go and update your library of adjustments. Write down. Material cost variances, MCV hyphen single raw material type. Single raw material type within bracket MPV and MUV. Within bracket MPV and MUV. Are we done? Perfect, guys. So that's about this particular question. So with this, I am concluding this session. Please revise and practice whatever we have covered till now, and I will see you all in the next one. Thank you all so much. Bye-bye. Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now, let's continue our discussion in this chapter, standard costing. So in the previous session, we got started with this chapter, standard costing. So we saw the background, the introduction, and we also started off with the first segment called as material cost variances, where we saw the concepts and we did the first question. Right, guys? Yes. Now, if you recall the discussion, I also told you one more thing. Now, if a particular company uses more than one type of raw material to produce an output FG, in that case, further, this material usage variance is bifurcated into material mix variance and material yield variance as well. So over and above the normal variances, you have further 2 variances. What are they? How to do that? In case of more than one type of raw material, how do we compute the variances, and all these things is what we are going to see in this next question number 2. Shall we begin, guys? Yes. So let's get started. Okay, this is volume 1. Okay, volume 2. Yes. So let's get started. Shall we, guys? Yes. Now, question number 2. Now, read this question carefully. The standard cost of a chemical mixture is as follows. By the way, this was a past exam 10-mark question. Sir, what, sir? 7 neat lines only are there. 10-mark past exam question. Now, mark this sum as important, extremely important, a very good sum. Now, the standard cost of a chemical mixture is as follows. 40% material A at the rate of rupees 20 per kg, 60% material B at the rate of 30 per kg. A standard loss of 10% of the input is expected in production. The cost records for a period showed the following usage. 90 kgs of A at the cost of 18 per kg, 110 kgs of B at a cost of 34 rupees per kg. The quantity produced was 182 kgs of a good product. Calculate all material variances. That's all. Now, I want you all to understand one thing. In the question, they will misguide you. In some questions, instead of using the word budget, they will use the word standard. But ideally, it represents budget only. How do you know? Simple. If it means standards, it means what? For the actual output, what is the kgs you should have consumed? Guys, correct. Suppose if they give standard and if they give some random figure for a different output level, it means ideally they are referring to budget only. So the moment they give a standard and all, don't blindly take that and start doing the question. No, standard means what? For the actual output, how many kgs of A, how many kgs of B I should have consumed. That is the meaning, guys. Are you all able to understand? Now in this question, I have two types of raw material, A and B. Correct? Now forget that, that exclusive thing we saw, no? Usage variance is further classified into material mix, material yield, that you forget. For you to compute basic variances, 4 figures are required. What are they? Standard quantity, standard price, actual quantity, actual price. Now, material cost variance is going to be simple. Material cost variance of A plus material cost variance of B will give you the total material cost variance. Guys, correct? Are you all able to understand? Which means standard quantity to standard price minus actual quantity to actual price of A. Similarly, standard quantity into standard price minus actual quantity into actual price of B will give you MCV. Bifurcated into 2. Price variance, usage variance. Material wise, you do all the variances, total it. You will get the respective totals. For example, price variance, material price variance, MPV, compute for A, compute for B, add it up. You get the total material price variance. Is that clear, guys? That's all. No extra thing. Are you clear with this? So basically, you need 4 ingredients. So raw material wise, you need what? Standard quantity, standard price, actual quantity, actual price. Now, actual quantity A used was given a 90. Actual quantity of B given 110. Actual price A 18. Actual price B 34. So actual quantity, actual price of both the raw materials available or not? Yes. Similarly, standard price of A available. Standard price of B is also available. SP is also there. Now, once again, what you need to compute? Standard quantity. What do you mean by standard quantity? For the actual production, how many kgs of A, how many kgs of B I should have consumed? Guys, correct? What is the actual production in this question? Yes, very good. They have given 182 kgs. Means what? For 182 kgs of output, how many kgs of A, how many kgs of B I should have consumed? This is the meaning. Now, can anyone try to compute? Read the question fully. They have given standard losses 10% of input. Out of the total input, 40% should come from A, 60% should come from B, and all they have asked. Now, take a minute time. Try to compute this standard quantity. If you are able to crack that, hats off to you. That's about it. Remaining, plug and play. That's all. We will move to the core of this particular question, which is your mix and yield variance and all that we will see later. First, standard quantity alone, if you are able to do. Don't look at the solution. Try to attempt it. 1 minute, 60 seconds time. Online folks, pause the video now, attempt it by yourself, and then continue watching the lecture. Now, guys, let's do this question. A very, very good question. Now, just listen. We will do it together. Don't worry. Just listen. We will do it together. Now, guys, this is question number 2, right? Now, 1 second, guys, please look at this. I have raw material A, raw material B. If I add A and B, I get the total input. Am I right? Now, on this, I have a normal loss. If I subtract that, I will get my output. Am I right? Now, let us say overall I have inputted 100 kg. What is the standard loss given? No, normal loss, which means I know I will lose 10, right? No, effectively I will get 90. Am I right? And that too they have given overall input 100. Now, where do you get this 100 from? 40% of the total input. 40 will come from A, 60 will come from B. This is how ideally it will be. Am I right, guys? This is not standard. Standard means on the actual. No. I am just saying this is how generally it will be. Are you all able to understand? If my total input was 100, I will lose 10. Output will be 90. Remember one thing. I am losing 10, no? I am losing 10 kgs of A or B. I am losing 10 kgs of that mixture. That mixture is input. So, 10 kgs of my input is a normal loss. Effectively, I will get only 90 kgs of output. Is that clear? Is that clear? Everyone? Everyone? Now, what do you mean by standard quantity? Now, what do you mean by standard quantity? For the actual output, how many kgs I should have inputted? Now, in this case, what is my actual output? I have got 182 kgs. So, to get 182 kgs, how many kgs of A and B I should have inputted? Simple. Now, if this is 90, how much is 100? First you calculate. Guys, are you clear with this? To get an output of 182, how much I should have inputted? So if this is 90, how much is 100? That is the meaning, no? Guys, how much is it? 182 divided by 90 into 100. How much you get? Yes, you get 202.2222. Guys, correct? Now, simple. Have this in your calculator. This is the total input. And we know if this is the input, 40% of this should be A, 60% of this should be B. So now, whatever you have in your calculator, 202.2222 into 0.4 is equal to. So 80.8888 should be A, 0.6 is equal to 121.3333 should be B. Is that clear? And of course, last, if you want, you can put the balance. I think it's 20, yeah? 20.222. Am I right? Going to be 20.22222. Is that clear, guys? Are you all able to understand? So now, literally, we have got the standard quantities. Are you all able to understand? Is there any issue here? Guys, is everyone able to understand? Is everyone able to understand? Or there is another way of doing. One is what? Complete reverse working. The most important is the starting point. Is that clear? So why? This is why I said the hero of the chapter is what? Actual output. To get the actuals, how much is the kgs I should have inputted? One way of doing is, with this you calculate the input, on this apply 40%, 60%. Or another way of doing is very simple. Very simple. Guys, look at this, look at the screen, look at the screen. To get an output of 90, I should input 40 kgs of A. To get an output of 182, how many kgs of A I should have inputted? Very simple. 182 by 90 into 40 you do, directly you will get this figure. Try it, no? 182 by 90 into 40 is equal to, how much you get? 80.88. Similarly, B, to get an output of 90, I need to input 60 kgs of B. If to get an output of 182, how many kgs of B I should input? 182 by 90 into 60. Directly you will get this. How much you get? 121.333. This is another way of doing. Are you all able to understand this? Is there any issue here, guys? Are you all able to understand? As simple as that. Is this clear, guys? Is this clear? Now, this is how you need to crack this question. All of the data is easy. Shall we do this question? Now, write down. Please write down. Question number 2, no? Write down. Okay. First, here, write down, guys. Calculation of standard quantity. Calculation of standard quantity. A standard quantity means for actual output only, right? If you want, you can write for actual output, no problem. Standard quantity for actual output. Standard quantity itself means for actual output only. Is that clear, everyone? The most underrated segment in this chapter is actual output. Remember, underrated, I mean, that is the hero of this chapter, right? Okay, now let's begin. Let's begin. Now, write down here. Maybe you can put this as working note number 1. Write down, guys, working note number 1. Write down. Here, raw material and 2 columns. Write down base, and then once again three columns then. Raw material, base, standard quantity, and then computation or workings, whichever way you want, you can name it. Computation or workings. Is that clear? Now, what are the raw materials you need? First, tell me, guys. Raw material A, raw material B, and the subtotal is called as input minus normal loss gives you output. Is that clear, everyone? The step for this chapter. The step for this question. Now, what is the base data? Now, first, if I input a total of 100, I know I will lose 10% of input, 10, which means output will be 90. They have given in the question 40% of the total input is from A, correct? So 40 and 60. Is that clear? This is the base data given in the question. Now with this, first thing, what will you do? Everybody. Yes, output. Take a red ink, put it first. Now they have given in the question, what is the actual quantity produced? 182. This is the starting point, right? So write down here under the workings column, write down given. Right, guys? Now what will you do? What will you do? So first, now with this you can calculate, right? So if 182 is 90, how much should be 100? So write this calculation out here. So 182 by 90 into 100. How much is that? Guys, everyone, 202.22222, right? Don't round off. Maybe here you can present it like this. So, but overall you need to have it. Now, then what will you write it down here? For A, you will say it is 202.222 into 40%. Am I right, guys? And B is going to be 202.222 into 60%. So, in your calculator, you have 202.2222 into 0.4 is equal to 0.6 is equal to figures. So, it's going to be 80.88 and yes, guys, 121.33333. Is this clear? That's about it. The next one. Okay, normal loss also you can write down. It's going to be the balancing figure. Or here, how much is that? It's going to be 20.222, right? So I can write down here 20.222. 20.222. So workings you can write down. It's a similar calculation, or you can say 202.22 into 10%. That way you can say, or balancing figure, or you can also put this 182 by 90 into 10. Whichever way you want, you can do it. Are you all able to understand? So with this, we have clearly communicated to the examiner, look, I have found out standard quantity, workings, this is how it is. Is that clear, guys? Starting point is output, with that we have built it. Are you all able to understand? Now what you need to do here, write down. Now we will prepare a full-fledged table. What table? Particulars, raw material AB, right, and the input and all these things. Now what will we do? Standard quantity, standard price, total it, and SQ into SP, then actual quantity, actual price, total it. Why? The total will be there, no? So standard quantity to standard price, total, that itself is your standard material cost. Means what? The total material cost you should have incurred, and the actual quantity into actual price gives you the total material cost actually incurred. The difference between the two is your material cost variance itself. Are you all able to understand? Directly you can do that, and the other part of the question we will do it. Shall we get started? All the ingredients will be presented on a tabular format. Write down here material, then have, so under this we have standard column. Am I right? So under standard we have three columns: standard quantity, standard price. Yes, very good. Standard quantity into standard price. That's about it. Next one. Similarly, actuals. You have actual quantity, you have actual price, and then actual quantity into actual price. As simple as that. This is your standard data. This is your actual data. Is that clear, everyone? Let's begin. Let's begin, guys. First, what are the raw materials here? Please write it down. A, then write down B, then write down your subtotal, call it as input. Am I right? So write down input, then no, minus just write loss. Why just a loss? This column loss is normal loss. This column loss is actual loss. Guys, are you clear? Actual data, here whatever loss you incur is actual loss. In the standard column, this is the loss you should have got. Am I right, guys? Hence, we are doing it. Are you all able to understand? Hence, I use only the word loss. You guys are able to understand? So now you get output. Are you all able to get this? Is everyone able to follow this, guys? Everyone able to follow this? Very good. Now, put it up here. Now, let's begin. First one. So, standard quantity, we guys know this. What is it? 80.8888. Then here it's going to be 121.3333. So the total input was 202.22222. Am I right? So the loss was 20.22222. So output was 182. How did we get this? Working note number 1. If you want on the top, you can put this working note number 1. Is that clear? Standard price. It was given in the question. Am I right, guys? On the top, write down given figures. 20 rupees, 30 rupees. That's about it. No other data needs to be filled. Next, actual quantity also we will fill. Yes, it's given in the question, right? On the top, write down given figures. So actually, I consumed 90 kgs of A, 110 kgs of B, which means totally input I have 200 kgs were inputted. Now, what was the output I got? 182, which means actually how many units have I lost? The difference between the two. Guys, it's 18 kgs, right? Maybe you can take a pencil, put a circle here. Is this clear, everybody? Right? This is a balancing figure. Now, one look at the table, you know how you got the figures. Am I right? Next, actual price. You know this figure? Yes, within bracket, given. What are the figures? 18 rupees, 34 rupees. That's about it. Now, what will you do? Come on, guys. Standard quantity to standard price. Now, please don't round off. Those figures, you need to have it with you. What is that? 80.8888, no? Guys, 80.8888 into 20 gives you how much? Yes, it gives a total of 1617.777. Then 121.33333 into 30 gives you 3639.999. That can be rounded off to 3640. Am I right? 3640. Add up the two. How much you get? 5257.7777. Am I right? So 5257.777. That itself is a total cost. Am I right, guys? 5257.7777. So this is the overall raw material cost you should have incurred. Am I right, guys? Guys, are you clear with this? Yes. However, what is the cost you've actually incurred? 19 to 18. Come on, write down. 1620. 110 into 34. 3740. Add it up. So 5360 and total up 5360. But you have actually incurred 5360 to get 182 units. But you should have incurred only 5257.77 to get an output of 182. Now you guys got this. Are you all able to understand? Is there any problem, any issue here? No. So now what you can do is, now come down and write, guys. Come down and write. First, in the center, what is it? Material cost variance. What is the formula? Everyone tell and write. Come on, guys. Classroom, finish it off. Standard quantity into standard price minus actual quantity into actual price. Now, what's my standard quantity, guys? No. One second. Now, standard quantity into standard price. Now, of A and B put together, it came out to, guys, how much is it? 5257.77. Am I right? So, write down here. It's going to be 5257.77777 minus actual quantity into actual price 5360. I already got this. Write down minus 5360. 5257.7777 minus 5360. So you guys tell me how much you get. 102.222. Adverse or favorable? Absolutely adverse. Why? Look, you should have incurred only 5,257 point something, but you've incurred 5360. You have incurred more than what you were supposed to. It's an adverse variance. It is pulled down my profit. Am I right, guys? So now what will you do with this? What will you do with this? Will you stop there? No. Branch it into two. Very good. What and what? Good. Material price variance and material usage variance. Write down MPV and MUV. Material price and material usage variance. Price variance, responsibility, purchase manager. So, within bracket, standard price minus actual price into actual quantity. Why actual quantity? The purchase manager is dependent on the production manager for quantity. For every unit he asked me to purchase, I am responsible for the price difference. And on the other hand, usage variance, responsibility, production manager. So, standard quantity, one second. So, okay, standard quantity minus actual quantity into standard price. I will not take the actual price. Why? Because the production manager is not dependent on the purchase manager for anything. If I take actual price, then I am transferring the responsibility, the efficiency or inefficiency of the purchase manager to the production manager, which is wrong. Is that clear? Now you do it. Now how do I do it, sir? Raw material wise do it. That's all. Guys, clear with this? Now, first, raw material A. How much is standard price? How much is actual price? Don't look at the book. Look at this dabba we have done above. 20, 18 into 90. Am I right, guys? Everything is available here. Do it, do it, do it. Come on, what is that? 20 minus 18 into 90. How about B? We'll first plug the figures and then we will think. Yes, 30 minus 34 into 110. Am I right? Put it up here. 30 minus 34 into 110. Now, guys, now tell me, raw material A, every kg he should have paid 20. He has negotiated well. He just ended up paying 18 rupees. He saved 2 rupees for the company. Actually, for every unit, how many units did he purchase? 90. So 90 into 2, how much is it? 180. Favorable or adverse? Obviously favorable, because he saved so much amount for the company. Whereas raw material B, he should have paid 30. He's paid 34. 4 rupees he has paid more. His negotiation skill didn't work out well here. So 4 into 110 gives you 440. So 440 favorable or adverse? So 440 adverse. So net of these two, how much is the net adverse or net favorable? Net adverse. How much you get? 260 adverse. Is this clear, guys? Is everyone able to understand? That's all. When you have multiple type of raw material, product or raw material wise, you compute the variances and leave it there. Is that clear? On the other hand, you have what? Usage variance. Write down A. Come on, guys. A. So, first, standard quantity. You should have consumed 80.888, but you've actually consumed 90, right? Into standard price is 20. Let's do this. Write down 80.888 minus, what is the actual quantity? 90. Am I right? Into standard price 20. Next, B. Yes, tell me. 121.333 minus 110 into 30. Put it up here. 121.333 minus 110, huh? 110, no? Yes, into 110 into 30. Now, guys, now calculate. Now, retain the decimals. 80.888888 fully minus 90 into 20. Now, guys, 1 second. What has happened here? You were supposed to consume only 80.88. You've consumed how much? 90, which means you have consumed more. It shows your inefficiency, which means clearly an adverse variance. How much is the amount? 182.22222 adverse. Very good. Next up, B, you could have consumed 121.33, but somehow you were efficient. You consumed only 110. So 121.33333 minus 110, which means you consumed 11.33 kgs less. And every kg you saved how much? 30 rupees. Overall, how much is it? 340. Yeah? 339.999, that can be rounded off to 340. So write down 340, favorable or adverse? Obviously favorable. You've saved this. Net off, you have 340 minus 182.2222. Net off, you have how much? 157.777 favorable. Is that clear, guys? Now just immediately verify this plus this should give your daddy or mummy, whatever it is. Daddy only. Okay, fine. Daddy peta. Okay, do it. Come on, how much you get? You get exactly 102.222 adverse. Are you all able to understand? Sir, overall this is the cost variance. Now, to the extent of 260 rupees adverse, now this is because of the inefficiency of my purchase manager. However, my production manager has been super efficient, sir. Why? So, to his because of him, we have saved 157.77. Are you all able to understand this? Is everybody able to get this? Guys, are you all able to understand? This is the core here. Are you all able to get this? Any issues? Any problem? Perfect. Now, till now, any problem, guys? Perfect. Now you guys have understood. Now, so material cost variance is bifurcated into price and usage variance. Is that clear? Now, I told you, when you have more than one type of raw material, in that case, usage variance, whose responsibility is usage variance? Production manager. This is further bifurcated into two. One is called as material mix variance. The other one is called as material yield variance. Do not write down anything. I will do it first, then you can write down. Is that clear? Now, if you miss this, it's gone forever. Now, please don't write down anything. I will give you time to copy it. You just have to participate properly, actively listen. If you miss this right now, it's gone. It's gone. Now, tomorrow you don't ask me, sir, what is this, what is that? Now, if you miss this, it's gone. That's why I'm telling you. Figures, you can write it anytime. Don't worry. Understand conceptually. We are spending time like this. I keep telling you this, Abraham Lincoln saying, if you give me 6 hours to chop down a tree, I will spend the first 4 sharpening the axe. We are sharpening the axe. Sir, second question only, sir. We have spent so long. You will see, this is the first time we are learning this concept. That's about it. The same concept is there in labor also. There and all will not spend much time. It's all simple. So when you are learning it, learn it conceptually. It will stay with you for a lifetime. Any kind of sum you will be able to answer. Is that clear? Let's start. Now, material usage variance, I told you, it gets classified into what and what, guys? Material mix, material yield. Nothing. Please don't write down anything. I will give you guys the time to write down. Okay. Material mix variance. The formula I gave you was revised actual quantity minus actual quantity into standard price. Okay, this is the formula. Sir, what do you mean by this? First, I will give you guys, I will tell you what is what. I will do the calculation. I will tell you the template, and then with that I will explain. Raw material. For this, first we need to draw one dabba. What is the first line item? RAQ, one new line item. Correct? Yes. Then you have AQ. Then you have SP, standard price. Then if you do the above calculation, finally you will get what? Your material mix variance. Am I right, guys? Yes. Okay, fine. This is all it is. What are the different raw materials? Everyone tell me. You have 2 raw materials, A and B. Is that clear? Now, first one, what you should do is fill the actual quantity column. What is the actual quantity? We know 90, 110, total 200. Okay. Now, I am doing this here. 90, 110. Total is 200. Now, what I will do is, sir, what is this revised actual quantity? What was the actual quantity? 200. I will put it here. I will say 200. Okay. For some reason, overall, you have consumed how many kgs? 200. Fine. But that 200, you should have actually consumed in what proportion? 40 is to 60. Guys, correct. So, they have clearly given whatever you consume, the total input should be in the standard mix. Standard mix means what? Mix means the proportion. Are you all able to understand? Fine. Here, what I am doing, I am not comparing standard quantity with actual quantity. I am comparing actual quantity with actual quantity. But what is the difference? Now, this actual quantity at standard mix, I'm comparing it with the actual quantity at whatever proportion you have consumed. Is that clear? Sir, this 200 you should have consumed in what ratio? 40:60. Am I right? So now, had you consumed in that ratio, how many kgs of A, how many kgs of B would have come? 40% of, so here it's going to be 40% of 200. Here it will be 60% of 200. Am I right, guys? Am I right? So how much and how much? 80, 120. So this is what I would have consumed, or I should have consumed, had I maintained the mix. Am I right, guys? Guys, are you all clear with this? Are you all clear with this? But actually, how many kgs? How I consumed this? 200. 90:110. Is that clear? I consumed in some other proportion. This is 9:11 mix. Some random proportion. Is that clear? Now, what is the standard price? Standard price, come on, tell me. So, 20 and 30, am I right? So, put it up here, 20 and 30. Is that clear? Now, what is the material mix variance? Now, you should have consumed 80. You have consumed 90. Now, you have consumed 10 kgs more than what you are supposed to consume into 10, into 20. How much is it? 200. Adverse or favorable? You have consumed more. Whereas you, with respect to B, you should have consumed 120. You have consumed 110. You have consumed 10 kgs less. Every kg costs 30 rupees. So 10 into 30. How much is that? 300 favorable. How much is it coming out to? Net of 100 rupees favorable. Is that clear? Now, first of all, sir, we have computed. That's all. What is the meaning of this? What is the meaning of this? Now, this material usage variance, it compares what with what? Overall standard quantity. This is the quantity you should have consumed. It compares this with actual quantity into standard price. Sir, because of your efficiency or inefficiency in consumption, how much is the variance? So who is responsible for this? Production manager. Correct? Perfect. But now there is one issue here. What is it? The first one, I am segregating this into material mix variance. Now, what do we capture in mix variance? I will tell you. Revised actual quantity minus actual quantity into standard price. Correct? Here, we do not compare actual quantity with, we do not compare the standard quantity with actual quantity. We compare actual with actual. But what do we compare? Actual quantity at standard mix, 40:60 mix, with the actual quantity at the actual mix. Is that clear? Now, here we are tracking, because of deviation in the mix, how much is the variance? Not because of deviation in the overall quantity. If you notice, overall, you should have consumed, you could have consumed how many kgs? 202.22 overall. Whereas you have only consumed 200. Am I right? Now, because of this, how much is the overall variance? Overall, you have saved some kgs. That we are not capturing here. That we capture in yield variance. But here, what are we capturing? Sir, this 200 only I am taking. But this 200 should have been at the standard mix. 80:120. Am I right? Because of deviating from the mixer, how much is the variance? That alone I am computing here. Are you clear with this? Don't sleep, huh? Are you understanding? Yes. Now look at this, sir. Why, sir? Simple. You guys tell me, between A and B. Guys, focus here. Very important. If you miss this, it's gone. I'm again and again telling you. Between A and B, which is a costlier raw material. A is a 20 rupee product. B is a 30 rupee product. Which is a costly product? B is definitely a costly product. Now, I totally consumed how many kgs? 200. Fine. But this, at least, you should have retained the mix of 40:60. Had you retained the mix, you would have consumed 80 kgs of A, 120 kgs of B. But what you actually did, you consumed 90 kgs of A and 110 kgs of B. Or in other words, you consumed 10 kgs more of A and you consumed 10 kgs less of B. Or in other words, overall 200 only. But you consumed less of a costlier product and that you replaced with more of a cheaper product. Because of that, obviously you will be having a favorable variance. Are you understanding this? So I am finding out, oh, you said 157.77 is because of your efficiency. I found out, I bifurcated this because of deviating from the mixer. You saved 100. This is not because of your mixer. This is cheating. I mean, this is not because of your efficiency. This is cheating. Example, I'm a milk manufacturer. Now, instead of having more milk, less water, I had more water, less milk. You tell me, is it because of my efficiency or cheating? Cheating. This is adulteration. Are you understanding this? So, further I'm bifurcating. Genuinely because of quantity difference, I will calculate in yield variance that we are going to calculate. But because of the composition change, how much is it attributing to the variance? I am capturing it here. Are you all able to understand this? Is this clear, guys? Is everybody able to understand this? Is everyone able to understand? Are you guys able to get this? Are you guys able to get this? Is there any issue here? Is there any issue here? One second. I will tell you. Now, we have something called as a standard quantity. Guys, everyone, yes, we have something called as actual quantity. Now, this usage variance compares standard quantity with actual quantity. Agreeing with me or not? Yes. In between what I did, this is the overall usage variance. But I want to find out genuinely because of his efficiency, how much he has contributed to the variance. And on the other side, because of the mix, deviating from the mix, how much is the variance? I wanted to find out, guys, because for this purpose, what I did, I introduced a new guy called revised actual quantity in between. Are you all able to understand? Now, in this case, I call it as the mix variance. In mix variance, we compare what with what? We compare revised actual quantity with the actual quantity. Am I right, guys? Am I right, guys? Are you all able to understand this? Are you all able to understand this? Is there any issue here? No. Whereas my overall daddy, here my daddy is whom? Usage variance. Usage variance compares what with what? It compares standard quantity with my actual quantity. The total difference, I am breaking it up into two. One, I'm saying revised actual quantity, I'm comparing it with actual quantity. Here I'm saying I'm comparing actual quantity with actual quantity. But here, actual quantity at standard mix is being compared with the actual quantity at actual mix. So purely because of the deviation in the mix means composition, how much the variance I'm calculating. Because of the deviation in the quantity, I don't calculate here. Is that clear? Is that clear? Now, on the other side, I have another guy. Who is he? Material yield variance. Yield means output. Are you clear with this? Right? Input, output. This is called yield. Yield variance, what it says, the formula is standard quantity minus revised actual quantity into standard price. Or in other words, now look, my usage variance, one second, my material usage variance, what does it compute? My material usage variance, it compares the difference between standard quantity with actual quantity. On one side, I have something called as material mix variance that compares RAQ with my AQ, revised actual quantity with my actual quantity. So the deviation in mix alone is getting tracked here. So on the other side, I have something called as my what do I have this? Yield variance. It compares standard quantity with my revised actual quantity. Are you all able to understand? So the difference between standard quantity and revised actual quantity is captured under material yield variance. Now one second. Here if you notice, standard quantity obviously is in the proportion of 40-60. Standard quantities and standard mix. Here if you see, revised actual quantity is also at the standard mix. Just now I converted. Guys, correct? But here it captures only the quantity difference. Are you all able to understand? Here it compares standard quantity at standard mix with actual quantity at standard mix. So purely it tracks the deviation in the quantity. Whereas here the quantity difference is not tracked because I compare actual quantity with actual quantity. But here the mix difference alone is getting tracked. Are you all able to understand, or you want me to repeat? Guys, are you all able to understand? You want me to repeat? You want me to repeat? You should tell me if you don't understand something. You want me, that also you want me to figure out? You can tell me, no? I am telling you, overall, this is the standard quantity I should have consumed. This is the actual quantity I have consumed. The difference between the two is what it gets tracked in your usage variance. Correct or not? You understood this? Now, what we are trying to say, this is what these two difference we capture. Now, what I am saying is, in between I introduce a guy called revised actual quantity. What is it? Actual quantity, but at standard mix. Correct? Overall, you consumed how many kgs? 200. Okay, fine, 200. At least this you should have consumed the standard proportion, 40:60. But you have actually consumed it in some random proportion, actual mix. Because of deviating from the mix, how much is the variance? I'm comparing. Here, the overall total quantity deviation I'm not tracking. Are you understanding this? Are you understanding this? So, the quantity difference is not tracked here. Only the deviation in the mix is getting captured here. Are you able to understand? Purida ilya? However, in the other variance called yield variance, what do? I compare standard quantity with the revised actual quantity. Here, standard quantity is in standard mix only, 40:60 proportion. Revised actual quantity is also at standard mix, 40:60. Just now we did. But so here, I don't capture the deviation in the mix. Why? It is already captured here. I only track the deviation in the quantity. Are you all able to understand? Yes. So here, standard quantity, I compare it with revised actual quantity. So the quantity difference alone gets captured here. But this is also at standard mix. This is also at standard mix. 40:60, 40:60. Are you understanding? Guys, are you all understanding? Hence, yield variance captures the difference in the quantity. Mix variance captures the difference in the mix. Clearly, I will know usage variance is purely happening because of two reasons. One is because of deviation in the mix captured here. The other one is because of deviation in the quantity captured here. So because of mix, how much the variance? Because of quantity, how much the variance? Totally, it attributes to your usage variance. Because of mix, ideally, it is not because of the efficiency of the production manager, only because of yield variance, it is because of the efficiency of the manager. Are you guys clear with this? Is everyone able to understand? Purida, now you guys understood this? Simple, guys, that's all it is. Or, sir, how do I remember this? Very simple. You need to get this figure, usage variance. What is usage variance? Standard quantity minus actual quantity into standard price only, everything. I need to get standard quantity minus actual quantity. Now, this is bifurcated into mix and yield variance. Mix variance, revised actual quantity minus the standard quantity, revised actual quantity minus actual quantity into standard price. Fine. Now, I need this figure. Currently, I have this figure. Now, to this, if I add something, I should get the top figure. Am I right? Now, here I already have minus AQ. So, here also I have minus AQ. No problem. But here, I need standard quantity. But here I have what? RAQ. So, what I need to? So, here I will introduce standard quantity, subtract RAQ. So, if I do that, literally what happens? If I add up RAQ gets knocked off. And on the top, I get standard quantity minus actual quantity, the whole into standard price. Are you able to understand this? Guys, or I can say this is nothing but a balancing figure. Am I right, guys? Is everyone able to understand this? This clarity you need to have. You can remember this as a balancing figure, or conceptually also you can remember this. Is everyone able to understand? Guys, is everyone able to understand? Conceptually, I told you need not mug up anything. This is the concept behind it. Is everyone able to understand? Usage variance compares standard quantity with actual quantity. First, mix variance. What do? Revise the actual quantity minus actual quantity to standard price. So here I only capture the deviation of the mix without taking the deviation of the quantity, because I compare actual quantity with actual quantity. Actual quantity at standard mix with actual quantity at actual mix. So mix difference alone is getting captured here. On the other hand, you have yield variance. What is the formula? Standard quantity minus revised actual quantity into standard price. Here I only take into account the quantity difference. I do not take into account the mixed variance. Are you all able to understand this? That's all it is, guys. Very, very simple. So standard quantity minus revised actual quantity into standard price. Is everyone able to understand? So now let's do this now. So here it's going to be, once again, I'll do this and then you can do. So tell me the figures. What is the standard quantity for A? Standard quantity for B? Hello? Yes, 80.888. Here it's 121.33 minus RAQ. Just now we computed 80 and 120. Am I right, guys? Yes, 80 and 120. So I'll put it up here. 80 and 120 into standard price. How much? 20 into 30. Okay, so how much you get? Look at this. Overall, you should have consumed 80.888, but actually you've consumed only 80. Consumed as in RAQ. So how much is this? 0.8888 you have consumed less. Am I right, guys? Into 20 gives you. So it gives you 17.777. Favorable or adverse? Obviously favorable. You've consumed less than what you're supposed to. Am I right? Yes, and how about on the other side? 121.33 minus 120. So once again, you've consumed less, 1.33333 kgs into 30. Am I right? So you get 39.999. That's nothing but 40. Favorable, adverse? Obviously favorable since you've consumed less. Are you all able to understand? 40 favorable. So now what will you do, guys? Add this up. Add this up. You get a total of so 57.777 favorable. So now, so this is going to be your yield variance. This is going to be your mix variance. If you add the two, you should get your putty daddy. That is your first daddy. This is your granddaddy. This is immediate daddy. Yes, grandfather daddy. Okay, ma. Fine, guys, jokes apart. So this is what 100 plus 57.77, 157.77. Is that clear? So clearly I can tell. Don't immediately appreciate the production manager. Look what a wonderful job he has done. He has, in order to make sure that he gets very good name, he has done some kalappadam, means adulteration, right? He has done some adulteration because of the mix. The variance is 100. Will you appreciate him for this? No, this is because of using more of a cheaper material, less of a costlier material. Are you clear with this? Right? Hence, only to the extent of 57.777, I would say that, look, this is genuinely because of his efficiency. Are you guys able to understand? Is everyone able to understand? Guys, you guys are able to get this? Any issues here? Any issues here? You guys are able to get this? So, overall, the usage variance is 157.777. Out of this, 100 rupees is due to deviating from the mix. 57.77 is due to deviation in the quantity. Are you all able to understand? Guys, everybody, you guys understood this, and this also, you guys understood a very, very important understanding. Your usage variance compares standard quantity with actual quantity. First, I do mix variance. Here I compare RAQ with AQ. This difference is already taken care of here. Hence, the yield variance will only take care of the balance. What is that? Standard quantity and RAQ. Is that clear? Here I compare actual quantity with actual quantity, but this is a standard mix, this is that actual mix. Deviation in mix gets captured here. Whereas here, standard quantity and RAQ, both of them are at standard mix, but this is a standard quantity, this is an actual quantity. So here, the quantity difference alone are getting captured here with the same mix. Mix difference gets captured here separately. Are you guys able to understand? Is that clear? That's about this area. Please go and do it once. Quickly update it. Written down, huh? Shall we move on? Write down. Online folks, please write down quickly. Make a note of it. Quickly, guys. Understand the logic, and that's about it. That's about it. Literally now, we have almost covered 75% of the chapter. Trust me. 2 sums only we have done, sir. Yes, the other sums we will be doing. Don't worry about that. But this is all it takes. Your labor is going to be an extension of this. Wherever you find quantity, put it with hours. Wherever you find price, you put it with rate. And that's about it. Come on, make it fast, guys. Note it down. We done here? Are we done? Guys, are we done? Any issues? Any problem here? Done? Can we just go and update the library of adjustments? Write down. Write down. MCV hyphen mix of raw material within bracket with loss. 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 Semicolon, semicolon. Write down whatever we did in this question. What did we do? MCV, comma, MCV, comma, MPV, comma, MUV, comma, MMV, comma, MYV. So, material, cost, price, usage, mix, yield, everything. Write down. Quickly write down. This gives you a sum up of this entire question. Now, I had dictated the formula, no, initially. I had dictated that formula, no, initially. Guys, you have some space there. You have some space there. Yes. Okay, if not, create space. Okay, so sticky note or something. This is not mentioned in your study material, but somewhere I have seen they have used this formula. Material yield variance is there, no? Huh? Please write down, come down, write. There are alternate formulas for this. This is there in your CMA study material, but CA study material they have not kept. Generally, they don't ask questions, but somewhere in RTP or somewhere I have seen. Since they have asked, we will also do that. Okay, I will also mention that. Write down. Here, there are two other formulas for this. Write down. Here it is what? Standard quantity minus revised actual quantity to standard price. Am I right? Write down. Or standard loss minus actual loss into standard cost per unit. Write down. I will tell you. Standard loss minus actual loss into standard cost per unit, or actual yield minus standard yield into standard cost per unit. These two are alternative formulas, generally not asked. If at all they ask for safety purpose, I am telling you quickly, I will tell you what it is and we will wrap up this question. Okay, done? You guys have written this down? Okay, this is completely different, guys. Standard cost per unit and all is completely different. Now, what is it? Simple. Guys, once again, yield variance, the last one, what does it capture? Sir, because of the quantity difference, how much have you gained or lost? This is what it captures. Am I right? Everyone? Correct. Simple. Now, you go to the sum here. I mean, the sum which we just did. Now, look at this. What was the total input? Everyone. Huh? Everyone tell me no. 200. Standard loss was how much percentage? Recall process costing. 10% on input. Which means 200 into 10%. How much is it? Guys, everyone. You should have lost how much? 20. Standard loss 20. You have actually lost 18. Which means you have gained how many units? Normal gain, no. Guys, are you understanding? 2 units. This is your yield variance. Now, every unit will ideally cost you how much? Now, look at this. This is 2 units of output. Am I right? A or B? No, sir. Mixture. I'm talking about 2 units of effective good unit. Guys, are you understanding? This is your process costing area. You guys understood? Now, what is the standard cost per good unit? Simple. Sir, 5257.77 is the standard cost for how many units of output? 182. Am I right, guys? This is the cost for 182 units. So, what is the effective cost per good unit? Guys, 5257.7777 divided by 182. How much you get? 28.88888 is the effective cost per good unit. Now, you were supposed to lose 20. You have actually lost only 18, which means you have saved 2 units. So for every 2 unit, what is the cost? 28.88. So 2 into 28.88, how much it gets? 57.777. Favorable or adverse? Favorable. Why? Standard loss would have been 20, but actual loss was only 18, and cost of every effective good unit is going to be 28.88. If you multiply, you saved 57.77 because of the quantity. Are you all able to understand? We had nothing to do with the mix. Am I right, guys? This is exactly matching with your yield variance. No? Are you all able to understand, guys? Or another way of doing it is, this is the first formula I told you. What is it? Standard loss minus actual loss into standard cost per unit, or actual yield minus standard yield by into standard cost per unit. Simple. Now here if you look at it, I have inputted how much? 200. Normal loss 10 percentage, which means 20 kgs you should have lost. How many kgs you should have got? You should have got 180. You have got 182. So which means 182 minus 180. You have saved 2 units, and every unit actually costs how much? 28.888. We got the standard cost per unit is nothing but the total standard cost divided by the total quantity, standard quantity. Are you clear with this, guys? Output. So if you do this once again, you get the same 57.7777. Are you all able to understand this, guys? Simple. The difference in loss is nothing but the difference in output only. No, guys, correct? No. Since my loss reduced by 2 units, my output increased by 2 units. Are you all able to understand? Is everyone able to understand? Or in other words, I will say the difference in loss into standard cost per unit, or the difference in yield divided by standard cost per unit. Yield means output. That's all. Is everyone able to understand now? This is what the yield variance captures. This is why I said yield is not bothered about the mix. What is bothered about the mix? It's a mix variance. It has calculated the deviation in the mix. This only captures the overall quantity. Are you all able to understand? Is everyone able to understand? You can play around with this once again. Clear with this, guys? In case they give the cost data in standard cost per unit, we do not know. Institute is known for all these things. In your MCQ, if at all they give, now you know how to do it. Is that clear, guys? Logically think and do it. Whatever time you're spending here, it's absolute investment. Any kind of sum, you'll be able to handle it. Is that clear, guys? Right? Now, one more thing I want to tell you right at the beginning. Now, you guys have written out the formula? Yes. Now, here material yield variance is there, no? Yield variance is also known as sub-usage variance. What is it known as? Material sub-usage variance. Write down. In exam, suddenly if they ask you, calculate material sub-usage variance. Now you guys will do what? Sir didn't teach, so pull my generations readily waiting, huh? So previous generations, linear ascendant, linear descendant, you would have studied in your income tax, which section? 56 to 10, gift, you would have studied, no, relative definition. This section does not talk about, relatives. It gives you a reference to another section, 2 clause something. There they refer to relatives. So linear ascendant, linear descendant, you would pull, yet to come, about to come, everything you will pull. So guys, I'm clearly telling you, note it down somewhere. Material yield variance is also known as sub-usage. Ideally speaking, this is the actual usage, Guys, is everyone able to understand? So this is also known as sub-usage variance. Material sub-usage variance. Is that clear? Is that clear? Everyone? Perfect. Now, one more thing I want to tell you. Now, guys, finally, this is one more thing I want to tell you. Now, what is this? Revise the actual quantity. Now, what do you mean by this? You take the actual quantity, on that revise it. Revise it with what? Standard mix. Correct? No? So you do the revision on the actual quantity. What is revision? That is nothing but applying the standard mix. So in my opinion, this is the correct language. Revise the actual quantity. However, ICAI, what they do is, so please write down, instead of RAQ, they use the word RSQ. What is RSQ? Revise the standard quantity. Institute uses this jargon. Guys, manner of computation same. Terminology alone is different. Is that clear? Sir, then why did you mention it like this, sir? Now, I taught you like this because it's the correct way of doing. What did we do? How did we do it first? How did we do it first? We substituted this amount here. It is actual quantity. On that only revision is being done. But what they are saying, revised standard quantity. That word revision itself means applying the standard mix. Once again, why do you say standard quantity? The revision is only on the actual quantity. Am I right? Hence, I use the word here. But in exam, sir, in exam, can we write RAQ? Yes, ideally you can. Exam, yes, you can. I have seen, a past exam student, our student, he scored about 89 marks. So I took his exam paper and saw he did RAQ. They had also given full marks for that sum. However, safety reasons, I'm telling you, exam use the word RSQ. Is that clear? However, manner of computation, same. Ideally speaking, in my opinion, the logical way is only, the logical terminologies are AQ. The revision is on the actual quantity. However, in exam, use the word RSQ. Is this clear, guys? Everyone able to understand? And that's about it. Now, can you guys tell me the formula? Can you guys tell me the formula? First, material cost variances formula. Close your eyes, tell me. Standard quantity. Close your eyes and tell me. Standard quantity. Lip movement, following. Close your eyes. You close the book itself. Fine, now you can close. Come back. Standard quantity into standard price minus actual quantity into actual price. Bifurcated into first material price variance, responsibility, purchase manager within bracket. Standard price minus actual price into actual quantity. Why? You guys know that. On the other side, material usage variance, responsibility, production manager responsible for quantity within bracket. Standard quantity minus actual quantity into standard price because he is not dependent on the other guy. Now, usage variance further bifurcated into two. What and what? Material mix variance, material yield variance, mix variance. RAQ, revised actual quantity minus actual quantity, always into standard price only. This guy is not bothered about actual price. Within bracket into actual standard price only. Is that clear? And on the other side, standard quantity minus revised actual quantity into standard price, or you can say balancing figure. Is this clear, guys? That's all it is. That's all it is. Beyond this, nothing is there. Simple, no? You guys only told the formulas. Online folks, I hope you guys are parallelly following along with me. This is all it is. If someone says standard costing is difficult and all, what will you say? That's all. This is so easy, guys. What more do you need here? Right? So mugging up by using this column 1, column 2, column 3, I don't believe in that. Just like that, I told you the actual logic. Write it. Plug and play. Most of the questions, challenges with respect to calculating standard quantity, that alone you properly calculate. Plug, play. That's about it. Clear with this? That's about this question. Shall we move on to the next one? Yes. Now, let's move on to the next question. Please take down question number 2. Sorry, 3. Question number 3. Okay, guys, this sub-questions are there. Please practice it. Question number 2A. Okay, it's there. Then 2B. I think it's also similar questions. Literally, we have covered, all the varieties here. Please solve these questions. Nothing great here. 2C is also there. Okay. Then 2D is also there. Very good. 2D is also there. Please practice these questions once. I've given it for your practice. Nothing beyond this. Guys, only if you practice, you'll get the speed. Please make sure you do it. Don't look at the solution. Do it by yourself and then finally check. Now, shall we get started here? Everybody, let's do this. Question number 3. Now, another variety of some. First question we did, single type of raw material. Second question, mix of raw materials. Then the third question, mix of raw material, but with one extra value addition here. Guys, this question I'm doing it mainly for, one more practice. Now I want you all to parallelly do it along with me. Will you guys do that? Yes. Question number 3. ABC Limited produces an article by lending 2 basic raw materials. Means what? To produce 1 unit of FG, you need 2 different types of raw material, A and B. Now, it operates a standard costing system and the following standards have been set for the raw materials. Now, A and B mix given a 40:60 standard price per kg of raw material 4 and 3, which means SP is given. Yes. The standard loss in processing is how much? 15%. During the month of April, the company produced 1700 kgs of FG. The position of stock and purchases for the month of April are as follows. Now, 1 second. Now, actual output is how much? Everyone, 1700. This is output. Now, reverse work, and you can calculate what? Input. How will you do that? A, B, the total input you have, minus standard loss gives you output. Output is 1700. Correct? Then, so they have said if I input 100, you will lose 15. Effective output is 85. So, if 1700 is 85, how much will be 100 you will find out. And on this apply 40% you will get A, for 60% you will get B, you will get the entire thing. Guys, correct? This balancing figure is your standard loss also. Are you guys able to understand? So the starting point is what? Output. On the actuals you need to arrive. Is that clear, everybody? Next one. The position of stock and purchases for the month are given. What have they given? A and B. Guys, look at this. Opening stock, closing stock, purchases. Now, how will you do this? How will you do this? Come on. And they have given opening stock of material is valued at a standard price. Calculate the following variances: material price, usage, yield, mix, total. All the variances basically you need to compute. Now, what have they given, guys? They have given opening stock is how much? 35 kgs. Closing stock 5 kgs. During the month they purchased 800 kgs. That 800 kgs were purchased at the total value of 3400. What will you do? Actual quantity consumed. How much is the actual quantity consumed? How will you arrive? Opening stock plus purchase minus closing stock. No. Hello, guys. Correct or not? Simple, no. Why only one student is answering? Others, you guys also understood? Understood. Then it means like this. Okay. So now I had an opening stock of, simple guys, I had an opening stock of 35, closing stock of 5. I purchased 800. Overall 835 is available. Out of that 5 remain unconsumed, which means 830 has been consumed. Guys, are you clear with this? Similarly, no. One major thing. Now 830 is there. Guys, correct. And what have they mentioned? Opening stock is valued at a standard price, which means this 35 kgs are valued at 4 rupees. However, the current period purchases are valued at how much? 3400 divided by 800. How much is it? Nama, didn't understood, Didn't understand. Hey, ma, you're thinking somewhere. Come back here, please. We are discussing a very important topic. So now, what you have said, opening stock is there, 35. They have said it's valued at standard price. Standard price means what? 4 rupees. In the current period, they have purchased 800 kgs. For 800 kgs, they paid how much? 3004, which means per kg, how much is the cost? They have paid 4.25. Now, it is the same raw material. Guys, correct? Now, this 35 kgs are valued at 4. Current period purchases are valued at 4.25. Now, what will you do? Multiple lots of receipts, each valued at different rates. Now, in standard costing, you need to use FIFO. Which means, sir, this 830 kgs consumed. No, sir. Break up. I will say first 35 kgs at the value of 4. The balance 795 kgs are valued at the rate of 4.25. This will be taken as the actual price. Are you all able to understand? But on the entire thing, the standard price is only 4 rupees. Are you all able to understand? Guys, is everyone able to understand? That is the only difference in this question. Are you guys able to get this? You guys are able to get this? Any issues here? Any problem here? You guys are able to get this? So that's about the sum. Similarly for B also we need to do. Are you all able to understand? Shall we do the sum? Shall we do the sum? Yes. Let's get started. So first one, write down. Question number 3. Look at the variety of sums we are solving. Slowly and gradually we have done. That's about it. Now, tell me, guys, what is the first one? Now, one second, write down. Working note number 1. What is it? Calculation of standard quantity. Correct? Yes, obviously, standard quantity means for actual production. Now, what will you write down? Raw material. Yes, you can write down base. Then, yes, standard quantity, and then calculation, workings, whatever it is. Workings. Yes, done. Now, what is the raw material, guys? A. You have then B. Then the subtotal is called as the total input. From this subtract standard loss. Then you arrive at your total output. Am I right? Yes. Do this. You get your output. Tell me, guys. So, first start. Okay, fine. Let's do this here. So, if I input 100, I know I will lose. Guys, come on, read the question. 15% is normal loss, 15. Effective output will be 85. And out of the total input, 40 kg should come from A, 60 kg should come from B. Is that clear? Now, standard quantity, what is the first step? Output. What is the actual output? So, to get an output of 1700 kgs, so which is given. So, what should have been my total input? 1700 is for 85. How much is it for 100? Am I right? So, how much is it? 1700 by 0.85. So, oh, round figure you get. Very good. Thankfully. 2000 you get. Guys, so now 40 percentage on 2000 gives you 800. Similarly, 60 percentage on 2000 gives you 1200. So, write down here 800. 1200, and of course this one as well is going to be 15 percentage on 2000, so this is going to be 300. 300 or balancing figure also you can do. Is this clear, guys? With this we arrived at the standard quantity column. Any problem here, guys? Any problem here? No. Next one, write down working note number 2. What is this working note number 2? Unique to this question. Yes, write down calculation of actual quantity consumed. Actual quantity consumed within bracket write down FIFO. Within bracket write down FIFO. Mark this step as important. A uniqueness of the question. Guys, are you all able to get this in a very graded format? We are seeing it. Is that clear? Now look at this. Is why I'm telling you we are solving every variety of possible problem. Beyond this, nothing can come. It's just an application of your mind. Right? Now let's do this. Let's do this. Write down here. Write down here. First, raw material A. We are not going to do it in a tabular format. Write down. Okay. 1 second. Before that, 1 second. Write down raw material consumption is equal to formula opening stock of raw material plus purchases minus closing stock of raw material. This is common for both A and B. Is that clear? Fine. Raw material A. What is the opening stock? So 35 kgs plus what is the purchases? 800 kgs. This is the total kgs, 835. Out of this, 5 kgs are remaining unconsumed. Guys, correct? So what is the total consumption? So totally I have consumed 830 kgs. Am I right, guys? Are you guys able to understand this? Now this 830 kgs, pull an arrow, branch it into 2. I am following first in, first out, which means the first 35 kgs are from opening stock. Am I right? And opening stock is valued at, they have given standard price. How much is it? At the rate of rupees 4. Whereas the balance, how many kgs? 795 kgs are valued at the rate of, so how much is the current rate? So I write down 4.25. So at the rate of rupees 4.25, right? Put a star on the top, come down and write. How did you get this? Rupees 3,400 divided by 800 kgs gives you how much? Rupees 4.25 per kg. Are you guys able to understand? Why do we need this? The next step we will be preparing the India statement, no? There we should know actual quantity 830, break up 35 at the rate of 4, 795 at the rate of 4.25. Is that clear, guys? For that purpose we need this. Is everyone able to understand? We can't bypass the step and go and directly do that. Is this clear, everyone? Next one, write down raw material B. So opening stock, everyone 40 kgs plus 1200 kgs. Overall I have 1240. Out of this I have not yet consumed 50 kgs. That gives me a total of 1190 kgs. Am I right? This is the total raw material B consumed. Now what will you do? Branch it into 2. So first out of this 40 kgs will come from my opening stock, and opening stock is valued at standard price. How much is that? 4 is for AMR. Read the question carefully. So raw material B is valued at 3 rupees. Take a rating in that case at 3, and the balance 1150 kgs should be valued at the rate of how much? The current period cost 3000 divided by 1200, going to be 2.5 star at the rate of rupees 2.50. Put a star and come back, come down. Star rupees 3000 is the cost for 1200 kgs. It's going to be how much? Rupees 2.50 per kg. Is this clear, guys? Now once this is done, what do we do now? Do it. Write down. So the template, put everything, and from now on the question is going to be a normal question. Shall we do this? Write down yes, raw material. Yes, under the standard data, you have what all? Standard quantity, standard price, and standard quantity into standard price. Am I right? SQ into SP, and then actual data under that. Actual quantity, actual price, AQ into AP. Is that clear? Fine. Now first, one second. Now what are the raw materials? One second. A, leave 2 lines gap and write B. Why? Because in actual data you will be having multiple columns. Guys, remember, plan the template when you are doing it. Then write B. Once again, a couple of line gap. Subtotal, call it as input minus just loss. Why? The standard column, it's called standard loss. Actual column, I call it as actual loss. Is that clear? So now if I subtotal this, I'll get my output. Is that clear, guys? Perfect. Very good. Very happy to see you guys are catching along very well. Very good, guys. So now tell me the first standard quantity. Pick everything here only. So is there 800, 1200, 2300, 1700? Tell me, guys, what are they? One second. Here you put it up. 800, 1200, totally 2000. Standard loss 300. Yes, within bracket 300. You should be getting 1700. Standard price 4, 3. That's all. Here and all it will not come. Actual quantity. Come on. Now you get it here from working note number 2. Now the first 35 kgs actual price is only 4. Balance 795 at the rate of 4.25. Write down. So it's going to be 35 at the rate of 4. 790 here itself. Next column 795 at the rate of 4.25. Both are raw material A only. Similarly, raw material B 40 at the rate of 3, 1150 at the rate of 2.5. Come on, write down. Shall we? Write down, what is it? 40 at the rate of 3, 1150 at the rate of 2.50. Is that clear? So what is the total actual quantity? 2020, yeah? So you have consumed a total of 830 plus 1190. Am I right, guys? Hello? Yes, so it's going to be how much? 2020, yeah? Guys, correct? 2020. Guys, correct? One second. With this itself, we can say, overall, you should have consumed 2000. You have actually consumed 2020. So your yield variance will definitely be in adverse. Yield is capturing your total quantity. Mix could be anything that we are yet to find out. Is that clear, guys? Are you all able to understand? This is the observation I'm talking about. Is this clear? Overall, with that itself, we can find out. Am I right, guys? Yes. Now, write down. Now, okay, further. Let's continue. What is the actual output, guys? We got 1700, so which means what is the actual loss? Balancing figure. 320, 320. Am I right, guys? Maybe you can take up a pencil, put a circle here. Balancing figure. And these are all hyphen. Come on, total it up. Tell me. So 800 into 4. 3200. 1200 into 3. 3600. 6800 is the total raw material cost you were supposed to incur. Am I right? But what is the raw material cost you've actually incurred? 35 into 4. 140. 375 into 4.25. Come on. 795 into 4.25. Yes. 3378.75. Then 40 into 3. 120. Then 1150 into 2.5. 2875. Add up everything. 6513.75. 6513.75. The overall cost you have incurred. Is everyone able to get this? I will give you 5 more seconds. For those who have not done the computations, please do it. Come on, this is all it is. Under every raw material, you have 2 different lots. FIFO assumed. Is that clear, guys? Is everyone able to get this? Guys, are you all able to understand any issues, any problem here? Please tell me. Is this clear? Is this clear? Yes. Shall we get started? Okay. Now, with this, let's go do this first one. Guys, come on. Material cost variance. Formula. Standard quantity into standard price minus actual quantity into actual price. Very good. Now. Standard quantity into standard price. A, B, everything put together. You should have incurred a total cost of only rupees 6,800. But you have incurred a total cost of only rupees 6513.75. 6513.75. So 6,800 minus 6513.75. How much you get? Rupees 286.25. Favorable or adverse? Favorable, because it is positive. Correct? No. Compare logically. Yes, everything. So this is the cost you should have incurred, but you have actually incurred less than what you're supposed to incur. You've saved so much for the company. Savings means it has the effect of increasing the profit. Hence, it is favorable. Yes, sir. Yes. Okay. Now you should say yes. Okay. Fine. Clear with this? So now, why am I actually getting the favorable variance? Bifurcate it into 2 because of price and because of usage. Come on, bifurcate it. Come on, guys, do it. So now, bifurcate it into 2. What and what? Everybody, material price variance, material usage variance. Tell and write. Once again, learn like a child, behave like a professional. Learn like a child. Bring the child mode. Repeat again and again till the time, even if you want to forget it, you should not forget. To that extent, it should run in your mind. Come on, tell me. Yes, sir. Standard price minus actual price into actual quantity. Logically, we have seen. And on the other side, standard quantity minus actual quantity, but into standard price. I'm not dependent on the other guy. Is that clear? Clearly know the logic and do it. Now, come on. How do you do it? Now, we're talking about price variance. Am I right? So, first, raw material A. Now, lot wise we should compute. Guys, lot wise we should compute. Am I right? Now, on the first lot, how many kgs? 35. Guys, correct? So for this standard price, 4. Actual price is also 4. Guys, so you can write here, write down 4 minus 4 into what is the actual quantity? 35. First lot, no. 35. This is going to be 0. On the second lot, so 4.25. So standard price is 4, but actual price is 4.25. Like this on how many kgs? 795. Write down. 4 minus 4.25 into 795. So I have spent how much more? 0.25 on how many kgs? 795 kgs. So put it up here. You get how much? 198.75 adverse. So overall, this is for raw material A. Am I right? Raw material A, opening stock, on the opening stock units, no variance. Why? It is valued at standard price only. Is that clear? So only on the current period consumption, guys, only on the units purchased and consumed, I have a variance. Are you all able to understand? Everybody? Yes. Next one. B. First lot, once again, similar scenario. On the 40 kgs, 3 minus 3, guys, correct? Put it up here. It's going to be 3 minus 3 into 40, 0. However, on the remaining 1150, 3 I should have incurred, but I've incurred only 2.5. So there's an efficiency in my bargaining skill. Am I right? So 3 minus 2.5 into how many kgs? 1150 kgs. So how much is that? 1150 into 0.5. Huh? So 575. Adverse or favorable? Absolutely favorable. Why? Tell me, guys, why? Because I should have paid 3. I have negotiated well and struck a very good deal for the company where I end up paying only 2.5 for every unit purchased. Is that clear, guys? And this I have been able to achieve this deal on each of these 1150 units. So now add up totally. What is the total? 575 adverse, 198.75. So yes, 575 favorable, 198.75 adverse, net off 376.25 favorable. There is a net favorable here. Are we clear here? Is this clear? That's about this one leg of it. The next one, what is it? Usage variance. So now here I don't have a problem, guys. No multiple lots and all. Why? Standard price. Sorry. So here it's going to be standard quantity minus actual quantity. I can take the total. The whole into standard price only, no. So only where you get actual price, since you have multiple actual price, lot wise you need to do. Are you clear with this? But here, everything is multiplied with standard price. There is only a fixed standard price here. Are you all able to understand? Clear with this? Yes. So now write down. What is the standard quantity for A? So you should have consumed a total of 800. Am I right? But actually you have consumed how much? Add these two. That's nothing but this one. 830. Am I right? You've actually consumed 830 into standard price 4. How much is that? You have consumed 30 kgs more. 30 into 4 gives you 120. Adverse or favorable? Definitely adverse. You've consumed more, right? Is that clear? Next, B. You should have consumed only 1200. But you've actually consumed how much? So 40 plus 1150, it's 1190. Or you can even refer here. It's 1190 as a whole. So write down it's 1190, and every kg you consume more is valued at 3 rupees. Am I right, guys? So into 3. Now tell me, you could have consumed 1200. You have only consumed 1190. So what has happened here? You have consumed 10 kgs less, and every kg is valued at 3 rupees. So it's going to be how much? 30. Favorable or adverse? Favorable. Net off. You get how much? 90 rupees adverse. Is this clear for everyone? Now immediately stop and check if you're tallying with your daddy. So favorable, adverse, net off. So 376.25 minus 90. You get your daddy? Yes. What is that? 286.25. Is that clear, guys? Are you all able to understand? Are we done with the question? No. Why? This usage variance needs to be further segregated into mix and yield. Shall we do that? Yes. What is the formula for mix variance? Yes. Material mix variance. Formula. Revised actual quantity minus actual quantity into standard price. That is not a change at all. Why? I compare actual with actual. So here I compare actual quantity at standard mix with actual quantity at actual mix. So quantity difference is not captured. Purely the mix variance is captured here. Is that clear? Now how do we do it? Come on, everyone, let's do it. Raw material. Come on. Very good. RAQ, AQ, SP. That's all. MMV. That's about it. MMV. Is that clear? Now, shall we do it? Now, what are the raw materials here? A, line gap, B. Why line gap? The working should be mentioned below, then and there. Is that clear? Now, first, what will you fill? Actual quantity. Figures available with you? Yes, sir. Actual quantity. Here itself we have no. 830, 1190. Guys, the breakup of the lot is required only for price variance. Nowhere else we need that. 830, 1190. Put it up. 830, 1190. Add up, you get 2020. Yeah, you get 2020. Okay, write down 2020. Then immediately what will you do? Now this will go here 2020. Fine. For whatever reason you have consumed 2020, but at least this you should have consumed the standard mix. What is the standard mix? Given in the question 40-60. So write down here A should have been 40% of 2020 and B should have been 60% of 2020. So 2020 into 0.4 is equal to 0.6 is equal to figures 808, 1212, all fancy numbers. Now what is the standard price? Rupees 4, rupees 3. Now logically tell me, now what has happened? You should have consumed 808. You have consumed 830. Guys, correct. Now what has happened here? You have consumed how many kgs more? Come on, everybody. 22 kgs more of A. Every kg is valued at 4 rupees. So 22 into 4, 88. Favorable, adverse? Absolutely adverse. You've consumed more. Whereas, what happened for B? 1212. You could have consumed, but you consumed only 1190. You've consumed how many kgs less? Same 22 kgs less you have consumed. So you have saved into 3. How much is that? 66. Favorable, adverse? Favorable. So if you net off, you get how much? 22 adverse. Is that clear? Now look at this. What has happened? What has happened? Now between A and B, which is a costlier material? A. Now I should have consumed 808. I consumed how much? 830, or in other words, I consumed 22 kgs more of a costlier material, and I consumed the same 22 kgs less of a cheaper material. Now what I did, maybe the person whom I'm supplying to is my family member. Hence to him, I actually added more of a costly product and gave. Is that clear, guys? This is like when you go to this coffee shop, right? Ideally, they have that proportion of what? Of milk and the decoction. But since you are a regular favorite customer, he gave you more of a decoction. So now what he did, he gave more of a costlier product. Hence, when every time he gives a coffee to you, the company is having an adverse variance. Why? He gave more of a costly product. Are you guys able to understand? Guys, is that clear? Is that clear? Quantity overall is same. One tumbler only. Beyond that, he can't pour. Correct? But in the tumbler itself, composition, he can do this. No, guys, are you all able to understand? So because he used more of a costlier material, less of a cheaper material, what happened? He is resulting in an adverse variance. Is that clear, everybody? Guys, is that clear? Perfect. So 22 adverse. Now the next one, balancing figure, yield variance. Write down material yield variance formula. Standard quantity minus revised actual quantity into standard price. Come on, tell me, for A, what's the standard quantity? 800 you should have consumed. You have consumed how much? RAQ 808 into 4. B, 1200 you should have consumed. You have consumed 1212 into 3. So tell me, A, you should have consumed 8. You have consumed 800. You have consumed 808. 8 kgs more at the rate of 4 gives you 32 adverse. For B, you should have consumed only 1200. You consumed 1212. 12 kgs into 3. 36 kgs, 36 rupees more, hence adverse. Add the two, you get 68 adverse. Is that clear? Now what happens? Immediately tally. So 22 plus 68, add up, you should get 90. So do you get 90 adverse? Yes. Your daddy and daddy plus mummy gives you, I don't know, whatever that is. Fine. So yes, parents put together, whatever, guys. But you guys got the logic here and concept. Is that clear, guys? Is everybody able to understand? Guys, this is one very beautiful thing about this chapter, is that every time you finish a particular area, you can go check it. Arithmetically, whether you have done a mistake or not, that you can check. Don't worry, if the answer tallies, it doesn't guarantee that you have got the right answer. It can tally successfully with the wrong answer also. Is that clear? But at least calculation error you can avoid. Are you all able to get this? Any issues here? Guys, any problem? You guys are able to get this? Any issues here? Perfect. Done? So please go and update your library of adjustments. Write down. Write down. Material cost variance. MCV hyphen mix of RM with opening and closing stocks. With opening and closing stocks. Mix of RM with opening and closing stocks. Mix of RM with opening and closing stocks. Is that clear? Is that clear? Then semicolon, write everything. MCV, comma, MPV, comma, MUV, comma, MV, comma, MYV. All the 5. Write down, write down, write down. Are we done here? Now, guys, there is one thing I want to tell you. There is one thing I want to tell you which you should know. Now, guys, please focus here. There's a very important thing I want to tell you. Please focus here. Don't lose out on this. Now, guys, please focus. If you want something, please ask me. No, a very important thing. Material cost variance. What is the formula? Standard quantity into standard price minus actual quantity into actual price. Bifurcated into 2. Material price variance, material usage variance. Price variance formula. Standard price minus actual price into actual quantity. Usage variance formula. Standard quantity minus actual quantity into standard price. Very good. Now, standard quantity means what? For the actual output, what is the total quantity of material I should have consumed? Standard price, you know. For every kg of raw material, what is the price you should have paid? Now, actual price means what? For every kg purchased, what is the actual price I have incurred? Fine. Let us say, guys, I am calculating material price variance. Okay. And material usage variance. First thing you tell me, material usage variance. Standard quantity means what? For the actual production. What is the kg of raw material you should have consumed? Am I right? Whereas actual quantity stands for what? What is the actual quantity you have consumed? Or in other words, here actual quantity stands for what? Actual quantity consumed. Am I right, guys? Correct or not? So actual quantity always stands for actual quantity consumed. Where? For usage variance. Is that clear? Is that clear, everyone? Now, let's come to price variance. First, understand price variance. What are we trying to compute? We are trying to compute the efficiency or inefficiency of whom? Purchase manager. Purchase manager is responsible for purchase function. Clear with this? Clear with this? Now, here within bracket, standard price minus actual price. Every kg you should have paid 10 rupees, but you have paid 11 rupees. You have paid 1 rupee more. Guys, correct? Into actual quantity. My question to you is, here actual quantity, does it represent actual quantity purchased or does it represent actual quantity consumed? Are you understanding the issue here? Are you understanding the issue here? In this case, in case of usage, always consumed. Why? That only makes sense. Whereas here I am calculating the responsibility of efficiency or inefficiency of purchase manager. Now, in this case, should I take actual quantity as purchased or actual quantity as consumed? Now, guys, there are two different schools of thoughts, right? Means what? There are two different ways in which you can do it. Now, some people, what they say is actual quantity means actual quantity purchased. Why? For every kg he has purchased, he is responsible, no? Guys, correct? So, then and there, fixes responsibility. Are you all able to understand? The moment he purchases, fixes responsibility. Is that clear? In that case, guys, carefully listen. Here, actual quantity represents actual quantity purchased. But here, actual quantity represents actual quantity consumed. So now, on the top, what is this, sir? Actual quantity consumed or purchased. Now, always remember, if for the purpose of material price variance, they are calculating the variance at the time of purchase, in that case, please remember this. Like this, till now, question has not come. But if it comes, I want you all to be able to handle it. Sir, why are you teaching something out of the syllabus? It is mentioned theoretically somewhere in the corner of your study material. Anytime they can test on this. Is that clear? Now, sir, in this case, for the purpose of price variance, it is purchased. For the purpose of usage variance, it is consumed. In this case, what you need to do, first of all, don't calculate cost variance. You should not compute the material cost variance. Compute material price variance by taking actual quantity as actual quantity purchased. Compute usage variance by taking actual quantity as actual quantity consumed. Add the two, you will get cost variance. Are you guys able to understand? Are you all able to understand? It will never match if you first compute this. Why? Here I take actual quantity as actual quantity purchased. Here I take actual quantity as actual quantity consumed. How will it match with the total figure? So here, sir, what should I take? Actual quantity as purchased or consumed? This issue is there or not? Is that clear, guys? In this case, suppose if they have given in the question that variances are computed at the time of purchase, it means what? For the purpose of material price variance alone, actual quantity represents actual quantity purchased. For the purpose of usage variance, it is always consumed only. Are you guys able to understand? If I compute the variance at time of purchase, in that case, please do not compute the material cost variance first. Compute the price variance separately, compute the usage variance separately, add the two, arrive at material cost variance. Are you guys able to understand this? Are you guys able to understand this? Any issue here? Any problem here? Guys, clear with this? Suppose, if no, sir, I am only computing the price variance at the time of consumption, then it is okay, just like how we have done till now. Is that clear? Then what? Here also AQ stands for AQ consumed. Here also it is consumed. So in the numerator, overall, while computing your material cost variance, also you take only consumed. There you can do material cost variance segregated into two. Is this clear, guys? This understanding is very much important for your exams. Is that clear? Is that clear? So when it comes to material price variance alone, material variances in general, you have an issue. What is it? When you have stocks only, then it will have no. When my purchase is equal to consumption, I don't have a problem. Only when I have a stock, it's partly consumed and partly consumed and partly what remaining unconsumed as stocks. Guys, correct? In that case, only this issue comes in. Guys, correct? So in that case, I have two options. For the purpose of material price variance, I can take the actual quantity as actual quantity purchased, or I can take actual quantity as actual quantity consumed. The issue happens only when I take actual quantity as actual quantity purchased. In that case, what you need to do, don't compute the material cost variance. Material cost variance is equal to material price plus usage variance. Is that clear? If you take it as consumed, then it is okay. It is actual quantity. That is basically your variances are computed at the time of consumption. In that case, regularly how we have been doing it, you can do that. Is this clear, guys? Is everyone able to understand? Are you guys able to get this? And this is what I have mentioned here in our concept decoder. Look at this. Look at this. For price variance, please take your concept decoder. Now look at this. Under the doubt buster, I have kept it. Here, actual quantity. Now guys, one second. No. 1 second, guys. You tell me logically which is correct. You tell me, for the purpose of purchase material price variance, should I take purchase actual quantity purchased, or should I take actual quantity consumed? Which is logical? Very logical is purchase. This guy is responsible for purchases. then and there you do it. Guys, clear with this? Now, why is it correct? I will also tell you. Let us say this guy purchased 100 kgs. Correct? He consumed only 80 kgs. Correct? So actual quantity purchased is how much? 100. Actual quantity consumed is how much? 80. Is that clear? Now, which means in this case, closing stock is how much? 20 kgs, no? Guys, correct? No. One second. Just focus. Suppose if I compute the variance at the time of purchase itself, now every kg should have been purchased by paying 10 rupees. This guy paid 12 rupees, which means I compute how much is the variance? 2 rupees on the entire 100 kgs. So I say 200 adverse, correct? At the time of purchase itself, I'm calculating the entire variance. And whatever is the variance, this is abnormal, I take it to costing P&L. If I do that, I calculate the amount which is abnormal, take it to costing P&L. In this case, the abnormality, variance has been captured. Guys, correct? Which means both the quantity consumed as well as the closing stock will be valued at the standard price, 10. Why? Because the extra 2 rupees, I took it separately to the costing P&L on both the kgs consumed as well as the kgs unconsumed. Is that clear? But suppose if I calculate the variance only at the time of consumption, on these 80 kgs alone, I say, look, you should have paid 10, you have paid 12. I calculate the inefficiency, 2 rupees, and this alone I take it to my costing P&L. Am I right? Which means the closing stock will continue to be valued at 12 rupees, which include 2 rupees of inefficiency. Are you all able to understand? Are you all able to understand or not? So basically what I'm trying to say is, if I calculate the variance at the time of purchase, efficiency or inefficiency on the entire quantity will be taken to what? Costing P&L. So both my kgs consumed and my closing stock will be valued at standard cost. And this is good because actual stock valuation should not include any abnormalities. Is that clear? Suppose if I value my variances at the time of consumption only on the kg consumed, I compute the variance and take it to the costing P&L. On the kgs unconsumed, now I valued at the actual price. And subsequently, the next year when I consume, only then the variance will be taken into account. Is that clear? Till then, in this case, I carry forward my inefficiency to the next year. So my inefficiencies, I will let it escape if I actually value my variances at actual quantity consumed. Is that clear? So the very correct method is only taking into account the actual quantity purchased. On every kg purchased, you hold him responsible. Is this clear, guys? Is everyone able to understand? Any issues here? Any problem? Now, this much level of intricacy is there in your study material. They have explained it in theory pages. I'm sure you guys will miss it out. Now, guys, of late institute has been testing left, right and center. Like anything they are testing. So now you do not know when they can frame a question like this and they can do. Is that clear, guys? Is that clear? Now, in the same question which we have done till now, now actual data, we took actual quantity consumed, no? Guys, correct? This actual quantity consumed, I will use it for what? I will use it for usage variance. Whereas, if I am calculating my variances at the time of purchase for the purpose of material price variance, actual quantity represents actual quantity purchased only. Is that clear, guys? Are you all able to understand? In that case, don't compute the cost variance first. Compute the price variance, compute the usage variance, add the two to arrive at the cost variance. Are you guys able to understand? Is this clear, guys? Is this clear? All these things, I have just put it up as a small note here in your concept decoder. Look at this. Actual quantity for price variance, I have mentioned here. The actual quantity means actual quantity of materials purchased. Is that clear? If in the question material purchase is not given, then you can take material consumed. Now, material price variance can also be calculated by taking into account the material consumed as the actual quantity instead of taking material purchase if both the figures are available. In this question number 3 we did, both the figures were available, no? Guys, both the figures were available. Opening stock, purchases, closing stock. Correct? So here 35 plus 800. So 835 minus 5. How much was that? 830 kgs. Now, this is ideally the actual quantity consumed. This is the actual quantity purchased. In this question, I have both. The question, did it say anything? Variances are computed at the time of purchase. Have they given? No. Since it was silent, what we did? Sir, everything is computed at the time of consumption. Hence, we took AQ as actual quantity consumed. Is this clear, guys? Now, suppose if the question, just the same question they have just mentioned. So, calculate the variances, assuming that the variances are computed at the time of purchase. Only one variance will change, which is your material price variance. Now, because of this, your cost variance will also change. Is that clear? Hence, what will you do? For the purpose of material price variance, you will only take actual quantity as actual quantity purchased. However, for the purpose of usage variance, you will take actual quantity as actual quantity consumed. And arrive at the two, add it up, arrive at material cost variance. Is that clear? Is that clear? Now here, you need not use FIFO weighted average and all. Why? You need not use that, no? Because actual quantity purchased for price variance, only on the current period purchases, you need to do the calculation. So then on the previous period, they would have already done in the previous period. Guys, clear with this? Are you all able to understand? And current period, this one, usage variance, what is the formula? Standard quantity minus actual quantity into standard price. So standard price is same. Quantity alone variance. Here once again, you need not use FIFO weighted average. Are you guys able to understand? It depends on the wordings of the question. Sir, if the question is silent, no problem. You can take. If this method is also correct, but it does not serve the purpose of variance computation. What is it? Taking actual quantity as actual quantity consumed, strictly speaking, is not very correct. Clear with this, guys? However, we can also do it in exam. But if the question is silent, just write a note in this regard. Is this clear, guys? This is what I have kept in your doubt busters. Are you all able to understand this? This obviously will not know just by reading the book. So that's the reason I merged it along here, and I'm telling you, this is an excellent explanation hidden somewhere in your study material. It is hidden into multiple pages. Somewhere in between it is hidden. I'm sure many of you would not spot this out. That is the reason. Page by page, I analyzed and created this book. Honestly, I'm telling you, you can have the confidence. Nothing has been missed out from your syllabus. Clear with this, guys? Is everyone able to understand? So the same question, if they ask you, so compute the variances if, assuming that the variances are computed at the time of purchase, you know what to do. So don't compute material cost variance. So you need to compute actual quantity purchased, actual quantity consumed. Actual quantity purchased, use it for computing price variance. Actual quantity consumed, use it for usage variance. Add the two, arrive at the cost variance, and then from now on it's same. What? So you need to take from usage variance bifurcated to mix and yield. That is not a problem at all. Is this clear? Only one thing will change, your price variance. Because of that, your cost variance will change. Is this clear, guys? Have this in your mind. When will this issue comes? Generally when you have stocks, or in other words, when your actual quantity purchased is not equal to actual quantity consumed. Is that clear, guys? Right? Now this sum also, please mark it as important. Please mark it as important, and that's about this particular question. Are you guys able to understand? Literally, we have covered all the different possible adjustments in material costs itself. Is that clear, guys? Right? So first question we did was single type of raw material. Second question we did was mix of raw materials, right? Mix of raw materials we saw with losses. And the third sum, mix of raw material. This was also with losses, huh? With the loss and with the opening and closing stock. With the help of this, we also saw one more additional thing. When actual quantity purchased and actual quantity consumed are two different things, in that case, what you need to do in exam, we have seen that. Is that clear, guys? With this, all the possible adjustments in this segment of discussion, which is basically our material variances, is over. And with this, literally, we have done all the sums under your material cost variances. Is that clear? From now on, the chapter is going to be a little bit easier till the time we reach what? Fixed variance, because that's completely a different animal altogether. We will see it later, but as in, so the other two parts, that is labor and variable overheads, are more or less structured based on what we have learned in this particular segment called as material variances. Is that clear, guys? Right? So with this, I am concluding in this session. Please revise and practice all the sums we have covered till now, and most importantly, guys, whatever running notes I gave, certain important markings or not, please mark it. In case you have not done it, pause the video then and there and please do it. Right? So on that note, I'm signing off in this session. I will see you all in the next one. Thank you all so much. Bye-bye. Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now let's continue our discussion in this chapter, standard costing. So now we will move on to the second segment of this particular chapter, which is labor cost variances. So please take the heading, labor cost variances. Now in the center, write down labor cost variance. Now guys, material cost variance, what is the formula? Standard material cost minus actual material cost. Standard material cost, how will you get? Standard quantity into standard price. That is, you should have consumed so many kgs of raw material. Every kg you should have purchased at so and so rate. That gives you the standard material cost minus actual quantity into actual price gives you the actual material cost. Guys, clear? Now here we're talking about labor. In labor, now it is going to be standard hours into standard rate. I don't call it as price, right? Minus actual hours into actual rate. Is that clear, guys? Write down. That's all it is. Write down, write down, write down. Standard hours into standard rate minus actual hours into actual rate. Is that clear? Now, this can be bifurcated into two. One second. There, material price variance, correct? Here, we call it as labor rate. So, instead of material, it is labor. Instead of price, it is a rate. That's about it. Very good. Write down labor rate variance. Please write it fully. Please write it fully. Now, write down formula. If you can guess, it is very good. Yes, come on, very good. Standard rate minus actual rate into actual hours. Excellent. That's all. Next, on the other side. Now, there we had usage variance. Here we don't say we are using labor. We call it as labor efficiency variance. Write down labor efficiency variance. Please write it fully. Labor efficiency variance. This is similar to usage. Formula. Standard hours minus actual hours into, there was standard price, here put it as standard rate. As simple as that. Very good, guys. Very good. Now I'll give you the logic, don't worry anyways. Who's responsible now? I'll tell you. Branch this efficiency into 2. Now, what and what? There we did material mix variance. Here also it is called as a labor mix variance, or it is also known as labor gang variance. Gang means what? Group of people is called as a gang. You call it, no? So we are one gang, sir. Friendship, right? Gang, right? Gang means what? Collection of people. Similarly here, when I have more than one type of worker working, for example, skilled, semi-skilled, unskilled, the composition, deviation from the mix can be there. Are you clear with this? So I call it as labor gang variance. Now, what is the formula? Revise the actual quantity we did. Yes, sir. Revise the actual hours minus actual hours into standard rate. Excellent. That's all. Now, on the other side, what do we have? Labor yield variance, also known as labor yield variance, also known as, there I told you, usage, sub-usage. Here, efficiency, labor sub-efficiency variance. That's all. Write down labor sub-efficiency variance. Is that clear? What is the formula? Balancing figure. Standard hours minus revised actual hours into standard rate. That's about it, guys. That's all it is. Do not worry. I will give you the logic. But once again, now this is what I told you. Smart working. Spend more time on material. Labor and overage will be over. Labor and variable overage will be over. That's about it. Guys, clear? We have seen all kinds of complexities there. Now, little bit of here and there, minute adjustments around we will see as and when it comes. Is that clear? Yes. Now, once again, guys, now in labor, we are trying to compute what? Labor cost variance. Because of labor cost, how much is the variance? What is the labor cost I should have incurred? Standard labor cost is compared with the actual labor cost. Is that clear? Now in labor, I can have more than one type of a worker. Guys, correct? If I have only one type of worker, I have labor cost variance bifurcated into rate and efficiency. That's all. If I have more than one type of worker, sir, example, multiple skill set of worker, skilled, semi-skilled, unskilled, in that case, now there is a composition. What if I use more of a cheap labor, less of a costly labor, more of unskilled, less of a skilled if I use, then I'll get a favorable variance law. Guys, you are aware, right? Because of deviation in the mix, that concept will arise only when I have more than one skill set. If I have more than one type of worker, then efficiency variance is further bifurcated into labor mix or gang variance and labor yield or sub-efficiency variance. Is that clear, guys? Now, sir, what are we talking about in labor variance? Let us say, guys, a similar example I'll tell you. To produce 1 unit of FG, standard hours, I am allowed to take 10 hours of labor. Is that clear? I'm allowed to take how many hours? 10 hours of labor. And the standard rate, let us say, is 100 rupees per hour. Is that clear, guys? Are you all able to understand? Now, however, to produce 1 unit, I actually took actual hours was how much? Let us say the actual hours was 12 hours. Is that clear? And the actual rate, let us say, was rupees 90 per hour. Is that clear, guys? Is that clear? Now, first, labor cost variance. Now, what is the labor cost I should have incurred? So, to produce 1 unit, I should have spent 10 hours. Every hour, I should have paid 100 rupees. So, 10 hour into 100, ideally, I should have spent 1000 rupees. This is the standard labor cost. But actually, I spent 12 hours and every hour I spent only 90 rupees. So, how much is it? So, 12 into 90 gives you how much? 1080, 1800. 1080, 1080. Is that clear? So, which means you should have incurred a total cost of 1000. You have actually incurred a total labor cost of 1080. How much is the variance? 80. Adverse or favorable? Clearly adverse. You spend more. Is that clear, guys? Now, sir, why have I incurred 80 rupees more? Bifurcate this into two. What and what? Labor rate variance, labor efficiency variance. Now, labor rate variance, what is the formula? Sir, cost is made up of two components, labor cost. One is hours, the other one is rate. Now, because of rate, how much is the variance? Formula, standard rate minus actual rate into actual hours. What is the standard rate? Every hour I should have paid 100, but I paid only 90 on how many hours? On actual hours, 12. Now, how much is it? Every hour I paid 10 rupees less, which means I saved 10 rupees with the company for how many hours? 12. So, 120. Favorable or adverse? Favorable. Now, 1 second. Sir, who is responsible for the rate variance? HR manager. The HR manager. What does HR manager do? Guys, HR manager, what he does is, he negotiates the rates with the workers. Is that clear? Now, the management has told him, look, every hour you are allowed to pay a maximum of 100, right? But you go and try to negotiate the best possible rate with the, the labor union. You guys are aware, labor unions will be there. Guys, correct? Now, the HR manager, who is HR manager? Human resource, right? He goes and he negotiates. Now, the company allowed to pay him 100, but he had a very good negotiation skill. He ended up paying only 90. Guys, in companies, this is how it works. Let us say tomorrow you finish a CA, you finish your CA and go and get placed in a campus. Now, there is no standard amount. Everyone, whoever has scored so much marks, exactly, let us say you and your friend, both of you guys have cleared in the first attempt, exact same marks you've scored, but same job, same company, same person recruiting. But if you notice, both of you will be getting a different package. Why? It happens by way of negotiation. That's why they say salary negotiation is very important. Just like that, sir, this is the pay. They will always say less. You should command. You should say, look, sir, if you ask more also, then they will say, get out. You should know what you rightfully deserve, and there is absolutely no harm in asking the right amount. Say, sir, I feel I should get this much, sir. This is what I'm worth. They negotiate, and somewhere middle they come in. Clear with this. There is no fixed amount. This is not like a government job. Government job, they have a pay scale. So they have something called as pay commission. Based on that, they pay. Here, it's not like that. Private, you need to negotiate the package and all. Is that clear? with whom will you negotiate? So first they will negotiate with the technical people, but ultimately it's with the HR. Is that clear, guys? So the HR people are responsible for the rate. Now, guys, so they are responsible for what rate? Standard rate minus actual rate into actual hours. Why? They will not ask you to come and work for so many hours. Who asked you to come and work for so many hours? The production manager. The production manager is your boss. He makes you work. For how many hours the production manager is making you work, you are only responsible for the rate. Are you guys able to understand? Hence, here the HR manager is responsible for the rate variance. However, he doesn't have control over the hours. For how many hours the production manager asks the employees to work, on those hours he is responsible only for the rate. Are you guys able to understand the variance, the formula? Is that clear? So what is the formula? Standard rate minus actual rate into actual hours. Is that clear, guys? Right? Now on the other side you have labor efficiency variance. Now who is responsible for efficiency variance? Production manager. Is that clear? So the person responsible is going to be your production manager. Are you guys able to understand? So now what will you put here? Simple. Look, standard hours minus actual hours into standard rate. Now you should have taken a total of 10 hours, but you have taken, guys, how many hours has he taken? 12 hours into what? Standard rate is rupees 100. So you should have taken only 10. You have taken how much? 12. You have taken 2 hours more into 100. How much is that? 200. Adverse or favorable? Adverse. So now if you see, this HR manager has been super efficient. 120 favorable. Whereas the production manager has been super inefficient. How much? 200 adverse. Net off, it has become 80 adverse. Are you guys able to understand? And the logic for this you already know. You should have taken only 10. You have taken 12. So the difference is standard hours minus actual hours into why standard rate. Now the production manager is not dependent on the HR manager for anything. So if I take the actual rate, then I'm passing on the efficiency or inefficiency of the HR manager to the production manager. Hence, I am taking the standard rate. Are you guys able to understand? Exactly the same logic that we saw there. The only difference is there, it was purchase manager, production manager. Here it is HR manager, production manager. As simple as that. Is this clear, guys? Are you all able to understand? Is there any issue here? Is there any issue here? So now tell me, guys, what is the formula? Come on, tell me. First, labor rate, labor cost variance. Standard hours into standard rate minus actual hours into actual rate, bifurcated into 2. Labor rate variance and labor efficiency variance. Labor rate variance, who is responsible? HR manager, bracket, standard rate minus actual rate into actual hours. Why? I am responsible for the rate on every hour the production manager makes him work. Is that clear? Makes whom work? The workers work. That clear, guys? Right? So that is not in my control. So into actual hours. Well, whereas on the other side, labor efficiency variance, responsibility, production manager within bracket, standard hours minus actual hours into standard rate. Here, if I take actual rate, I'm not dependent on that guy. If I still take the actual rate, I'm passing on the efficiency or inefficiency of the HR manager to the production manager, which is wrong. So clearly we saw, look, because of labor cost, the company has lost 80 rupees. Sir, breakup, sir. Sir, this HR manager has saved 120. But production manager has actually lost 200. Net of the loss has been 80 rupees. So which means I will reward this HR guy and I will punish or take a corrective action on the production guy. Is that clear, guys? Are you all able to understand? Now, if the company deals in more than one skill set, efficiency variance is further classified into labor mix or gang variance and labor yield variance, also known as sub-efficiency variance. As simple as that. So because of deviation in the mix, we will capture here, where? In the mix variance. Because of deviation, the total duration, hours, we will capture it under yield variance. We will, whenever we do a sum, we will see that. Is that clear? This is the background. Now shall we get started? Guys, everybody, shall we get started? Yes, let's get started here. Question number 4. Question number 4. Now quickly, guys, nothing great. Nothing great. Very simple. Shall we get started? Yes. Now question number 4. The standard and actual hours of a firm are given as under. Standard time for the job. How much? 1000. Which means to do a job, you are allowed to take. They themselves have given 1000. Every hour you are supposed to pay 50. Actual time taken 900. Actual wages paid 36,000. Which is what can you calculate? You can calculate actual rate. How much is actual rate? Sir, totally I paid wages 36,000 for 900 rupees of 900 hours of work per hour. How much actual rate you can compute? How much is that? 40. So with this clearly, standard hours, standard rate, actual hours, divide the two, you will get actual rate. Just go plug and play. In this question, do you have your mix and yield variance? No, only one type of skill set. Is that clear? Go on, update. Let's do it quickly. Come on, let's do this. Let's do this. Question number 4. That's all. Don't spend beyond this. Very simple question. Question number 4. Write down. Write down, write down, write down. First, standard hours is equal to 1000 hours within bracket given. Every line item give the backing. Standard rate is equal to rupees 50 bracket given. Actual hours is equal to 900 hours bracket given. Actual rate is equal to within bracket first rupees 36,000 is the actual labor cost for an actual hours of 900 per hour. How much is the cost? Rupees 40. Is this clear, guys? Now one look you can tell me, guys, look at this, look at this. He was supposed to spend 1000, he has only spent 900, so efficiency variance will be favorable. He has only spent, he was supposed to pay HR manager 50 per hour, he has only spent 40, so efficiency rate variance is also favorable, hence overall also it will be favorable only. Guys, one look you can arrive at the conclusion, and you can also see which guy is favorable, which guy is adverse. Guys, one look you can tell this. This is the art of observation. Clear with this, guys? Come on, write down, write down. Labor cost variance formula, write down. Everyone tell and write. Standard hours into standard rate minus actual hours into actual rate. Figures, plug and play. 1000 hours into 50 rupees minus 900 hours into 40 rupees. Yes, 1000 into 50, you were supposed to spend 50,000 rupees, whereas you have only spent 9 4 36. Right, you've only spent 36,000, which means you've saved how much for the company? 14,000. Is it adverse or favorable? Favorable. Is that clear? Right. That's about your labor cost variance. Now, is it enough if I stop here? No. I need to segregate and find out to what extent which guy is responsible. First one, labor rate variance. Formula. Standard rate minus actual rate into actual hours. Now, what's my standard rate? Every year I should have paid 50. I have paid only 40. On how many hours? 900 hours. Is that clear? So, which means I pay 10 rupees less. I save 10 rupees every hour for the company. And now how many hours? 900 hours. So, 10 into 900, 9,000. Favorable, adverse? Favorable. Is that clear? Any issue? Any problem? No. Next one, labor efficiency variance. Formula. Standard hours minus actual hours into standard rate. Standard hours, you were supposed to spend 1000 hours, but you've actually spent only 900 hours. And what's the standard rate? 50, which means you've saved 100 hours for the company. Every hour you've saved. Every hour, what is the amount? 50. Correct. So 100 into 50 is going to be 5,000. Favorable, adverse? Favorable. Add up the two. Do you get your daddy or mummy? So whatever. Yes, so 14,000. Favorable. Are you getting it? Yes, guys. Are we done here? That's about it. Standard costing is that easy, guys. That's all it is. Go update your library of adjustments. Write down, write down, write down. Write down MCV, LCV hyphen. Just write down. Whatever I say, you just write down. LCV hyphen. Single skill set. There we saw a single raw material, mix of raw material. Here it is single skill set. Within bracket. Write down without idle time. Which means in the next question, with two idle time. Yes. Write down. Written down. Yes. Without idle time. Yes, that's about it. Are we done here? Done now. Okay. Shall we move on to the next one? Okay, guys. Let's move on to the next one. Question number 5. Now, guys, a good sum. Now, look at this. Question number 5. Now, the standard output of a product EXE is 25 units per hour in a manufacturing department of a company employing 100 workers. Okay, right. Now, 1 second, guys, 1 second. What have they mentioned? What have they mentioned? First line, you tell me. What do you understand? The standard output of a product X is 25 units per hour in a manufacturing department of a company employing 100 workers. Now, which means, what are they saying? To produce 25 units, how many hours are required? How many hours are required? 1 hour where 100 workers are parallelly working. Or in other words, 25 units production required 100 labor hours. Is that clear? Is that clear? What have they said? Read it carefully. It takes 25 units per hour in the department employing 100 workers. Means what? 100 workers, if they put their hands on and work continuously for 1 hour, then 25 units can get produced. Meaning what? 100 man hours together can produce 25 units. That is the meaning, no? Are you all able to understand this? A very important understanding. Don't say, sir, 25 units, sir. 1 hour, sir. No. 1 hour parallelly. In 1 hour, it will get over, provided 100 people are working. Suppose if you let only one person work, it will take him 100 hours to actually complete it. Is that clear? Both are same. One person working for 100 hours or 100 people continuously parallelly working for 1 hour, both are same. From the perspective of the company, cost same, no? Are you all able to understand? Yes. Next. The standard wage rate per labor hour is how much? 6. So what have they given? Standard rate. In a 42-hour week, the department produced 1040 units of X. Now, what have they given? Despite 5% of the time paid being lost due to abnormal reason. The hourly wages actually paid were 6.2, 6, 5.7 respectively to 10, 30 and 60 worker. Now, what have they given, guys? Now, every hour I should pay how much? Standard rate. Every hour you should pay only 6. But what this HR fellow has done, now he bifurcated the workers into 3 categories. 10 worker, 30 worker, 60. No, skill set, no. That guy did by himself. For the 10 workers, he paid how much? 6.2. 30 workers, 6. For 60 workers, 5.7. Sir, what happened, sir? Why? These 10 people, his friends, hence he paid 6.2. These 60 workers are relatives, hence he paid only 5.7. Enemies, hence he paid 5.7. 30 workers, strangers only. So why should we give them any benefit, or why should we actually trouble them? So normal, he paid 6. Is this clear? This guy followed differential piece rate, not piece rate, differential time rate he followed. Different. He actually, he introduced his own policy, running a company inside a company. Okay, so that's what this guy did. Are you clear with this? Wrong, wrong, absolutely wrong. Who asked him to bifurcate all these things? Every worker you should pay only 6 rupees, no? Guys, clear with this? That is also there in the sum. Now, calculate the relevant labor variances. Now, what is the issue in this question? I will tell you. Now, guys, I will tell you the main issue in this particular question. Now, now, guys, look, in this particular question, you guys tell me, to produce 25 units, I am allowed to take how many hours? 1 into 100, I am allowed to take 100 hours. Am I right, guys? Or in other words, to produce 1 unit, how many hours am I allowed to take? 100 divided by 25, 4 hours are allowed per unit. Guys, correct or not? Yes? Fine. Now, everyone please focus here. Which means, standard hours will be how much? Sir, what is actual production, sir? What is the actual production? They have given, they have actually produced 1040 units. Every unit you are allowed to take, guys, 4 hours. Am I right? So 1040 into 4 gives you 4160 hours. This is the number of hours you are supposed to take. Standard rate. How much is it? Every hour, sir, pay 6 only. Is that clear? Is that clear? Now, actual hours. How is the actual hours? They have given 42 hours. Right? Now, 42 hours, yes, 42 hours. 100 people are working, which means it is going to be 4,200 hours. Guys, correct? And what is the actual rate? This guy has followed something. Guys, correct? He has followed for 10 workers. Am I right, guys? So 10 workers, it was how much? For 10 workers, it was 6.2. 30 workers, it was 6. Then balance 60 workers, it was 5.7. Okay, this is what he did. No. All these things are fine. Now, guys, one second. Now, everyone, just focus here. Labor cost variance. What is it? Now, 1 second, guys. Over and above this, they have also given one more thing. 5% of the time paid are lost due to abnormal reason. Correct? Now, which means, what is the actual hours I'm paying them for? They came to my factory and worked for, they were present for 4,200 hours. Out of these 4,200, 5%, how much is it? 210 hours were actually abnormal idle time. Means what? Sir, power cut happened. Is that clear, guys? Are you all able to understand? Any problem here? Any issues here? Guys, any problem here? Any issues here? You guys are able to understand? Any issues here? Guys, everyone? No. Now, you guys tell me, they came to my office and spent how many hours in my office? 4,200. Out of this 4,200, 210 hours power cut. Guys, correct? Which means, you tell me, will I pay them for 4,200 hours or will I pay them for 4,200 minus 210 hours? I will pay them for the entire 4,200 hours. Why? Power cut, what will they do? That's your issue. Don't trouble me. You pay me for the entire 4,200 hours. Guys, correct? Now, the hours paid is going to be 4,200. Agreeing with me on this? However, the actual hours worked will be how much? They actually worked for how many hours? 4200 minus 210 gives you? They actually worked only for 3990 hours. Keep this aside. Is that clear? Now, labor cost variance formula. Now, standard hours into standard rate minus actual hours into actual rate. Am I right, guys? Right? Don't compute anything. We will do it. So, 4160 you should have taken at the rate of 6. But actually, I am paying you for entire 4,200. So, I will only take 4200. Am I right, guys? 4200 into actual rate. Okay, based on whatever it is, I will bifurcate and do it. Is that clear? Fine, perfect. Into whatever is the actual rate, that is not a problem. When we are doing, we will do it. I will bifurcate it into two. What and what? Labor rate variance, labor efficiency variance. Formula for labor rate variance: standard rate minus actual rate into actual hours. Guys, correct? Now, in this case, actual hours, I will take 4,200. Why? I am paying them for 4,200 hours. For the actual hours for which I am paying, I am responsible for the rate. Who? HR guy. Is that clear, guys? So here, the actual hours stands for actual hours paid only. Guys, correct? Now, come to efficiency variance. Now, in efficiency variance, what am I doing? I am judging the efficiency. Now, what is the formula for labor rate variance? Everyone. Standard hours minus actual hours into standard rate. Now, for you to produce 1040 units, you are allowed to take how many hours? Guys, the units produced, 1040 units he produced, actual output. Now you are allowed to take how many hours? You are allowed to take 4160 hours. Now, minus. Now, guys, if I take 4,200 here, you tell me 4,160 hours is the hours you should have taken. Whereas, if I say, but you actually took 4,200 hours into standard rate, if I do, the production manager will come and fight with me. Why? Look, now I actually took only 3,990 hours. This 210 hours, it is not my problem. Why? The machines were running only for 3,990 hours. This 210 hours, they came to the factory, they were sitting in the dark. Now don't ask me, ask the maintenance department. Is that clear? He will not take responsibility for this. Are you all able to understand? He will say, now when you are judging my efficiency, you compare the standard hours with the actual hours worked, not with actual hours paid. Guys, correct or not? That's how he will tell me, you are judging the efficiency. You should have taken 4160, but you have taken only 3990. Are you understanding or not? You are understanding this, everybody? Yes. So here I will say, so minus 3990 into every hour you should have paid whatever it is, 6 rupees. Is that clear? Or in other words, here actual hours stands for actual hours worked. That clear? Now, sir, here you have taken actual hours paid. Here also, correct, we have taken actual hours paid. Suddenly, here alone, you have taken actual hours worked. Don't worry, I will introduce another guy called labor idle time variance. Is that clear? Now, who is responsible for idle time variance? Just now I told you, the maintenance department. Now, to the extent of this idle time hours, sir, idle time hours, how do we calculate? Simple. Idle time is nothing but actual hours worked minus actual hours paid. Guys, correct? The difference between the two is only idle time. So I will say, or in other words, is nothing but idle time into standard rate. Are you all able to understand? Guys, are you guys able to understand? And I will fix this responsibility to whom? The maintenance department. Is that clear, guys? Now, if you notice, what is idle time, guys? What is idle time? Idle time is nothing but actual hours worked minus actual hours paid. Am I right? Whereas here, I am taking only actual hours worked. Am I right? But everywhere I should be taking only, here it's actual hours paid only. So basically what happens, this actual hours worked and minus actual hours worked will get knocked off. Effectively I will get what? Actual hours paid only. Guys, are you clear with this? But I'm segregating and telling, look, to this extent HR manager is responsible. To this extent my production manager is responsible. To the extent of idle time variance, my maintenance department is responsible. Or in other words, idle time variance, what is the formula? Directly you can say idle time into standard rate. Remember, always it is an adverse variance. Is that clear? It can never be in favorable. Are you all able to understand? Are you guys able to understand this? Are you guys able to understand this? So now, guys, come down and write. This is question number 5. Write down, guys. Question number 5. You guys are able to understand this? So write down. This is the only difference. That's about it. But for this, nothing else is there. Is that clear? Now, in this question, guys, in this question, what is the standard hours? So first write down standard hours is equal to, now guys, write down here, take a red ink and write within bracket. So to produce 1 unit you need to take 100 hours, correct? Sorry, 1 unit, no, 25 units. Sorry guys, 25 units is equal to 100 hours. So to produce 1 unit you can take 100 divided by 25, which is equal to 4 hours. Is that clear? So standard hour calculation, please be very clear. 1 hour into 100 workers or 100 men gives you 100 man hours. Is that clear, everybody? Yes, good. Are we done? Next one, write down, guys, write down standard hours. What is the standard rate, everyone? How much is it going to be? Rupees. This is okay, I'm sorry, this is standard hours per unit this is standard hours per unit. Sorry, we will put that column, don't worry, we will put that column. What is the standard rate? It's given yes, it's given as 6. Okay, are we done? Next, actual hours. 1 second. So actual hours, so it is going to be, first they have given how many workers. Okay, we will do one thing. We will put everything in a tabular format. Can we do that, guys? Okay, let's do this. Write down here. Please write down. Please write down. Please write down. Okay, 1 second. I will first write down and then you can copy this number of workers. Then you can have standard hours. Then you can have standard rate. Then you can have standard hours into standard rate. Then here have actual data. Here you can have number of workers. Then you can have actual hours paid. then you can have idle time, then you can have actual hours worked, then you can have actual rate, then you can have actual hours paid into actual rate. Please have these columns. I hope you guys are understanding this. If not, don't worry, we will do it. Once we do it, you will get everything. Shall we get started? Is the template ready for everyone? Hello, please answer back. No, that you are answering very positively. Shall we get started? Now, first guys, so how many workers are working? Everyone. Standard data. Hello guys, come on, tell me. 100 workers. Perfect. Perfect. Now, forget about that. Now, what is the standard hours? Now, 4 hours per unit. Am I right? Guys, correct? So, maybe on the top itself you can write down. So, total standard hours is going to be 4 hours into what is the actual production? 1040 units. How much is that? It's going to be 4160 hours. So, write down, guys. Write down bottom. Overall, 4160 hours. And every hour you are supposed to pay at the rate of rupees 6. Correct? Perfect. Leave it there. Next. Actual data. This guy has come up with one idiotic style. What is that? 10 workers. Write down. 10 workers. Then 30 workers. 60 workers. Right? Now. 1 second. Now, what is the actual hours paid? Now, every hour works for 42 hours in a week. Am I right? Not works. I'm paying them for 42 hours in a week. 42 into 10 is equal to 30 is equal to 60 is equal to how much? 420. 1260. 2520. Add up everything. What is the total actual hours paid? Come on, how much is it? Total is 4200 hours. Total workers is 100. Is that clear? No. 1 second. Now they have also given idle time is what? 5 percentage. Am I right? Now 1 second. 42 into 0.05. So 42 into 0.05. In a week, how many hours they are working every worker? 42 hours. I'm paying them for 42 hours. Out of that, 5 percentage is idle time. How much is it? 42 into 5%. 2.1 hours. Guys, correct? Every hour, every worker is losing 2.1 hours. Correct? Into 10 is equal to write down. 30 is equal to write down. 60 is equal to write down. How much? It's going to be 21, 63, 126 totally. So 210 hours are gone. Am I right, guys? So which means how much the actual hours worked? Subtract these two, or you can say balance. So how much is that? 399 hours only. The first workers are working. 1197. Second category of workers. 2394. Third category of workers. Total up. How much? 3990. Is that clear, guys? Are you guys able to understand? Or in other words, you can do this, guys. 1 second. Now what you can do? Line item wise, you have the figures, no? This into 0.05. 5% will give you this. 0.95 will give you this. Are you understanding this? Out of the total hours paid, 5 hours is pertaining to abnormal idle time. Balance is pertaining to actual hours worked. Is that clear? Now what is the actual rate? 6.2. 6, 5.7. Don't add this up. Now, multiply, get the figures. So, 399 into 6.2 gives you. Sorry, guys. Sorry. Actual hours paid into actual rate. I stand corrected. So, 420 into 6.2. It's going to be 2604. This is the total amount incurred, no? Yes, sir. 1260 into 60. Sorry, into 6. I'm sorry, guys. 7560. Then 2520 into 5.7 gives you 14,364 add up. 24,528. This is the total labor cost actually incurred. Am I right, guys? Yes, but how about your total labor cost you should have incurred? 4160 into 6. So write down 24,960 and just total that amount. 24,960. Is that clear, guys? Is that clear? And standard hours can also be totaled. It's 4160. That's about it. The workers can also be totaled 100. Is that clear, guys? Now can I say this is the total labor cost I should have incurred? Guys, correct? Whereas this is the total labor cost I've actually incurred. Is that clear? Guys, now, write down below, come down, right on the top. Labor cost variance. Now, guys, please write down the formula. Write down standard hours into standard rate minus actual hours paid into actual rate. Is that clear? I am saying this is the total hours paid. Are you all able to understand? Guys, clear with this, right? And the bifurcation of hours, actual hours worked and idle time happens between your efficiency variance and your idle time variance. Is that clear? Rate variance is not bothered about this. Is everyone able to understand? Now, direct figures I have. Yes. Now, standard hours into standard rate. This is the figure. Rupees 24,960 is the total labor cost I should have incurred. Whereas what is the labor cost I've actually incurred? 24,528. Am I right? Yes. So write down 24,528. How much is the difference? So 432, favorable or adverse? Why favorable? Because I've actually incurred less than what I was supposed to incur. Is that clear? So it's going to be favorable variance. Are you clear with this? Right? Now, once again, this gets bifurcated into 2, 3. It gets bifurcated into 3. Now branch it into 3 parts, guys. Right on. This is going to be, yes, labor rate variance. Responsibility. HR. On the right extreme corner, pull an arrow. Labor efficiency variance. In between, one guy comes in. Who's he? Labor idle time variance. Take a red ink and put it. Labor idle time variance. Is that clear? First time we are doing, hence we are doing it. Is that clear? Now put up the formula. Labor rate variance. Formula, guys, come on. Standard rate minus actual rate into actual hours. Everyone paid. Excellent. Here he is not bothered about work done all. For every hour paid, I'm responsible for the rate. Is that clear? On the rightmost extreme, come on, tell me, guys. Standard hours minus rating. Actual hours worked. Is that clear? Normal font, normal ink into standard rate. Now, when you are judging my efficiency, compare the standard hours with the actual hours I actually took, I worked to finish the job. Is that clear? That shows my efficiency level. But the difference between actual hours worked and actual hours paid, that's an idle time. Remove it and pin it on to the maintenance department. Is that clear? They should have ensured that there was no power cut. Sir, how can they ensure, sir? It is not like our houses, guys. It is not like our houses. In industries and all, power cut will not happen that frequently. If at all it happens, they should actually deal with the department and accordingly they should have an agreement or whatever it is. Industrial usage is different. It is not like our household domestic connection or even commercial connection. Commercial means classroom we are taking. This is commercial. Even here we don't have much say. Industrial, if you're running a factory, it's different. There you don't have, there's a different rate tariff itself. Is that clear? They can negotiate the rates with the department. Is that clear? Electricity department. Is that clear? So now in this case, what is the formula, guys? Write down here. Idle time into standard rate. Is that clear? Don't take actual rate. Why? If you take the actual rate, once again, you're passing on the efficiency or inefficiency of the HR fellow here. Standard rate. I am only responsible for the idle time. Is that clear, guys? Is everybody able to understand? This logic you should know. So remember, guys, whenever you have idle time, there are two things: actual hours paid actual hours worked. The difference between that is called as idle time. Will you guys remember this? Yes. Now come on, do this. Now labor rate variance. Now you need to do it in 3 parts. Am I right, guys? Now you need to do it in 3 parts. Correct? So standard hours minus actual hours into actual hours, standard rate minus actual rate into actual hours paid. Am I right, guys? So now first, tell me, guys. So now first 6 minus first category, what is that? 6 minus 6.2 into first category, what is the actual hours paid? 420. Am I right? Copy paste, that's all. 420. First let's fill in the figures. Next one, 6 minus 6 into how many hours? Guys, 6 minus 6 into actual hours paid, 1260. You guys are getting it. Look at the screen. Look at the screen. Guys, you guys are getting it. 6 minus 6 into 1260. Third category, 6 minus 5.7 into 2520. Respective category, I am computing it. Right? So, here it was what? Into 1260. 1260. The next one is 6 minus 5.7 into 2520. Come on, figures. First part, you should have paid 6. You paid 6.2. 0.2 more into 420. 84, of course, adverse. Next one, 0. So, standard rate is equal to actual rate. No variance. Here, I am paying 0.3 rupees less. So, 2520 hours into 0.3. 0.3. How much is that? 756. Adverse or favorable? Of course, it's favorable. So, 84, you adjust that. You get how much? 672. Adverse or favorable? Net is favorable. Is that clear, guys? That's about this part. Next one. On the other hand, do efficiency and then come back to idle time. Efficiency. Efficiency. Standard hours 4160 minus actual hours worked 3990. Write down 4160 minus 3990. I only worked for these many hours into what's the standard rate? 6. Come on, tell me, guys. 4160 minus 3990. So, actually saying, if you notice, these guys have been efficient. They could have taken 4160, but they finished the job in just 3990 hours. Don't take the power cut. That is not on me. Is that clear? So they saved 170 hours for the company, and every hour has costed them 6 rupees. Would have costed them 6. So 170 to 6 gives you 1020. These guys were giving a favorable variance. Is that clear? Just imagine, had I taken the idle time variance to them, then I would have thought these guys are inefficient. Guys, clear with this? So now what's my idle time variance? It's going to be idle time. What's my idle time, guys? Simple. 210 into 6. Put it up here. It's going to be 210 into 6. It's going to be 210 into 6. Rupees 1260 adverse. Is that clear, guys? Are you all able to understand now? Immediately check it. Check it up. 672 minus 1260 plus 1020. You get your daddy, mummy. Yes, sir. 432, you're getting it. Is it matching? Right? And that's about it, guys. Are you all able to understand? So remember one thing. If you have an idle time variance, now what will you do? What will you do? Now in this case, come on, tell me all the formulas. First one, labor cost variance. Standard hours into standard rate minus actual hours paid into actual rate. Bifurcated into 3. Leftmost, labor rate variance. Responsibility. HR manager within bracket. Standard rate minus actual rate into actual hours paid. I am not bothered about breakup. I am only bothered about for how many hours I am paying. I am only bothered about that. On the right extreme, labor efficiency variance. Responsibility. Production manager. Standard hours minus actual hours worked into standard rate. Why standard rate? I am not dependent on the HR manager on anything. So if you take actual rate, his efficiency or inefficiency gets wrongfully passed on to me. Now in between, idle time formula, idle time variance formula. Idle time into standard rate. Idle time is basically actual hours worked minus actual hours paid. Clear with this, guys? That's about it. Are you all able to understand? Just go and update your library of adjustments. Write down LCV hyphen single skill set within bracket with idle time. LCV hyphen single skill set within bracket with idle time. LCV hyphen single skill set within bracket with idle time. LCV hyphen single skill set within bracket with idle time. Is that clear? Is that clear, everyone? You guys are done with this? Okay, perfect. Now, just one thing I want to add on. just one thing I want to add on here. Now, guys, always remember, idle time variance captures only your abnormal idle time. It captures only your abnormal idle time. Is that clear? Is that clear? So only when there is abnormal idle time, that gets captured under your labor idle time variance. Is that clear? Are you all able to understand? Any doubts? No doubts, huh? Next doubt should be what? What about normal idle time, sir? Why that is not included? Now, what do you mean by normal idle time? What do you mean by abnormal idle time? Normal idle time, guys, we have seen this in treatment of losses. Normal idle time is unavoidable, expected in advance. I know. Now, for example, lunch break. Correct? That is a normal idle time, expected. Now, guys, normal idle time is already factored into account in your standard hours. In this case, we said to produce 1 unit, you are allowed to take how many hours? 4 hours. Ideally speaking, who knows? Maybe it would have only been 3.5 hours. But I know half an hour is actually your lunch time. I would have factored this into account in my standard hours itself. That is the concept of expected idle time, nothing but normal idle time. Are you guys clear with this? Hence, it is never calculated separately. That is only called as normal idle time. It is already included in your standard hours computation. Guys, are you understanding? What I'm telling you is, if there is an expected idle time, which means lunch break example, that is already included in your standard hours. To produce 1 unit, I am allowed to take 4 hours. Maybe I will actually be working only for 3.5 hours, half an hour lunch break. I'm including it here in that, in the standard hour computation itself. So per unit, you are allowed to take 4 hours. Overall, you're going to produce 1040. Totally, how many standard hours? I have included this. The normal idle time is already factored into account in your standard hours itself. That's the reason we saw it. No, it doesn't get valued separately. Normal loss will be valued separately. Yeah? No, similarly here, it is a normal loss only. It is like a normal idle time. Guys, are you all able to understand? Whereas, over and above my expectation, if you lost something, take it separately and pin the responsibility on that respective person. Are you guys able to understand? Hence, normal idle time is already factored in your standard hours computation. Only abnormal idle time is separately there. That alone needs to be taken into account, and we need to separately show that this is the amount attributable to the maintenance department's inefficiency. Are you guys clear with this? If someone tomorrow asks, you should be able to answer that. Is everyone able to understand? Right? So that's about this particular question number 5, guys. Right? So it's already time now. Fine. So with this, I am concluding this session. Please revise and practice all the sums we've covered till now, and I will see you all in the next one. Thank you all so much. Bye. Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now, let's continue our discussion in this chapter, standard costing. So, till now, we have covered material cost variances, and we have also covered labor cost variances. Under that labor cost variances, we have seen single skill set without idle time and with idle time. This is what we have seen till now. Shall we proceed, guys? Yes. But before we get started, I want you all to tell me the formulas, right? So labor cost variances. First, labor cost variance. What is the formula? Standard hours into standard rate minus actual hours into actual rate, right? It is bifurcated into 3. 1, labor rate variance. Wait, who is responsible? HR department. Formula: standard rate minus actual rate into actual hours paid. Excellent. Then rightmost extreme, labor efficiency variance. Who is the responsible person? Production manager. Standard hours minus actual hours worked into standard rate. Very good. In between. So idle time variance formula. Idle time into standard rate. That's all. Then labor efficiency variance further categorized into 2. Labor mix or gang variance and labor yield or sub efficiency variance. Very good. Now mix variance formula. Revised actual hours minus actual hours into standard rate, always standard rate only on the other side. Standard hours minus revised actual hours into standard rate. As simple as that. You guys have only told the formula. Very good, guys. With this, let's move on to the next question number 6. Let's get started, guys. Let's get started, shall we? Yes, question number 6. Now, labor type, now they have multiple skill set, mix of skill set, which means in this case you will have mix or gang variance and your sub efficiency or yield variance. Is that clear? Now, unskilled and skilled workers. Now, guys, look at this. Standard hours per unit is given 2 hour, 1 hour. Standard rate given, actual hours given, actual rate is given. The workers produced actual output. How much is it? 11,000 units. Find out the labor variances. Now, guys, 1 second. In this question, they have given standard rate is available. Yes. Actual hours. Yes. Actual rate. Yes. Now, standard hours per unit is given and the total number of units actually produced is given. So, total standard hours we can arrive. So, 2 into 11,000, 22,000. 1 into 11,000, 11,000. So, it's going to, these two is going to be your standard hours. Is that clear, guys? Directly given. Now, in this question, what is the new thing we are going to do? You have mix of skill set, but you do not have idle time. Is that clear, guys? Are you all getting it? Right? The next sum which we will do, we will be seeing mix of skill set with idle time also. That is the maximum possible complexity in this area. Are you guys able to understand? Shall we get started? Come on, do it. Question number 6. Everyone, I want us to finish this question in the next 5 minutes. Possible? Absolutely possible. Let's do this, guys. Question number 6. Do it. Now first let's prepare that dabba. Shall we prepare that dabba? Yes, let's do that. Write down. First, 1 second. Write down. Skill set. Then what do you have? Standard, standard data. We'll have standard data under that. Standard hours, standard rate, standard hours into standard rate. Why we do that? For the purpose of computing labor cost variance. Is that clear? Do it. So it's going to be standard data under that standard hours, standard rate, then standard hours into standard rate. Is that clear? So this is your standard data. Next one, guys. Actual data. Actual hours. Actual rate. Actual hours into actual rate. Is that clear? Perfect. Now, let's begin. Now, first, what do you have? Unskilled and skilled. Put it up here. I'm using a short form. Exam not allowed. Unskilled and skilled. US and yes. I am putting it. Not allowed in exam. Now, come on, guys. Let's do this. Standard hours. Now, we know how much is standard hours. So, we can write down actual output. Sir, 11,000 units I have produced. For every unit, you are allowed to take 2 unskilled labor hours. Similarly, 11,000. Every unit you can take 1 skilled labor hour. It's going to be 22,000, 11,000. Is that clear? Everyone? Yes. Standard rate rupees 10, rupees 20. Given is actual hours given 22,000 hours and 8,000 hours. 8,000 hours. Actual rate, everyone, 11 and 22. All these are given, guys. Now what do you do? Just marry the figures. So it's going to be 2,20,000. Once again 2,20,000. Add up. You get a total of 4,40,000. What is the meaning of 4,40,000? For the actual production of 11,000 units, overall, the labor cost you are supposed to incur is how much? 4,40,000. But how much you've actually incurred? Come on. 22,000 into 11. 2,42,000 and so 8,000 into 22. 1,76,000. Am I right? Add up, you get 4,18,000. Write down 4,18,000. What is the meaning of this? However, actually to produce 11,000 units, I've incurred only a total of 4,18,000 rupees of labor cost. Is that clear? So now what do we do? Come on, everyone. So write down in the center labor cost variance formula. Everybody, standard hours into standard rate minus actual hours into actual rate. Now standard hours into standard rate, total figure. So 4,40,000 rupees is the cost allowed to be incurred, minus the cost actually incurred came up to 4,18,000. Very good, guys. So now tell me, how much is it? So 22,000 favorable, adverse? Absolutely favorable. Why? You were allowed to incur 4,40,000. You've just incurred 4,18,000, which means you've saved up 22,000 rupees to the company. So any cost saved will go on to increase your actual profit. Am I right, guys? Yes. So now this labor cost variance is bifurcated into only 2, not 3. Why? In this question, idle time is not there. Clear with this. So only 2. What is it? Labor rate variance, labor efficiency variance. Labor rate variance formula. Yes, standard rate minus actual rate into actual hours. Very good. Now in this case, now 2 guys are there. Who are they? Unskilled and skilled. Unskilled, standard rate minus actual rate. Standard rate, every hour the HR was supposed to pay 10, but he ended up paying how much? 11. So 10 minus 11. He's responsible for this on the actual hours. It's 22,000. Am I right, guys? Write down into 22,000. How much was that? So he is paid 1 rupee more for each of the 22,000 hours. So 22,000 adverse. Very good. Next one, skilled. 20 minus 22 into 8,000. Very good. Write down. 20 minus 22 into 8,000. Huh? So he is paid 2 rupees more on each of the 8,000 hours. It's going to be 16,000 adverse. Total 38,000 rupees adverse. Whose responsibility is this? HR manager. They have done a very bad job. So they have actually spent 38,000 rupees more than what they were supposed to spend. Am I right, guys? Is everyone clear with this? Any problem here? Yes. That's about it. Okay. Next one. Now on the other side we have labor efficiency variance formula, guys. Standard hours minus actual hours into standard rate. Now first, unskilled and skilled. Standard hours. How much was that? 22,000 hours. This is what you are supposed to spend, but you have actually spent 22,000 into standard rate. 10, yes, 10. So literally it's going to be 0. Am I right? You were supposed to spend 22,000. You have only spent 22,000. There is no efficiency variance with respect to unskilled workers. With respect to skilled workers, you could have taken 11,000 hours, but you've just taken 8,000 hours into standard rate. How much is that? 20. So put it up here. All the logics we have seen already. So now it's going to be what? So it's going to be 3,000 into 20. How much is that? 60,000. Favorable or adverse? Absolutely favorable. You could have taken 11,000 hours. You've only taken 8,000. 3,000 hours you saved for the company. It's going to be 60,000 favorable. Now immediately check. So 38,000 favorable. 38,000 adverse. 60,000 favorable. Net off, do you get your daddy? Yes, you get 22,000 favorable. Guys, are you getting it? Any issue here? That's about it. Now, are we done? No. So now, efficiency variance is further classified into 2. Come on, make that classification. What and what? Labor mix variance and labor yield variance, right? So write down here, it's going to be further classified into, now I call it as labor gang variance. Shall we? Yes. So labor gang variance, and this is labor yield variance. Is that clear, guys? Labor yield variance. Yes. Formula. Now, here the formula is going to be revised actual hours minus actual hours into standard rate. Now I am comparing actual hours with actual hours, but here I am just finding out the deviation in the mix. Actual hours in standard mix is compared with actual hours in actual mix. Because I deviated from the mix, how much is it contributing to my variance? Is that clear? Because of the total hours duration, how much is the deviation that is captured under yield variance? Is that clear, guys? Clear cut segregation of duties. Come on, how do we do that? Template, you guys know. Yes, so skill set, then yes, then we have revised actual hours, then we have actual hours, standard rate, then we have labor gang variance. Is that clear? Yes. Now skill set, unskilled, line gap, skilled. Why this line gap? Yes, for the working of RAH. Now first column, which one will you fill? Actual hours. We know the figures. How much are they? 22,000 and 28,000. Put it up here first. So 22,000 and 28,000. 8,000. Overall 30,000. Immediately what will you do? This 30,000 total should be fine in RAH 30,000. For some reason, you have actually taken 30,000 hours. Fine. But this at least should have been in what proportion? 22,000 is to 11,000. Or in other words, this should have been in the ratio of 2:1. Guys, had you consumed or had you taken the overall 30,000 hours in the ratio of 2:1, what is the number of hours for unskilled and skilled? Come on, guys, tell me. So it's going to be, can I say this is 2:1 means 2/3 and 1/3? Guys, correct? So I will say this is going to be 30,000 into 2/3, 30,000 into 1/3. How much and how much? Going to be 20,000 and 10,000. Is that clear, everyone? That's about it. What is the standard rate? So it's going to be rupees 10 and rupees 20. Is that clear? So now what do you have here? You should have taken 20. You have taken more, 22,000, 2,000 more at the rate of 10. How much is it? 20,000 adverse. Whereas for skilled, you could have taken 10,000. You have only taken 8,000. You saved 2,000 hours at the rate of 20. 40,000 favorable. Is that clear? So now net off you get 20,000 favorable. Is that clear, guys? Is that clear? Now what is the meaning here? Now which is costly, unskilled or skilled? Skilled. Now what they have done, instead of 20,000, they have taken 2,000 hours more of cheap labor, unskilled. And how have they achieved this? By sacrificing 2,000 hours of a costly labor. Is that clear? So they have consumed less of a costlier labor, more of a cheaper labor. Hence, they have saved some money for the company to the extent of 20,000 rupees. This is the meaning of mix or the gang variance. Is that clear? So because of deviating from the proportion mix, how much is the variance is what we calculated here. Are you guys able to understand any issue here? No. Very good. Let's move on to the next one. What is that? Labor yield variance. What is the formula? Now, it's the balancing figure. It's going to be, look, overall standard hours minus revised actual hours into standard rate. Logic, I am comparing standard hours with the actual hours. But here, standard hours is at standard mix, but I'm comparing actual hours at the standard mix. So here, the deviation in the mix is not captured. Only the deviation in the total hours is getting captured. Why? Because the deviation in the mix is already captured in this gang variance. Are you guys able to understand this? This is exactly what we have seen in material variances. There we spent a lot of time. Here, it's now easier for us. Is that clear? Shall we get started now? So directly we can do it. No need dabba. Correct? Because all the figures we have. Unskilled and unskilled, skilled. Come on, guys. Standard hours for unskilled 22,000 minus 20,000 into 10. And here 11,000 minus 10,000 into 20. Come on, guys. Tell me. Now, 22 minus 20. So you should have taken 22. You've taken only 20, which means 2,000 hours into 10 you've saved. How much is that? 20,000 favorable. Whereas here, you should have taken 11,000. You have only taken 10,000. You've saved 1,000 at the rate of 20. 20,000 favorable. Is that clear, guys? Overall, how much is that? 40,000 favorable. Is that clear? So now your gang variance 20,000 favorable, your yield variance 40,000 favorable. You add the two, you get your daddy, immediate daddy. So what is that? 60,000 favorable. Are you getting it? Now, what is the meaning of this? What is the meaning of this? Look, overall, your workers have reported that there is 60,000 rupees. Because of efficiency, we have saved 60,000 rupees. But ideally, if you see, because of efficiency, they have saved 40,000. However, because of deviating in the mix, right, using more of a cheaper labor and less of a costlier labor, because of that mixed deviation, they have saved 20,000. So literally speaking, genuinely because of the efficiencies, they have only saved 40,000 rupees. Because of the deviation in the mix, they have saved 20,000. Overall, they have saved 60,000 rupees because of the total hour duration. Is this clear, guys? This is how you need to interpret. Are you guys able to understand? Which means I will reward them only for this 40,000 favorable. This, anyone if they mix it, they will definitely get this variance only. Are you all able to understand? Once again. Now, guys, your efficiency variance compares what with what? Efficiency variance. Standard hours minus actual hours. Am I right, guys? So in my efficiency variance, I compare standard hours with actual hours. But for the purpose of mix variance, in between I introduce a guy called revised actual hours. Is that clear? Now what we do here, it's the same story once again, guys. Now, what does my daddy compare? It compares standard hours with what? Actual hours. Am I right, guys? It compares standard hours with actual hours. Who does this? Come on, tell me. Labor efficiency variance, compare these two. Now, this is made up of what? Gang variance and yield variance. Now, gang variance compares revised actual hours with the actual hours. Am I right, guys? Who does this? Gang variance. Labor gang variance. Is that clear? Hence, the balancing figure. Standard hours and revised actual hours is being compared by whom? Is being compared by labor yield variance. Are you guys able to understand? So labor yield variance compares this. Are you all able to understand? Guys, is this clear? This is what we saw, no? So standard hours and actual hours. Who compares? Standard hours and actual hours. Efficiency variance. Under that, gang variance compare RAH with AH. RAH with AH. The balancing figure, standard hours and revised actual hours are compared under yield variance. Is that clear? So here I compare actual hours with actual hours. Then what am I comparing? Actual hours at standard mix with actual hours at actual mix. This purely captures the deviation in the mix, not the deviation in the total hours. Whereas this captures what? Purely the deviation in the total hours, not the mix. Standard hours is at standard mix. Revised actual hours is the actual hours at standard mix. So both are at standard mix. So mixed deviation is not being compared here. Only the hour deviation is being compared here. Is this clear for everyone? Are you guys able to understand? This is the way to learn the subject. Are you all able to understand? You guys only told the formula. Did I ask you to mug up anything? No. And that's about this area, guys. Please go and update your library of adjustments. Write down. Write down. This is question number 6. Write down. LCV hyphen mix of skill set within bracket without idle time. LCV hyphen mix of skill set within bracket without idle time. LCV hyphen mix of skill set within bracket without idle time. Are we done? Guys, are we done here? That's about this particular question. Shall we move on to the next one? Okay, guys, that's about this question. Now here, question number 6A, I want to give you guys this one as a homework. Will you do it? Yes, nothing great here. Please do it, guys. Please do it. Nothing great at all. Please do it. Okay. Now let's move on to question number 7. Right. Mark this sum as important. Mark this sum as important. Important from an examination perspective. Shall we get started? Guys, let's do this. Now, will you guys get it right? Sure. Okay, fine. Let's do this. Now, NPX Limited uses standard costing system for the manufacturing of its product X. The following is the budget data given in relation to labor hours for the manufacture of 1 unit of product X. The company manufactures the output FG called product X. Right, guys? Now, they are saying to produce 1 unit of product X, the following is the standard. I need 2 skilled hours, 3 semi-skilled hours, 5 unskilled hours. Totally, I need a total of 10 hours. Standard rate is given 6, 4 and 3 for skilled, semi-skilled, unskilled respectively. Is that clear? Guys, yes. In the month of Jan, a total of 10,000 units were produced. The following are the details. Once again, now can I compute the standard hours? Yes, standard hours will be how much? The respective hours is what you are allowed to take per unit. Multiply with the 10,000 for the actual output. What is the number of hours you are allowed to take? You will get it clear. 20,000, 30,000, 50,000. That's all, no? Standard hours you can get. Standard rate you have? Yes. Now, in the month, actual data is given. What have they given, guys? Skilled, semi-skilled, unskilled. 18,000 hours, 33,000 hours, 58,000 hours. Total actual hours is 1,09,000. Rate is also given. What is this rate, guys? Actual rate. Now, they have given the values also. Is that clear, guys? Right? This is the actual labor cost. Now, the actual idle hours abnormal during the month is given. 500, 700, 800. Total is 2,000 respectively of skilled, semi-skilled, unskilled, and the total is given. Is that clear? Calculate the labor variances. Also, show the effect on labor rate variance if 5,000 hours of skilled labor are paid at the rate of 5.5 and the balance were paid at 7. This is part 2. We will do separately. Now, part 1. Now, guys, we know to do this, but one thing I want you guys to tell me. Now, this is idle time. Am I right? Guys, this is idle time. Now, actual hours paid, right, includes idle time. Correct? Actual hours paid means it will include idle time. From that, if I subtract idle time, I will get actual hours worked. Suppose actual hours worked is given. To this, if you add the idle time, you will arrive at actual hours paid. You guys know that? My only question to you, in this case, this actual hours given, no? Is this actual hours paid or actual hours worked? Actual hours paid or actual hours worked? Are you understanding the question? Actual hours only, you are right. Whether it is actual hours paid or actual hours worked, if it is actual hours paid, from this I should subtract this idle time to arrive at actual hours worked. Suppose this is actual hours worked means I should add my idle time to arrive at actual hours paid. Are you understanding the issue? Now, what do you think? Is it actual hours paid or actual hours worked? How many of you say actual hours paid? Okay. How many of you say actual hours worked? Correct. Now only you will do this. I mean, what does it mean? I don't know. You don't know. Okay. Why do you guys say actual hours paid? They have given the actual rate, multiplied the two, arrived at the value, no? Which means what? This is actual hours paid only, no? That is the reason they are multiplying with the actual rate and arriving at the labor cost. You pay them for actual hours paid or actual hours worked. You pay them for actual hours paid. So since this is given, clearly you can't take an assumption. You need to know that this is actual hours paid. Are you guys able to understand? Very good, guys. Very good. I'm very happy. Right? This is how you need to interpret. Is that clear? If you make a mistake here, it will completely change the answer. Are you understanding the issue here? This will not strike you today. Later on in the last revision, it will strike you. That's the reason I'm creating the doubt and I'm clarifying it then and there. Is that clear, guys? This is actual hours paid, which means idle time is also given. From that, if you subtract idle time, you will get actual hours worked. Actual hours worked is required for labor efficiency variance, and based on this only your gang and yield variance will be computed. Is this clear, guys? Is everyone able to understand? Any problem here? With this, shall we get started? Let's do this. Let's do this. Come on, guys, everybody. Let's start. Question number 7, huh? Yes, 7. A good question, guys. A perfect way to sum up the entire discussion we have done till now. Now, let's do this. Shall we get started? Okay, let's get started. Skill set. Then I have standard data. Standard data, what do you have? Standard hours. Standard rate. This we do for the purpose of labor cost variance, SH into SR. Is that clear? Okay, perfect. Then actual data, a little bit more space we need. Why? Idle time and all these things we have. Yes, come on, tell me, guys. Come on, come on, come on. Actual hours paid. Very good. Yes, then you have idle time. Then you have actual hours worked. Then you have actual rate, and then be careful, actual hours paid into actual rate. Is that clear? You guys have understood all these things, why we do it and all? You guys are clear with this, right? This single sheet is going to give you a good tracker for the entire sum. That's about it. Is that clear? Shall we begin? What are the skill set? How many skill set do you have? 3 skill set. Who are they? Skilled, semi-skilled, and unskilled. Fine. And then you can have a total also. Quick, 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 quick. Do it fast. Shall we begin? Now, standard hours. Yes, sir. So 10,000 into 2, 10,000 into 3, 10,000 into 5. So it's going to be 20,000, 30,000, and 50,000. Am I right, guys? Write it down. Write it down. 20,000, 30,000, and 50,000. Standard rate given. Nothing needs to be done. So rupees 6, rupees 4, rupees 3. All the data is given. Actual hours paid given. 18,000 hours. Then 33,000 hours. 58,000 hours. That's all. Next, idle time given once again. 500, 700, 800. So which means actual hours worked. Come on, actual hours worked. If you want, here you can pull an arrow and write. This is nothing but actual hours paid minus idle time. Ideally, it's all abnormal idle time only. 18,000 minus 500 is 17,500. 33,000 minus 700, 32,300. Then 58 minus 800, 57,200. Is that clear? What is my actual rate, guys? Rupees 7, rupees 3.5 and rupees 4. Is that clear? Now let's do the other, the totaling columns here. So now SH into SR, how much is that? So 2000 into 6. So it's going to be overall rupees 1,20,000. Once again, 30,000 into 4, lakh and 20,000, 1,50,000, 3,90,000. Yeah. The total is going to be 3,90,000. What is the meaning of this 3,90,000? The total labor cost you are supposed to incur, called as standard labor cost. Am I right, guys? Yes. And guys, be careful. Now here it is going to be actual hours paid into actual rate. This column into this column. Marry the figures. How much? 18,000 into 7. How much? It's going to be 126,000. 33,000 into 3.5, 1,15,500. And then, how much? 2,32,000. 4,73,500. Now tell me, how many of you calculated these figures? Now, waste of time, it was already given in the question. Okay, observation, guys. That's all I'm saying. It's okay. But I'm telling you, oh, why do you waste your time? Is given in the question. No. Clear with this. Actual as paid into actual. That's how we found this was actual as paid. Clear? The entire thing is given in the question. Why do you want to do it again? Is that clear? Now we have all the data. Shall we get started, guys? Now don't wait. Come on, let's get started. First one. Labor cost variance. Now, guys, many students generally have this doubt. They've asked me in the past tense. I'm telling, sir, you are doing it in a graphical format and all, flowchart format. Can we follow that in exam? The answer is yes. Sir, we want to do it one below the other. Labor cost variances. Part 1, part 2, part 3. Like that we want to do, sir. Can we do it? Absolutely yes. It is your choice. But guys, in exam, please write it fully. Labor cost variance. Sir, can we use SH, SR and all? Yes. You can use it, but finally you should write it where SH stands for standard hours, SR stands for standard rate, AH paid stands for actual hours paid, AH worked stands for actual hours worked, AR stands for actual rate, IT stands for idle time. You need to write the meaning of abbreviation. Everywhere you use short form, but once you should definitely write at the beginning or at the end. Somewhere you should write down what the short forms stand for. Is that clear, guys? That is how generally in exam they accept. Now write down labor cost variances formula. Yes, standard hours into standard rate minus, very good, actual hours paid into actual rate. Is that clear? Now skill set wise we need to do, but anyways, this is the beauty of the dabba. We already have the figure. How much is that? The total labor cost we're supposed to incur was 3,90,000, while the actual labor cost you've incurred is 473,500. Write it down here. 473,500. So now, how much is it? Obviously an adverse variance. How much? 83,500 adverse. Is that clear? Now you have incurred 83,500 rupees more than what you were supposed to incur. Is this clear, everyone? Yes. Now what do? Branch it into 3. Very good. You should branch this into 3. Not 2, it is 3. Good. Come on, do it, guys. That's all it is. The entire chapter talks only about this. Right? Now what are they? Labor rate variance, left side. Rightmost, labor efficiency variance. In between, labor idle time variance. Labor rate variance formula. Standard rate minus actual rate into actual hours paid. Excellent. Responsibility. HR department, he is not bothered about actual hours worked. He is only bothered about for how many hours I should pay. For those many hours, I am responsible for the rate difference. Is that clear, guys? Logic, that's about it. Now write down. What are the multiple skill set? Yes. Skilled, semi-skilled, unskilled. Okay, fine. Now, what are they, guys? Standard rate, how much is that? Standard rate is going to be, okay, standard rate minus actual rate. Here, first one, 6 minus 7 into actual as paid, 18,000. So standard rate minus actual rate into actual as paid. Don't look at the question. Everything is there here in this dabba. That's why we did this. So into how many hours? 18,000, huh? Yes, it's going to be into 18,000. So, yes. How much is this? Every hour you are paid, you should have paid 6, you are paid 7, you are paid 1 rupee more. So, 1 rupee into 18,000. So, you paid 18,000 rupees more, hence it is 18,000 adverse. Is that clear? Next one. Next one. 4 minus 3.5. 4 minus 3.5 into 33,000. Now, what has happened here for semi-skilled? You should have paid 4. You paid only 3.5. You have saved 0.5 with the company on how many hours? 33,000 hours. So 0.5 into 33,000, 16,500 you have saved. Hence, it's a favorable variance. Next, unskilled. You should have paid 3, but you have paid 4 on how many hours? 58,000 hours. Is that clear? So now, how much is this going to be? 58,000 adverse. Net off. So 58,000 plus 18,000 plus 6 minus 16,500. Huh? You get 59,500 adverse or favorable? 59,500 adverse. Is this clear, guys? This is one leg. This is one leg we have got here. Is that clear? Fine. Next one. Idle time variance. So now idle time variance formula. Yes, it's going to be idle time into standard rate. You already have these figures. Skilled, semi-skilled, unskilled. We know this is always an adverse variance. Idle time 500, 700, 800 into standard hours. How much? 6, 4 and 3, is it? Yes. So into 6, 4 and 3. How much is that, guys? 3,000 adverse. 2,800 adverse. 2,400 adverse. Add up. How much do you get? How much? 8,200 adverse. Is that clear, guys? So this is another thing. Is that clear? Next, labor efficiency variance. I am bringing it down here. So labor efficiency variance. Everyone, formula. Yes. Once again. Yes, guys. Tell me, what is the formula? Standard hours minus actual hours worked into standard rate. Is that clear? Anyone has any problem here? No. Fine. So this is going to be the formula. Yes. Okay. So now, what is it? Skilled, semi-skilled, unskilled. Okay. Now standard hours minus actual hours worked. Go to that above dabba. Standard hours. First, let's fill the standard hours. 20,000, 30,000, 50,000. Huh? Write on 20,000, 30,000, 50,000. This is the hours you were supposed to take. Whereas actual hours worked was how much? 17,500, 32,300, and then 57,200. Guys, you know where to pick this, right? Here, this column on the top. Is that clear? Now multiply this with standard rate. What's my standard rate, guys? 6, 4 and 3. 6, 4 and 3. Come on, guys. Tell me. For S, you should have taken 20,000. You have taken only 17,500. You've saved 2,500 into 6. 15,000 favorable. Am I right, guys? Yes, next one. For semi-skilled, you should have taken 30,000, you have taken 32,300. So 2,300 you have taken more into 4, 9,200 adverse. Is that clear? Next one. For unskilled, you should have taken 50, you have taken 57,200, 7,200 more into 3, 21,600 adverse. Yes, that's about it. So add up 21,600 plus 9,200 minus 15,000. So 15,800. Am I right, guys? Going to be 15,800 adverse. So now immediately what should you do? Check. You're getting your daddy, is it? So your labor rate variance plus idle time variance plus efficiency variance should be equal to your labor cost variance. Is it matching? Is it matching? 59,500 plus 8,200 plus 15,800 gives you 83,500 adverse. Hence it is matching. Is that clear? Are we done with the question? No. What happens? Now, efficiency variance should be further classified into two. What are they? Labor mix or gang variance and labor yield sub-efficiency variance. Is that clear? Shall we quickly do this? That's about it. Let's get started. Let's get started. So now, first, let's do this. What is it? Labor gang variance, mix variance, whatever it is. Formula. Yes, very good. Revised actual hours minus actual hours into standard rate. Shall we do this first? Yes. So now what do you do? Skill set we have. So we need to put this a dabba. Am I right? Revised actual hours. Then you have actual hours. Then you have a standard rate. And then you have a labor gang variance or mix variance, whatever it is, right? Skill set, skilled line gap, unskilled line gap, semi-skilled, sorry, skilled, semi-skilled, unskilled, sorry, this sequence is very important, we cannot change that. Yes, skilled, semi-skilled and unskilled. Okay, so now you can total this. Now first thing, what will you do? First, you will take actual hours. Come on, tell me, guys, what is the actual hours? Now, guys, 1 second. We will take only actual hours worked or paid. Obviously, in your efficiency variance, what do you take? Actual hours worked. And under efficiency variance, only these two comes in. It is only worked. No question of taking actual hours paid. Is that clear? It is only worked. If you want, here itself you put it. This is actual hours worked. Are you all able to understand? Because this comes only under what? This comes only under your efficiency variance. Efficiency variance takes only actual hours worked. We are not bothered about actual hours paid and all. Are you guys able to understand? Any problem here? Now, write down. So now, this is going to be first actual hours worked figures. So yes, it's going to be 17,500, 32,300, and then 57,200. Total is 1,07,000. Immediately what will you do? Put it here under the total of RAH. 1,07,000. Okay, for some reason you have taken 1,07,000, but this 1,07,000 at least should have been in the standard mix. What is the standard mix, guys? 2:3:5. Am I right, guys? Is that clear? So 2:3:5 means 2 plus 3 plus 5 is 10. So 20%, 30%, 50%. Am I right, guys? Guys, correct? Right? So here you can write down, it's going to be 107,000 into, say, 2 by 10. 107,000 into 3 by 10 and 107,000 into 5 by 10. Is everyone able to understand this? Right? So 107,000 into 0.2 is equal to 0.3 is equal to 0.5 is equal to figures. So 21,400 for skilled, 0.3, 32,100 and 53,500. Am I right, guys? Yes. What is the standard rate? Now we have the figures with us. How much is that? 6, 4 and 3. Now gang variance. Now you should have taken 21,400. You've only taken 17,500. So which means you have saved 3,900 into 6. How much is that? 23,400 favorable. Is that clear? Next one. So you should have taken 32,100, but you have taken 32,300. More you have taken. 200 hours into 4 is going to be 800 adverse. Similarly here, 53,500 you should have taken. You have actually taken 57,200. You have taken 3,700 more into 3. 11,100 adverse. Net off. You get how much? So 11,900, 23,400 minus 11,900. 11,500 favorable. Is this clear, guys? You get how much? 11,500 favorable. Is everybody able to understand this? Guys, is this clear? No. Understand what has happened here. Now, 21,400 minus 17,500. How much you got? 3,900. So here, skilled is the most costliest labor. I have consumed 3,900 hours less. Where? In my skilled. However, in my semi-skilled, I consumed how many hours more? Instead of 32,100, I consumed 32,300, which means I took 200 hours more of semi-skilled. That's correct. And here I have taken how many hours more? 3,700. 53,500 and 57,200 difference. How much? 3,700. What I did, instead of spending 3,900 hours of skilled labor, I reduced this 3,900 and I used 200 hours in semi-skilled and 3,700 hours of unskilled. Obviously, instead of spending more time using a costlier labor, skilled is costly, I spent that time using a cheaper labor force. Hence, I saved some money to the extent of 11,500. This is what your gang variance says. Because of deviation from the mix, how much is the amount you are saving or incurring extra? In this case, since I am spending less of a costlier labor, more of a cheaper labor, I have a favorable variance since I save some money for the company. Is that clear, guys? Is everyone able to understand? That's about it. Now let's move on to the next one. What is that? Labor yield or sub-efficiency variance. Labor yield variance. Here, what and what do we compare? So this is going to be standard hours minus revised actual hours into standard rate. Logical. You guys know the reasoning. Now here I compared. I find out because of the total hours duration difference, how much the variance. I compare the standard hours, which is at the standard mix, with the revised actual hours, which is actual hours at the standard mix. So the fixed deviation is not captured here. Only the duration, hour deviation is captured here. Is this clear, guys? Have the clarity and move around. No need to mug up anything. Write down. So now it's going to be skilled, semi-skilled, unskilled. Okay. Now you have the standard hours calculation. You guys know that. How much? So 20,000, 30,000. 50,000. RAH, do you have it? Just now we computed. Pick the figures from here. 21,400, 32,100, 53,500 into standard rate 6, 4 and 3. Is that clear? Now, tell me guys, how much is it? Now, you should have taken 20,000. You have taken 21,400, which means 1,400 more into 6. 8,400 adverse. Next, 30,000 you should have taken. You've taken 32,100. 2,100 more into 4. How much is that? 8,400 adverse. Is that clear? Then 50,000 minus 53,500. You have taken 3,500 more into 3. 10,500 adverse. Is that clear? Overall, how much is this? 27,300 adverse. Is this clear, guys? So now immediately check it. 27,300 minus 11,500. That's favorable. Net 2. You get 15,800. Daddy. You get efficiency variance. You get it, guys? Correct. Now, if you see, sir, 15,800 only, no, sir, efficiency variance. To that extent only, I will penalize them. No. These guys were super inefficient. Look at this. This is ideally the sub-efficiency. Ideally speaking, their efficiency was 27,300 less. Now, if they go to their boss and tell, look, this is the amount I have incurred extra, the boss will scold. Hence, what they did, now they actually, did some mix variance. Now they used more of a cheaper labor, less of a costlier labor. From the mix variance, they got 11,500 favorable. To that extent, these two got netted off. They reported only an efficiency variance of 15,800 adverse. Only if you segregate this and see, now you will know, look, you guys were super inefficient. You covered this up using your mix variance, and you said net of my efficiency was only 15,800. Are you guys able to understand? If we do not segregate and see this, how will we be able to clearly find out to what extent they are efficient? Guys, are you all able to understand? That's the beauty of this particular standard costing chapter. Is that clear, guys? Right, please go and update your library of adjustments. Oh, Rosh, sorry. There's one more part of the question. Okay, fine. That's about it, guys. That's about it. This sum is over. First part of the question is over. That's about it. Now, let's move on to the next one. Now, part B of the question, they have said, suppose, also show the effect on labor rate variance if 5,000 hours of skilled labor. Now, forget all these things. They're talking about labor rate variance. Now, they're saying 5,000 hours of skilled labor is paid at the rate of 5.5. Balance is paid at the rate of 7. Now, currently, what are they saying? Skilled labor is fully paid at the rate of 7. They are saying, no. Suppose, out of those 18,000 hours, 5,000 hours are paid at the rate of 5.5. Balance 13,000 hours are paid at the rate of 7. In this case, what will happen is what they are asking. Shall we do this, guys? Shall we do this? Yes. Let's do this. Now, please take down here. Ideally, the first one was part A. Write down part B. Part B. Now, tell me, guys, labor rate variance. What is the formula? Yes, come on. Standard rate minus actual rate into actual hours paid. Excellent. Logic, everything we have seen. Is that clear? Now, first, 1 second. First, let's talk about skilled. Okay, guys, let's talk about skilled. Now, in skilled, what are they saying, guys? In skilled, what are they saying? Now, overall, how many hours of skilled are there? 18,000. They are saying first 5,000 hours are paid at the rate of 5.5. The balance 13,000 hours are paid at the rate of 7. Am I right? So now what do you do here? Write down. What is the standard rate? Yes, 6 minus first 5,000 hours I am paying at the rate of 5.5. So into what? 5,000. Then immediately 6 minus the balance hours I am paying at the rate of 7. So into 13,000. Is that clear? Then, so how much is this? 6 I should have paid. I'm paying only 5.5, which means I'm saving 0.5. Am I right, guys? So 5,000 into 0.5 is 2,500 favorable. Here, instead of paying 6, I'm paying 7. 1 rupee more into 13,000 gives me 13,000 adverse. Is that clear? Guys, are you all able to understand? The net is how much? The net is 10,500 adverse. Is that clear? Next, now we can go to semi-skilled and unskilled. Correct? Semi-skilled, unskilled. Now, semi-skilled, standard rate 4. Actual rate, look at the question, 3.5. This is same only, ba? Same. So, I am paying 3.5 on 33,000 hours. Yes. How much is that? So, now it's going to be what? So, I'm paying 0.5 less. So, 33,000 into 0.5. 16,500, is it? 16,500? Favorable. And how about unskilled labor? I should have paid 3. I am paying 4 on 58,000 hours. So it's going to be 58,000 adverse. Correct, guys? Knock off. Add up everything. How much you get? So 10,500 plus 58,000 minus 16,500 gives you 52,000 adverse. Huh? Yes, you guys are getting this. 52,000 adverse. Not favorable. This is adverse. Is this clear? Everyone, you guys are able to follow? Nothing great here. You guys are able to understand? Any issue here? Guys, any problem here? They have just asked for what will be the scenario. So what will be the impact on my labor rate variance if this happens? So we have computed. Is this clear, guys? That's about it. Nothing beyond this. Please go and update your library of adjustment. Mark this as important. Are we done? So this is question number 7. Write down. Labor LCV hyphen mix of skill set within bracket with idle time. LCV hyphen mix of skill set within bracket with idle time. LCV hyphen mix of skill set within bracket with idle time. Are we done here? Is that done? Guys, done. That's about this particular question. Mark this as important. A very fine question. This sums up all the adjustments covered in this particular segment called as labor cost variances. Are you guys clear with this? Everybody, you guys are done? Excellent. Shall we move on to the next one? Great. Now, please take the next question number 8. Shall we begin? Okay, now look at this. This was what? Past exam question. September 2024 attempt. Now, single question. They had asked both material and labor. A perfect way to sum up our discussion on material and labor cost variances. Shall we quickly do it? Exam question, assume it stands. You are sitting in the exam hall. This has come in your attempt. How will you do it? Bring that survival instinct. Shall we get started? Let's get started. Question number 8. PG company produces a standard product and sold in a packet of 10 kg. The standard cost card per pack is as follows. Direct materials they've given. So A and B. So for every unit of FG, you need 4 kgs of A, 8 kgs of B, and the standard price is given 50 per kg, 40 per kg. Clear? Next, direct labor. 6 hours are required. Every unit should take 6 hours, and every hour you are supposed to pay 20 rupees. The company manufactured and sold 1600 packets during the month, and the actual data of material and labor recorded are as under. What have they given? Direct material, actuals they have given, guys. Direct material 7000 kgs at the rate of 40, 12,500 at the rate of 45. So A and B, actual quantity is given. Everyone? Yes. Actual price is given. Yes. Labor hours paid. Now for 2 different categories of workers, what have they given? Skilled 6,000 at the rate of 25, semi-skilled 4,000 at the rate of 20. Now, 1 second, guys. In the standard data, have they given any skilled, semi-skilled and all? Guys, in the standard data, have they given any skilled or semi-skilled? Nothing. You should have only taken how many hours? Overall, every unit should take 6 hours. That's all is given. No. Hello. Guys, that's all they have given. Am I right? However, here they have computed differently. Is that clear? Efficiency level and all, it's not given. Next one. I mean, sorry, your skill set and all is not given. Next, 5% of the time paid was lost due to abnormal reason. You guys know what to do. Idle time. So, calculate the following variances indicating their nature, favorable or adverse. Material cost, price, usage, mix, yield. All material variances. Next, labor, cost, rate, efficiency, idle time. Stop. That's about it. So you need not compute your mix and yield variance and all. Ideally, it's not there. You don't have multiple category. These guys did it. So they have done. I think this was tested for 10 or 12 marks. I'm not sure about that. Whatever it is, a past exam question. Now, quickly shall we do it? You guys are confident now? Guys, that's all it is. Your exam ready already. That's about it. This chapter is so easy. For those who mug it up, it's extremely difficult. Trust me, guys, it is difficult for those who mug up. Now, you might have thought, why is sir teaching for so many hours? In the last 2-3 sessions we did, put together only, we did about 5 sums, 4 or 5 sums. Now, in this session itself, it's been 1 hour. We've already covered 2 questions and we are doing the 3rd question now. This is the reason I'm telling you, if you take that time to sharpen the axe, you can go around and prepare, I mean, if you take more time in your preparation, execution will take lesser span of time. That's about it. That's the smartest way to actually crack your professional courses. Shall we begin? Let's do this. Write down. Question number 8. Guys, this is ideally a revision question. There is nothing great. I'm just keeping it as a way to sum up this discussion. Shall we do it? I want you all to participate. First, write down part 1. What is part 1? Yes, write down material cost variances. Is that clear? Shall we begin? Yes. So write down. So first one, one second. We will prepare the dabba. We need to prepare, no? Yes, and yes, all the variances are required. Write down raw material. Yes. So 3 types, only 2 types. Okay. Now next we need to have standard quantity, standard price, then standard quantity into standard price. Am I right, guys? Yes. Similarly, actual quantity, actual price, actual quantity into actual price. That's about it. No, simple. This is all it is. Now, what are the different types of raw materials? A, B. That's about it. That's about it, right? Only 2, no? Okay, fine. Now, tell me, guys. So, yes, tell me. What are the data given? Whatever is given first, let's plug it. Standard rate, standard price is available. Huh? How much? So 50, 40. Next, actual quantity is available. Yes, I have actually consumed 7,000 kgs of A, 12,500 kgs of B. Actual price 40, 45. Correct, guys? Next one. What have they given? What is the actual output, guys? How many units did I produce? 1,600 units I produce. Every unit should have taken 4 kgs of A, 8 kgs of B. So 1600 into 4, 1600 into 8 will give me my standard quantity. Am I right? So here itself write down. You should mention all these things to the examiner. So how much is A? 1600 into 4. And here it is 1600 into 8. Am I right? Into 4. Here it's going to be 1600 into 8. So figure 1600 into 4 gives you 6,400, 12,800. Is that clear? Everyone, that's about it. Am I right, guys? Now what we need to do? Just multiply this, marry the figures. 6,400 into 50. So 3,20,000. 12,800 into 40. 5,12,000. Add up. 8,32,000 ma. What happened? Calculator quality deteriorated, huh? So not your mistake. Correct only. Okay. So 7,000 into 40. 2,80,000. 12,500 into 45. Come on, do the calculations, guys. Everybody do it. How much? 5,62,500. Add up. 8,42,500. Is that clear? So this is going to be the total material cost you should have incurred, and this is the total material cost you have actually incurred. Figures available? Yes, plug and play. That's all. Let's do this. You guys know the formula. Just plug and play. That's about it. Come on, guys. First one. Yes. So material cost variance formula. Standard quantity into standard price minus actual quantity into actual price. Now A and B put together, standard quantity to standard price we have just computed. How much is that? Rupees 8,32,000. Is that clear? Minus AQ, actual quantity to actual price, 8,42,500. Sir, in exam can we do it like this? Absolutely yes. That's why we are putting so much dabba and all. presentation ready. What we are doing in the classroom is presentation ready. Clear with this? So now how much is it? 832,000 minus 842,500. So 10,500 adverse or favorable? Adverse. Is that clear? 10,500 adverse means what? You have incurred more than what you are supposed to incur. Is that clear, guys? So 10,500 adverse. Branch it into 3 parts. Only 2 parts. No one replied. Only one student is replying. Guys, come on. 2 parts only. Where 3 parts? You cannot have 3 parts. Only in labor you can have 3. That too, an idle time is there. In this question? No. You have idle time, no, in this question. Labor only I was telling. So here it's only 2. No matter which question, for material cost variance is always 2 only, no. Correct? Okay. Fine. Now branch it into 2. What and what? Material mix variance. Price variance. Material price variance. Material usage variance. Correct? Price variance. Who is responsible? Purchase manager. Formula. Standard price minus actual price into actual quantity. Is that clear? And how about the other side? Usage. Standard quantity minus actual quantity into standard price. That's about it, guys. Very good. Very good. That's why I'm doing this sum, so that it's a perfect recap of the entire discussion. Next one. Now, come on, let's do this. A and B. Yes. A, B. Now, standard price minus actual price. 50, 40. 50 minus 40 into actual quantity. Now, you should have paid 50. You paid only 40. You have saved 10 rupees. For how many kgs? 7,000. It's going to be 70,000 adverse. Favorable. Good. 70,000 favorable. Attention in the class. Next, 40 minus 45, the whole into 12,500. So now you should have paid 40. You have paid 5 rupees more on 12,500 kg. So 12,500 into 5, 62,500. Adverse net to how much? 7,500 favorable. Is that clear, guys? That's about it. Next one. Usage variance. Yes, once again. A, B. Standard quantity minus actual quantity to standard price. 6,400 minus 7,000 into 50. You should have consumed 6,400, but you have actually consumed 7,000, which means 600 kgs more into 50. 30,000 adverse. Is that clear? Next, for B, you should have consumed 12,800, but you have consumed 12,500 into 40. How much is that? So you have saved 300 kgs into 40, 12,000. Favorable. So net to 18,000 adverse. What will you do? Daddy, okay. So check. 17,500 favorable, 18,000 adverse, net of 10,500 adverse. You're getting it? Check that. Always check it. That's all. No. Further grandkids. Yes. So further classify into 2 more. What and what? Material mix variance, material yield variance. Is that clear? Mix variance. Formula. Revised actual quantity minus actual quantity into standard price and yield variance. Yes. Standard quantity minus revised actual quantity into standard price. As simple as that. You guys are getting complete control, right? Very good. That's very, very important. Shall we begin? Now, revised actual quantity. So now, come on, guys. Let's do this. One sec. So here, what do we do? We will put the DABA format. Okay. So raw material. Then RAQ, then AQ, SP, then mixu. What ma? Mix variance. Material mix variance. Come on, do it. So what are the products? A line gap, B Y line gap, RAQ. Under that we need a calculation working. Else you should put a star, come down, working note and all. No need. Then and there do it. First column, which one will you fill? Actual quantity. Right. Fill it up, fill it up. How much? How much? 7,000, 12,500 total. 19,500 immediately. RAQ total 19,500. Now, fine, you have consumed 19,500, but this at least should have been in what ratio? Yes, this should have been in what ratio? 4:8. Am I right? Or this is nothing but 1:2. Am I right, guys? For every 1 kg that you pick from A, 2 kg should come from B. 1:2 should have been maintained. Am I right, guys? Are you all able to understand? Yes. So now 1:2 means what? 1/3 and 2/3. So 19,500 into 1/3, 19,500 into 2/3. Am I right? Put it up here. Put it up here. So it's going to be 19,500 into 1/3, 19,500 into 2/3. 6,500 is equal to 13,000. Is that clear? Now how about your SP standard price? 50 and 40. Now A, you should have consumed 6,500. You have consumed 7,000, which means 500 kgs more at the rate of 50 gives you 25,000. Clearly adverse. Next, B, you should have consumed 13,000. You have consumed 12,500. 500 kgs less at the rate of 40. So 20,000 favorable, net to 5,000 adverse. Now look at this. Why am I having adverse, guys? Now look at this. I am between A and B, which is costly. A, I am consuming 500 kgs more of a costlier product and 500 kgs less of a cheaper product. So because I am consuming more of a costlier product, less of a cheaper product, now I'm having an adverse variance. Is that clear? Are you all able to understand this? Any problem, any issues here? You guys are able to understand? So now if the MD sees this, maybe he might say, fine, it's okay, because you have produced a more quality product. This doesn't talk about your efficiency level. Are you guys able to understand? So this I will get to know only when I prepare this material mix variance. Is that clear? Everyone? Is that clear, guys? Okay, fine. Done? That's about it. Next, on the other side, you have yield variance. What is that? Material yield variance. Come on. It's going to be, so A and B. Directly we can do a A, B. Yes, standard quantity minus RAQ. What is the standard quantity? 6,400, 12,800 for B. Okay, then and there you can do it. RAQ, 6,500, 13,000 into standard price, 50, 40. So now, if you notice here, you should have consumed 6,400, you have consumed 6,500, 100 kgs more at the rate of 50 gives you 5,000 adverse. Whereas here, 12,800 you should have consumed. You have consumed 13,200 kgs more at the rate of 40. How much is that? 8,000 adverse. So now overall you have 13,000 adverse. So now what will you do? Now you see here. So 13,000 plus 5,000 overall. 18,000 getting immediate daddy. Yes, okay. And granddaddy is also telling that we saw late that time itself. Is that clear, guys? Everybody, are we done here? That's about the first part of the question. Yes, that's all. Next, part 2. Okay, part 2. What is part 2? Part 2, labor cost variances. Shall we? Yes, labor cost variances. Quickly, let's do this. Quickly, let's do this. Now, labor cost variances. Now, Okay. Now, once again, we'll put the Dabba format only, yeah? Okay, let's do that. Let's do that. 1 second. So we don't need skill set. Okay, fine. Write down. Write down. Standard hours. Standard rate. Standard hours into standard rate. Correct, guys? Next. Actual hours paid. Then. Yes. Idle time. Then. Actual hours worked. Then. Actual rate. AH paid into actual rate. Any problem, any issue, you please tell me. Is this clear? Now, let's do this. First, standard hours. What have they given? Read the question. Now, you should have taken how many hours, guys? Every unit, to produce 1 unit, you are allowed to take 6 hours. Skilled is semi-skilled. That breakup itself is not there. There is only one type of labor. Actually, when they are paying, they developed one new skill set based pay structure and all. That is wrong. So 6 hours. 1600 into 6. That is my standard hours. Am I right, guys? Hello? How much is that? 9600. Write down here. 9600 hours within bracket here. How did you get this? Sir, 1600 units I have produced. Every unit I was allowed to take 6 hours. So overall, there's only one type of labor, sir. Well, see, 9600 standard rate. Standard rate. So every hour you should have taken 20. Perfect. But what has happened actually? What has happened actually? Come on, tell me, guys. Now I developed a skill set and all. So what was that? So actual hours paid 6000 and 4000 hours. Am I right, guys? So which means we can total this up later. Okay, if you want, you can total now also. No problem. Okay, let's total it now itself. So totally I paid for 10,000 hours. That too. Okay, fine. We will do that. What is the actual rate, guys? So 25 and 20. Is that clear? Perfect. Now, what is the idle time? Read the question. 5% of the time paid was what? Idle time. Guys, correct? Now, 1 second. They themselves have given in this question. Labor hours paid is 6,400. 6,000 and 4,000. Sorry, 6,000, 4,000. 5% of this is going to be your idle time. Am I right, guys? So, on the top itself, we can write down. It's going to be 5% of AH paid. So 0.05 into 6,000 is equal to 300. 4,000 is equal to 200. Totally 500. Is that clear? So actual hours worked. How much is it going to be? 6,000 minus 300. 5,700 hours. And 4,000 minus 200. 3,800 hours. Add up, you get 9,500 hours. So now what is going to be my standard hours into standard rate? 9,600 into 20. 192,000. No? Rupees 192,000 is a cost I should have incurred. Total it up. 192,000. Is that clear? Whereas here, how much is it? Be careful. Actual hours paid into actual rate. So 6,000 into 25. 150,000. And here it's going to be 4,000 into 20. Rupees 80,000. So it's going to be a total of 2,30,000. Is this clear, guys? That's about it. All the ingredients of computation are there. Now plug and play. Shall we begin? Yes. Right on. First one. Labor cost variance. Everybody tell me the formula. Standard hours into standard rate minus actual hours into actual rate. Yes, actual hours paid. You are right. Actual hours paid into actual rate. Now, figures available directly. So, standard hours into standard rate total is 1,92,000 is the cost I should have incurred. But actual hours into actual pay, actual hours into paid into actual rate, it's going to be 2,30,000. I've already incurred this amount. Is that clear? So now what's the difference, guys? Total is 38 38,000 adverse. Is this clear, everybody? Is this clear, guys? 38,000 adverse. Anyone has an issue here? No. Now with this, what will you do? Now branch it into 3. Very good. Do it. Branch it into 3. What, and what? Labor, rate variance, responsibility, HR manager. Labor, idle time variance, responsibility, maintenance department. Then labor efficiency variance, responsibility, production manager. Tell and write, it stays with you for a lifetime. That's about it. Now labor rate variance formula. Standard rate minus actual rate. Responsibility is on actual hours paid. Every hour paid, I am responsible for the rate. Clear with this, guys? Idle time variance. Idle time into standard rate. Efficiency variance. Standard hours minus actual hours worked into standard rate. As simple as that. Plug and play. Come on. Let's do this. Standard hours. Once again. So rate variance alone, I have this issue, no? Yes, then in this case alone, you'll have 2 categories. Skilled, semi-skilled. Ideally, this categorization itself is not there. But since actually they have paid, hence I have this issue. Come on, tell me, guys. Standard rate, how much? So 20 minus 25 into actual hours paid. First category, 6,000. Now for each of the 6,000 hours, I paid 5 rupees more. So how much is this, guys? 30,000 adverse. Am I right? Yes. Next one. Once again, semi-skilled also I should have paid 20. I have actually paid 20 into how many hours? 4,000 hours. So into 4,000 gives you 0. Is that clear? It's going to be 30,000 adverse is the rate variance. Are you guys clear with this? Any problem, any issues here? No. That's about it. Is that clear? Next one. Idle time variance. What is the idle time variance here? Now total idle time into standard rate. So 500 into 20. 500 into 20 gives you 10,000. Always adverse. Is that clear? That's about it. Next one. Efficiency variance. So here standard hours minus actual hours worked. 9,500 into standard rate only. No. Guys, correct? So write down here. So totally you should have taken how many hours? 9,600 hours. Yes. Whereas you have actually taken 9,500 hours into standard rate was 20 rupees. You have taken 100 hours less into 20. It's going to be 2,000 favorable. Is this clear, guys? Now add up and check whether it's tallying with the daddy. 30 plus 10, 40. 40,000 adverse. 22,000 favorable. Net off, you get 38,000 adverse. Is this clear, guys? That's about it. Can anyone check for how many marks this question was tested? This was in September 24 attempt. Maybe you can just Google it up. Anyone check? This was tested for 9 marks in September 24 attempt. Anyways, guys, a good question. So a perfect way to wrap up our discussion on labor, material and labor cost variances. Quickly, just go and update your library of adjustments. Write down MCV plus LCV. Write down MCV plus LCV. MCV plus LCV hyphen. MCV plus LCV hyphen. Mix of raw material. Mix of raw material. And mix of skill set. You can write mix of skill set. They segregated into skilled and semi-skilled. So write down mix of RM and mix of skill set within bracket with idle time. Within bracket with idle time. Within bracket with idle time. Mark the sum as important. Mark the sum as important. Are we done? Right? And that's about this particular question. Clear with this, guys? Right? So I think this was question number 8. Am I right? Now 1 second. Now you have I think sub questions here. 8A, I think this has material plus labor. Look at this. That's all. Calculate what? Price variance, usage variance, labor rate and efficiency. That's all they've asked. Will you do it? Yes. There is no point in me doing this sum once again in the classroom. We have completed comprehensive questions. Right? Literally we have covered. Exam question also I have covered here. Right? Even though it's an EVO, even for EVO students, we have covered one exam question also here. Right? And then 8B, if you see, they are asking you to calculate all the material labor related variances. So now they have given all the data. Will you guys do that? That's all. Nothing great. I don't want to waste the classroom time and do it. This is meant for practice. If you do it, it's not waste. Right? There's nothing to teach in this question. So you need to practice. This is something that you should get it right. Is that clear? Fine, guys. So with this, I am concluding this session. Please revise and practice all the sums we've covered till now. And I will see you all in the next one. Thank you all so much. Bye-bye. Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now, let's continue our discussion in this chapter, standard costing. So now, let's move on to the third segment of this chapter, which is called as variable overhead cost variances. Now, let's get started. Guys, very, very simple. Everything is exactly same as your labor cost variances. Is that clear? Shall we get started? Write down. In the center, write down. Variable overhead cost variance. Write down. Formula. Labor cost variance, what is it? That's all. Standard hours into standard rate minus actual hours into actual rate. Is that clear, guys? Next. Now this needs to be bifurcated into two. Bifurcated into two. Now, there in labor we had rate variance, variable overheads. We will not call it as rate, we will call it as expenditure variance. Write down. Variable overhead expenditure variance, and the other one is same. Variable overhead efficiency variance. Write down. Variable overhead efficiency variance. Now, expenditure variance formula same. Standard rate minus actual rate into actual hours. Whereas efficiency variance, standard hours minus actual hours into standard rate. That's all over, guys. Now, efficiency further classified into mixed yield. No, it's not at all there. Only this much, and that's about your variable overhead cost variances. Is that clear? 2 minutes we have completed. Just 2 minutes we have completed variable overhead variances. Now, quickly, let me tell you guys the logic about variable overhead variances. Who is responsible and all. One sum we will do, and that's about it. Very simple, guys. Nothing great. Shall we begin? Yes. Now, variable overhead variances. Example, this power and fuel. Now, power and fuel, I told you, some people classify that under direct expenses, but we will take it globally. There is nothing called as direct expense. I told you, you guys remember? So yes. Now, example of that. Now, fuel cost, guys. Fuel cost. Basically, your, let us say, power bill, electricity bill. Is that clear? Guys, is that clear? Now, it is driven based on what? The number of hours for which you are running the machine. Guys, correct? Now, the number of hours for which I am running the machine is equal to the number of hours for which the laborers are working. Am I right, guys? Are you all able to understand? Now, let us say, for example, now, I have produced, example, I am telling you, I have produced 1 unit. To produce 1 unit, let us say, I am allowed to take, example, I am telling you, 10 hours of labor. So 10 hours of labor means 10 hours the machines are running. Is that clear, guys? The machine should be running ideally, right? Standard hours. Now, standard rate. Now, let us say for every hour, right, for which I am running my machines, the power cost per hour, ideally speaking, I should have incurred 5 rupees. Is that clear, guys? However, let us say actual hours was 9 hours only. I completed the production by spending just 9 hours. Actual rate, what happened? let us say actual rate was 6 rupees per hour. Is that clear, guys? Is that clear? Now, to produce this 1 unit, what is the variable overhead you should have incurred? Look, you should have run your machines for 10 hours, right? And every hour you're running it, you should have paid the electricity department, EB, electricity board, 5 rupees. Is that clear? So the standard cost would have been 10 hours into 5. Standard hours into standard rate. You should have incurred variable overheads of how much, guys? 50 rupees, guys. Correct? Yes or no? However, what has happened? You have actually incurred. So I spent 9 hours. Every hour I spent 6 rupees. How much is that? How much is that? So actual amount spent was 54 rupees, which means you should have spent 50. You've spent 54. You've spent how much rupees more? 4 rupees more. So it's 4 rupees adverse. Is that clear, guys? This is my variable overhead cost variance. Now I need to find out who is responsible for this. One is called as variable overheads expenditure variance. The other one is called as variable overhead efficiency variance. Now, guys, this variable overhead is made up of two factors. One is the hour, the other one is the rate. Guys, correct? Here I will not call it as a rate variance, I call it as expenditure variance. Now, what is the formula we saw? So, every hour you should have spent 5 rupees. However, you actually spent 6 rupees. You spent 1 rupees more on the actual hours for which the production manager made the workers work. Guys, correct? Whenever they are working, obviously the machines will be turned on. Is that clear? Hence, on 9 hours, I actually paid 1 rupee more. Are you all able to understand? So 5 minus 6, how much is it? 1 rupee more on each of the 9 hours. It's going to be 9 rupees adverse. Is that clear? Now, guys, who is responsible for the rate here, the expenditure variance? The person responsible is going to be your maintenance department. Maintenance department. Sir, why, sir? Now, what rate we are talking? We are not talking about labor hour rate. We are talking about the rate of power, the power cost per hour. Guys, correct? Now the company said, look, you guys should have talked with that electricity department, made sure that every hour you are being charged 5 rupees. However, they couldn't negotiate well, hence they ended up paying 6 rupees for every hour they're turning on the machine. Sir, like this negotiation can it be done? You and I can't do it. For domestic purpose, commercial purpose also you can't do it. This is industrial purpose. Yes, industrial usage, they have certain slab rates and all. Certain concessions are available which are subject to negotiations. Is that clear, guys? So you and I can't do it in our domestic purposes and all. We can't say, so government, I will go negotiate. No, nothing will happen. Is that clear, guys? So this is how it is. Are you all able to understand? Who is responsible for this? Maintenance department. He is responsible for the rate on the actual hours. Actual hours, is it in his control? No. Whose control is it in? The production department. For how many hours he is making the workers work, on those many hours, he is responsible for the rate. Is that clear, guys? Hence, standard rate minus actual rate into actual hours. Is that clear? Logically understand. And on the other side, efficiency variance, who is responsible? As usual, the production manager. Is that clear, guys? So the production manager or the production department, whatever it is. Is that clear? Now, what is the formula? These guys are responsible only for the hours. So, standard hours, you should have spent only 10 hours, but you actually spent only 9 hours into standard rate 5. Why standard rate? Because the production manager is not dependent on the maintenance manager. Now, if I take the actual rate, then I'm passing on the efficiency or inefficiency of the maintenance manager to the production manager, which is wrong. Is that clear, guys? In this case, you should have taken 10. You've taken only 9, which means you've saved 1 hour, and every hour actually would have saved you how much? 5 rupees. So it's going to be 5 favorable. So net off, if you see 9 adverse, 5 favorable, net off gives you 4 adverse. Is that clear? Which means my maintenance team is having an adverse variance. They are not performing well, whereas my production team has given a favorable variance, which means they are doing a good job. Is that clear, guys? Are you all able to understand? This is all about it. Any problem here? Any issue here? Now, take a red ink. Take a red ink. Now, you have written this down, huh? So, write down here. Put a star and write down in variable overhead cost variance or variable overhead variances, actual hour means actual hours worked. Actual hours means actual hours worked. That's all. Very, very important. Very, very important. Now, guys, understand. In labor, you have actual hours paid, actual hours worked. The difference between the two is idle time. That is, I pay them, for example, 1000 hours. However, they worked only for 900 hours. Now, what happened to the difference 100 hours? They came, but I didn't work. They came, but they didn't work. But still, I need to pay them. Guys, are you clear with this? Now, why, sir? Because this was an idle time. Example, power cut. Clear with this? Whereas in variable overheads, actual hours is always actual hours worked. Why? There is no concept of idle time. Sir, why, sir? Now they came for 1000 hours. They worked only for 900 hours. No, only for the actual hours worked, the machines would have been turned on. No. Hence, there is no concept of actual hours paid, actual hours worked. These are human resources. There we saw human resource. That is basically your workers. For them, since they had to come and spend this extra 100 hours without working also, I had to pay. Here we are talking about machines and other things. So only for every hour worked, the machines would have been turned on. Is that clear? Hence, here actual hours always stands for actual hours worked. Are you guys able to understand? Be very, very clear. Now you will say, sir, nothing great deal, sir. Suppose in a comprehensive sum, they ask you to calculate your labor variances and variable overhead variances. Now, for labor variances, you have actual hours paid, actual hours worked. However, for your variable overhead variance, you should only work on actual hours worked. There is no concept of paid and all. Idle time is not there here. Is that clear, guys? Are you understanding the logic for that? Are you understanding the logic for that? Is this clear, guys? Isn't it sensible? This is all it takes. Are you all able to understand? Beyond this, nothing is required. Let's directly go do one sum and finish this area. Beyond this, nothing is there. Anything specific, efficiency, variance, further classify, gang and all, nothing is there. Is that clear, guys? Let's go and do the question number 9. Huh? Let's go and do this. Question number 9. Let's get started. Shall we, guys? Okay. Let's get started. From the following information of G Limited, calculate the variable overhead cost variance, variable overhead expenditure variance, variable overhead efficiency variance. What have they given? Now, budgeted production 6,000 units, variable overheads 1,20,000 rupees, standard time to produce 1 unit of output. How much is it? 2 hours. Actual production 5,900 units. Actual overheads incurred 1,22,000. Actual hours worked 11,600. That's all. Now, guys, first you tell me what are the figures you need? What are the line items you need? 4 line items. What are they? Standard hours, standard rate. Actual hours, actual rate. Correct? Now, standard hours. What is a standard hours? Standard hours means everyone. Standard hours means what? For the actual production, how many hours you should have taken? Can anyone tell me how to calculate that? Yes, 5,900 units I've produced. Every unit I should have taken 2 hours. Very good. 5,900 into 2, how much is that? Very good. 11,800 hours is what I should have taken. What is the standard rate? Standard rate means what? For every hour, what is the variable overheads I should have incurred? Can anyone tell me? How much? How much? 10, na? Okay. Any other answer? 20. Standard rate is per hour or per unit? Standard hours into standard rate means what? It is rate per hour only, no? You said 20, yeah? 20 is per hour or per unit? Guys, how will you do that? Logically think, ma. Very simple. Very simple. Now, guys, 1 second. Guys, come on. 1 second. You look at this. Now, can I say the standard rate per hour is nothing but budgeted variable overheads divided by budgeted hours. Correct? What is the budgeted variable overheads? 1,20,000. What is the budgeted hours? I am budgeting 6,000 units. Right? And every unit I am saying should take 2 hours, which means the budgeted hours is 12,000 hours. Is that clear? So which means 1,20,000 divided by 12,000 It gives you 10 per hour. Are you all able to understand? Have this common sense. That's all it takes. Nothing more beyond this. Is that clear, guys? So here it is 10 rupees per hour. Always remember, you are multiplying standard rate with standard hours, which means the rate is per hour, not per unit. Is that clear? So it's going to be what? 10 rupees per hour. Is that clear? Then this you know. What is the actual hours? Given 11,600. What is the actual rate? Now, actually I have incurred 1,22,000 for an actual hours of 11,600. Divide the two. 10.5172. Okay, fine. You can retain the decimals is the appropriate point. 10.5172. Is that clear, guys? With this, the entire sum you can do. That's all it takes. But what is the most important thing is that you need to know how to arrive at the standard rate in this question. Is that clear? Let's go do this. Question number 9. Question number 9. Write down, guys. Write down. First, write down standard as what is standard hours is equal to come on, guys, calculation actual output 5,900 units. Every unit should have taken only 2 hours. How much is that? 11,800 hours. Is everyone able to understand? Everyone able to understand this? Yes. Next one, what is that? So the next one is standard rate. Standard rate. Come on, guys, take a red ink here. Now, standard rate, how will you get? Budgeted variable overheads divided by budgeted hours. Correct? Now, which is equal to, what's my budgeted variable overheads given? So 1,20,000 rupees is the cost pertaining to how many hours? Now they have said this is pertaining to 6,000 units, and every unit I am saying should have taken 2 hours, which means this is a cost pertaining to 12,000 hours. 1,20,000 divided by 12,000 gives me rupees 10 per hour. Is that clear, guys? Are you all able to understand? Red ink rupees 10. Is that clear? Are you all able to understand? Are you all able to understand? If I'm saying hours into rate, it means the rate is per hour. It's an hourly rate, not a per unit rate. Is that clear? If you have made a mistake, please write this. Everyone write it in a red ink so that you will never commit this mistake. Is that clear, guys? Next one. Next one. What is the next one? Yes, write down actual hours. I think this is given in the question. How much is that? 11,600 hours within bracket given. And actual rate is equal to, within bracket, actual overheads 1,22,000 divided by 11,600. Now it's 1,22,000 divided by 11,600. So you write it down as 10.5172 per hour, but fully it keeps running. Retain the decimals in your calculator. It is a must. Is that clear? Now first, what will you do? Come on, tell me. Variable overhead cost variance formula. Standard hours into standard rate minus of actual hours into actual rate. Standard hours 11,800 into 10 minus 11,600 into 10.5172. So 11,800 into 10 is 1,18,000 minus this figure is already available, 1,22,000. This is the actual overage. No, guys, this is how we arrived at the figure. Am I right? Yes. So now you should have spent 1,18,000, but you have spent 1,22,000. So you have spent 4,000 rupees more than what you're supposed to spend. So here it's going to be 4,000. Adverse. Is everyone able to get this? Now this should be bifurcated into two. What and what? Variable overhead expenditure variance formula. Standard rate minus actual rate into actual hours. Very good. Come on, guys, tell me. What is this? Yes, standard rate is going to be 10 minus what's my actual rate? So it's going to be 10.5172, but read in the decimals in your calculator, will you? Yes. Then, so actual hours, how much is that? 11,600. Now you should have paid only 10. You paid something more than that. So that minus 10 into 11,600. So you get how much? 5,999.99999 is nothing but 6,000 adverse. Is that clear? Now who is responsible for this? Rate. The maintenance department. They should have stuck a good deal with the electricity board. They didn't do that. Is that clear, guys? And on the other hand, variable overhead. Very good. Variable overhead efficiency variance. Figure, calculation. Standard hours minus actual hours into standard rate. Now tell me, guys, what's the standard hours? 11,800 minus actual hours. 11,600 into standard rate. Into standard rate is going to be 10. Am I right? So now it's going to be, you should have spent 11,800. You spent only 11,600. You save 200 hours into 10 is going to be 2,000 rupees favorable. Is that clear, guys? So now check. So now 6,000 adverse, 2,000 favorable. Net off you get 4,000 adverse. Is that clear? Is it matching? And that's about this concept. Any problem here? Guys, as simple as that. Very clear. Just go and update your library of adjustments. Write down. Question number 9. Please write down. Variable overhead cost variance hyphen direct computation. Variable overhead cost to variance hyphen direct computation. Is that clear? Fine, guys. That's about it. Now, question number 9A is also similar to this. What is it? Compute your variable overhead cost variance. Now, look at this, guys. Budget data is given. Actual data is given. No. 1 second, guys. Now, can we do one thing? We will just compute the 4 figures. What are they? Standard hour, standard rate, actual hour, actual rate. 4 figures we will compute and leave. Remaining plug and play. You guys know how to do it. What have they given? Production. Budgeted production is 400. Actual production is 360. Budget I can't compare with actual. Hence we have the concept of standard and all. You guys have seen that, right? So man hours to produce 400 units, 8,000. So this is going to be 7,000. Variable overheads, budget and actual is given. Now guys, standard hours means what? Everyone, standard hours means what? Now to produce my actual output of 360, how many hours I should have taken? Now can we calculate? Yes. How do you do it? You are supposed to take 8,000 hours to produce 400 units. Which means per unit, how many hours you can take? 8,000 by 400. How much is it? To produce 1 unit, you are supposed to take 20 hours. But you have actually produced 360 units. How many hours you could have taken? 20 into 360, you would have taken 7,200 hours. Are you all able to understand this? So write down here. So the calculation will be what? Book itself you write down. 8,000 divided by 400 into 360. How much is that? 7,200 hours. Guys, correct? Standard hours. What is the standard rate? Now directly we can compute this. What is the standard rate? Sir, overall variable overheads, budgeted overheads is how much? 10,000 divided by, this is the overheads to be incurred for how many hours? 8,000 hours, which means per hour how much you can incur? So 10,000 divided by 8,000 gives you 1.25 per hour. Is that clear? 1.25 per hour. You guys are able to understand? It's going to be 10,000 divided by 8,000. Is that clear, guys? Hello? Next one. Actual hours. Actual hours, how much is it? Given. 7,000 hours, it's given, no? 7,000 hours. What is the actual rate? Simple. How will you do it? Come on, everyone. Yes, ma, tell me. What happened? Somewhere, huh? You have also gone to dreams, huh? Yes, tell me. How did you get calculation? 9150 is the actual overheads for 7,000 hours. So 9150 divided by 7,000. How much you get? 1.3071 per hour, but you should read in the decimals. It's going to be 9150 divided by 7,000. Is that clear, guys? With this plug and play. That's about it. Is that clear? Anyone has any issue here? No. As simple as that, guys. That's about it. Go to your library of adjustments, update it. That's about it. Plug and play, you'll get the answers. That's about it. Write down question number 9A. Please write down variable overhead variances hyphen direct computation semicolon, write down here. We had an issue regarding calculation of standard hours. Write down calculation of standard hours. Calculation of standard hours. Calculation of standard hours. Yes. No. Previous question, no. 9. There, what did I say? Variable overhead variance. Direct computation, semicolon, write down calculation of standard rate. Guys, correct? No. There we had this issue. Hello, guys. Write down calculation of standard rate. Calculation of standard rate. Is that clear? That's about your this particular question number 9 and 9A. Now, shall we move on to the next one, guys? Shall we move on to the next one? Yes. Now, guys, let's move on to the last segment of this particular chapter. Take the heading. What is it called as? Everyone. Fixed overhead cost variance. Fixed overhead cost variance. Shall we get started? Yes. Now, guys, first of all, understand one thing. I want you guys to have one understanding. Now, the first 3 segments which we saw, material, labor, variable overheads, these 3 were similar in nature. Fixed overheads is a different animal altogether. It is completely a different ball game. Here, don't compare the same logics and all. No, it is slightly different here. Because first of all, understand. Recall our discussion before we started this chapter, right? I told you something, understanding the concept of standard cost and all. I told you, remember? You guys remember this? Yes. There I said, let us say I am budgeting 1 lakh rupees for a budgeted output of 10,000 units, but actually I have incurred 96,000 for producing 8,000 units. Can the budget and actual be compared as such? You guys said no. Let us say this budgeted 1 lakh rupees, no, this is fixed overheads. Budgeted fixed overheads was 1 lakh rupees. Right? The budgeted output was how much? 10,000. But actually I have incurred 96,000 rupees. Actual output is what? 8,000. Can I compare this 1 lakh and 96,000? Can I compare this 1 lakh and 96,000? Yes or no? The answer is yes. Why? Fixed overheads. Whether I produce 10,000 or 5,000 or 8,000 or whatever, or I don't produce anything at all, now fixed overheads has to be constant only. In this case, with respect to fixed overheads, now budget is directly comparable with actual, or in other words, when it comes to fixed overheads, there is no question of standard. Are you all able to understanding or not? You're understanding or not? There is no concept of standard. If I do it like this, then I am treating my fixed overheads as a variable overheads. Is that clear, guys? The first understanding you need to have is that there is no concept of standard when it comes to fixed overheads. Is that clear? The budgets are directly comparable with actuals. You can't say for the actual production, what should have been the budgeted overheads you should have what should have been the fixed overheads you should have incurred? No, that itself is budget only. Is that clear, guys? Is everybody able to understand? Hence, the first and foremost thing that you need to remember is there is no concept of standard with respect to what? Fixed overheads. Is that clear, guys? Now, first, I will give you guys the formulas and structuring of this area. Please write down, and then logically, whatever it is, I will explain. Shall we get started? Write down. Write down first. Write down. In the center, fixed overhead cost variance. Write down. Standard hours into standard rate minus actual fixed overheads. Actual fixed overheads. Is that clear? Done? Done? Now, this should be branched into two. This should be branched into two. One is called as fixed overhead expenditure variance. The other one is called as fixed overheads volume variance. Please write down, I will tell you everything. This is completely different. Fixed overhead efficiency variance formula: budgeted fixed overheads minus actual fixed overheads. Is that clear? Guys, is that clear? Now, the other one, volume variance, is balancing figure. Can anyone tell me? Can anyone tell me what is this? So, look, totally I should get this. Currently, I have this. To this, if I add something, it should be equal to the top figure. Now, minus actual fixed overheads, I already have. But here I should get SH into SR, but I have budgeted fixed overheads. What will I do? So I will say this is equal to SH into SR. Now you introduce this and remove what? Minus budgeted fixed overheads. Are you all able to understand? Guys, only then if you add minus budgeted fixed overheads and budgeted fixed overheads gets cancelled, you will get SH into SR minus actual fixed overheads. Are you all able to understand? Or you can say this is nothing but balance figure. Is that clear with this, guys? Are you all able to understand? That's all. Next, this volume variance, pull an arrow and further branch it into two. Further branch it into two. Please do it. Please do it. In case you have already learnt it or you've already seen our concept decoder book and all, wait, I have not missed anything. There we have seen 3 branches. I will tell you the appropriate time. Just to write down 2. One is called as fixed overheads capacity variance. The other one is called as fixed overheads efficiency variance. Please write down. Capacity variance. Fixed overheads capacity variance. Right? So here all these things are that. Don't worry, I will tell you everything. Now here write down red ink you take, write down AH, that alone you write it in red ink, then into SR, AH into SR, right, minus whatever is here, that is, look, whatever is here that you write, what is it? Minus budgeted fixed overheads. Is that clear? And on the other side, balancing figure. What is a balance figure? I got this. Now I need to get this and I need to remove this. Tell me. Very good. SH into SR minus AH into SR. Is that clear, guys? Is that clear? Is everyone able to understand? Any problem, any issues here? Any problem, any issues here? No. Guys, that's about it. You guys are clear? Now I'll tell you what is what and all. Do not worry. Guys, clear? Now come down and write one thing. Okay. Now guys, can anyone tell me this? Standard hours into standard rate gives you what? standard fixed overheads. I say there is no standard. Budgeted. Then why do you have here budgeted separately? Why do you have here? Anyways, you will tell sir. Okay. Guys, SH into SR gives you absorbed fixed overheads. Gives you absorbed fixed overheads. Now here in fixed overhead cost variance, we are comparing absorbed with actuals, or in other words, this variance is nothing but it calculates what? It calculates what? You are saying something, tell it. What? It compares absorbed with actuals means under or over absorption is what gets calculated in this variance. Are you guys clear with this? Guys, accounted overheads accounted is your absorbed overheads minus actuals. Guys, this fixed overhead cost variance computes nothing but your under or over absorption. Are you all able to understand? Guys, are you all able to understand? Is there any issue here? Is there any issue here? Now, here what we see, absorbed minus actual is what we compute under fixed overheads cost variance. Is everyone able to get this? Now, write down here, guys. Come down and write. Write down where now SH stands for what? Standard hours. Standard hours for actual output. We know the standard hours means what? For actual output, how many hours you should have spent? Am I right? SR stands for standard rate per hour. Please write it fully. Why? Multiplying with hours. Rate means per hour only, no? Guys, correct. Cost object is per hour. Next, whatever thing is mentioned here. Actual. But before that, write down. Okay, we will write it later. Actual fixed overheads, we know what it is. Budgeted fixed overheads, we know what it is. So all these figures are given. Then one more thing, AH, write down. AH stands for actual hours. Is that clear, guys? Is everyone able to understand this? Is everyone able to understand? Is there any problem here? Is there any problem here? Guys, is there any problem here? And write down here. Take a red ink and write down. Absorbed fixed overheads is equal to SH into SR. Is that clear, guys? Are you all able to understand this? Are you all able to understand this? Or guys, simply put, I can say this is nothing but absorbed fixed overheads. So fixed overhead cost variance computes what? Absorbed fixed overheads minus actual fixed overheads. Is everyone able to understand this? Guys, is everyone able to understand this? Now, sir, what is the logic for all these things? Now I will tell you guys. Now, guys, you have absorbed fixed overheads, correct? Then you have actual fixed overheads, correct, guys? Yes. And you also have in reality you have three, no? You also have budgeted fixed overheads. Recall our discussion on overheads chapter, guys, correct? Budgeted overheads means what? Overheads planned. Actual overheads means what? Overheads incurred. Absorbed overheads means what? Overheads accounted. We have seen that. Am I right, guys? Now, first, fixed overhead cost variance computes what? Absorbed fixed overheads minus actual fixed overheads. Is that clear? So it compares what with what? It compares absorbed fixed overheads with the actual fixed overheads. Guys, correct? This is nothing but my fixed overheads cost variance, correct? Yes, fixed overheads cost variance. Am I right? Now, however, on one side, expenditure variance says what? Simple. What is the overhead you should have incurred Versus what is the overhead you have actually incurred. Now, in case of fixed overheads, what is the amount I should have incurred? Budgeted fixed overheads. Guys, correct? Minus actual. Is that clear, guys? Are you all able to understand? Expenditure variance means what? Now, what you should have incurred is being compared with what you have incurred. Is that clear? In case of fixed overheads, there is no concept of standard. Hence, budget can be compared directly with actuals. Am I right? Now, on one side, what am I doing, guys? On one side, what am I doing? I am comparing budget with what? I am comparing budget with actuals. Correct? Guys, this is what? This is fixed overhead expenditure variance. Am I right, guys? Now, on one side, I am comparing this. Guys, look at the screen. Please look at the screen. Now, topmost, daddy, your fixed overhead cost variance compares this with this. Whereas my expenditure variance is comparing budget with actuals. Hence, on the other side, volume variance says this difference, you now remove it from this, you will arrive at the balance. Is that clear, guys? Are you all able to understand? Hence, volume variance is nothing but absorbed minus budgeted. Is everyone able to understand this? Is everyone able to understand this? This expenditure is budget minus actuals. From this, if I remove absorb minus budgeted, this portion, I will get this portion. Is this clear, guys? Is everyone able to understand this? Hence, volume variance is what? Absorbed minus budgeted. Is that clear, guys? Is everyone able to understand? Any problem, any issue here? So, absorbed overhead, sir, how will you compute? SH into SR, that we know. Is that clear, guys? Is everyone able to understand this? So, I have three figures with me. First, fixed overhead cost variance is absorbed minus actual. Left side, fixed overhead expenditure variance is what? Budget minus actual. Hence, the balancing figure, volume variance is absorbed minus budgeted. If I remove this portion, you will get the top. Are you all able to understand? Are you all able to understand? Any problem here? Any problem here? Guys, any issues here? No. Clear with this? Any problem? No. Now, fixed overheads, volume variance is there. Now, this is bifurcated further into two. Capacity and efficiency variance. Now, guys, now, to understand the logic for this, ideally, it is a subject matter of discussion. Ideally, in your final, this has a link with your sales variances. Along with that, overall, in your reconciliation statement, you will get a big picture. I told you the big picture of this chapter. You guys remember? However, at the intermediate level, you only have your cost related variances. Hence, if I start explaining this, now it will take a lot of time, which is not required for you. I should not do something just because I know it. Now, one thing, let's make peace with it. But here also, I will tell you the logic and all. Don't worry. Now, here, I just want you guys to remember one thing. What is it? AH. This alone will you remember? Yes. Now, what they are saying, AH, actual us, into SR. AH into SR minus whatever you get here, budgeted fixed overheads. You get the capacity variance. Is that clear? Now, immediately, the balancing figure will be efficiency variance. What is it? SH into SR minus AH into SR. Is that clear, guys? That is going to be your efficiency variance. Is that clear? Are you all able to understand? So, bottom you have two variances. What are they? Capacity and efficiency. Sir, how do I remember? C, E. Alphabets, which comes first? C. And then only E comes in. So, C and E. Capacity variance, efficiency variance. Is that clear? Guys, this is also E. Don't think this is expenditure. That is different. I'm talking only about C and E. Here, bottom. Is that clear? Capacity variance. Only one thing I want you to remember. AH into SR minus budgeted fixed overheads. And efficiency variance is the balancing figure. That is nothing but absorbed fixed overheads minus AH into SR. Is that clear, guys? Is that clear? Are you all able to understand? Now, capacity variance, why and all. Ideally speaking, this is also a full-fledged logic only. What it is and all. Maybe at this point, it's not required. But to the extent relevant, I will also explain at the appropriate time. Is that clear, guys? Is that clear? Now, are we clear here? Now, can you guys tell me first fixed overhead cost variance? Recall. Absorbed fixed overheads minus actual. We are basically calculating what? Under or over absorption. Remember this. We do not compare standard. There's nothing called standard here. So we are computing under or over absorption. Under or over absorption computation is only your fixed overhead cost variance. Is that clear? So absorbed minus actual fixed overheads is going to be your fixed overheads cost variance bifurcated into two. What and what? Fixed overheads expenditure variance and volume variance. Fixed overheads volume variance. Expenditure variance. So budget minus actuals. Hence, the other one, volume variance, is going to be absorbed minus budget, balancing figure. Is that clear? So fixed overheads cost variance is absorbed minus actual. Expenditure variance is budget minus actuals. Hence, I need to remove this. So your the other one, volume variance, is going to be absorbed minus budget. Is that clear, guys? Now, volume variance is further classified into two. CE. Capacity variance, efficiency variance. Capacity variance, one thing alone I want you to remember. Actual hours into standard rate minus budgeted fixed overheads. Clear with this? And on the other side, you have balancing figure. That is absorbed overheads minus AH into SR. Is this clear, guys? That's all it is. That's all it is. Any problem, any issues here? Any problem, any issues here? So no doubt? Sure? Okay. If I were in your position, I would have had one doubt. You didn't have. Okay, let me clearly create the doubt and tell you what is this. Absorbed fixed overheads, how do you compute? SH into SR. Now, recall overheads chapter long ago, so long ago. You guys remember we did one chapter called overheads. It's a part of your syllabus. You guys are studying CA intermediate group 2 paper 4. Under that the third or second chapter we did which chapter? Third chapter, basic concepts cost sheet. Then overheads we did third chapter. Remember? Yes. My name is Ganesh Bharadwaj. That's why every time before the start of every session, I keep reminding you. So I am so and so, your faculty and all. Guys, come back here. Now, you remember overheads. Now, you calculate overheads absorption rate. Absorption rate, is it actual rate or predetermined rate? Predetermined rate. You calculate. That is standard rate only. Guys, correct? Now, once you compute the rate, it's a two-step procedure. Next, charge it the products. So, how will you charge it the product? Predetermined rate into actual base quantity consumed, no? Guys, correct? So, which means, sir, predetermined rate, standard rate, into actual hours should only be absorbed overheads. Guys, are you understanding? Are you understanding? Then how did you say standard rate into standard hours is my absorption, I mean the absorbed fixed overheads? It has to be standard rate into actual hours only, no sir? Are you understanding the issue I am talking about here? You only said base quantity consumed. Remember, which means predetermined rate into actual base quantity, actual hours should only give my absorbed fixed overheads. Suddenly you change the formula here. You said it is standard rate into standard hours is absorbed fixed overheads. You guys were also about to believe. Had I not created this doubt, you would not have had this doubt, no? Take sir. Take whatever you want to take, sir. Correct? Yes, sir. Very good. That's the spirit. Now, guys, are you understanding the issue here? Are you understanding the issue here? I should not have created this doubt. I should have let you only. Anyways, guys, no, I cannot, my conscience will not let me do that. Now, are you understanding? Today, you will not have the doubt. Now, 1 month later, 2 months later, after you revise, assuming you revise, at that point of time, you will be having all this doubt. There we saw, he said another thing. This guy has now said another thing as per his convenience. So, lineal ascendant, descendant will once again come. So, yes, sir, waiting. Okay. So, no. So what I will do is clearly, first of all, understand. Now, this is the subject matter of discussion, a very important discussion. A very, 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 very important discussion. Now, once again, guys, not mentioned in your study material clearly, but without this, you can't solve a few sums. There are exam questions based on this underlying topic, not clearly mentioned. And guys, with reasonable level of certainty, I'm telling you, many faculties don't cover this. Honestly, because study material stops here. right? And I'm telling you, catch up running notes. I'm leaving it to you. If you want, you do it. It's absolutely for your benefit. You want, you do it. But guys, many faculties don't explain it because they think it's not a part of your syllabus. But there are questions framed based on this. So I want to link this with your overheads and tell you what is what. Once we do that, this concept is over. Let's go do the sums. Shall we get started? Now, what is this, sir? What is this now? Let's see an example. With the help of this example, we will be doing this area. Shall we? Yes. Example. Now, guys, let me take this example. Okay. Now, please focus here. Please focus here. Now, budgeted fixed overheads was 1 lakh rupees. Example. Budgeted output was how much? 10,000 units. Now, standard hours per unit means what? To produce 1 unit, you are allowed to take how many hours? 2 hours. And actually, I produced 15,000 units. Is that clear? Now, guys, recall our overheads chapter. Now, for the purpose of carrying out absorption, I have 6 different base quantities. Correct? What are the 6 different base quantities? Labor hours, machine hours, percentage of direct material, direct wages, prime cost, and production units method directly. Forgot completely. Guys, this is definitely not acceptable. Right? Some students are answering very happy. Some students are just, okay, something new is teaching. No, guys, no. What are you doing? Your duty is to revise. Now, I'm taking so much efforts in teaching for you, the benefit of you people. If you don't revise, what is the point? You are not even able to recollect that something I've told like this. It's not at all fair, guys. Do a revision properly, else it's of no use. Now, coming back here. You guys remember that? Very good. Excellent. Now, let us say the companies used production units method. Okay. Now, in this case, absorbed overheads. Can I say absorbed overheads? So, absorbed overheads is going to be what? Can I say it is going to be predetermined rate, standard rate per unit into actual units produced. Guys, correct? This is going to be my absorbed overheads, guys. Predetermined rate into actual units. Here the rate should be per unit. Am I right, guys? Guys, agreeing with me on this or not? Agreeing with me on this or not? Agreeing with me on this? Fine. Now, what is the predetermined rate here? Simple. Budgeted overheads divided by budgeted units. Guys, correct? Or in other words, can I say the standard rate per unit is going to be rupees 10 per unit. That is nothing but 1 lakh divided by 10,000 units. Is that clear? Guys, correct? So, can I say this is nothing but rupees 10 per unit into how many units? I charge every unit produced with 10 rupees. So, 10 into 15,000. Is this clear, guys? So, overall, it's 1,50,000. That, okay, fine. So, I'm going to prove this. Is that clear, guys? 1,50,000, right? 10 into 15,000. Is that clear, guys? Now, guys, this 10 rupees, there is another way of arriving at it. How, sir? Now, guys, you tell me, budgeted, suppose if the company is following your hours, your labor hours as the basis. Now, they would have said what? The standard rate per hour will be calculated. Standard rate per hour will be how much? The budgeted overheads divided by budgeted hours. What is the budgeted hours? Sir, budget units is 10,000 and every unit should have taken 2 hours, which means, so here can I say, guys, standard rate per hour is going to be 1 lakh divided by 10,000 into 2, 20,000 hours. Guys, correct? Are you all able to understand? So how much is it? 1 lakh by 20,000. 1 lakh by 20,000, how much, ma? 2. 5 rupees per hour. Guys, correct? 5 rupees per hour. Is that clear? 5 rupees per hour. Now, or in other words, can I say this 10 rupees per unit can be rewritten as follows. For every hour, I should charge the product with how much? 5 rupees. And every unit should have taken how many hours? 2 hours. So can I rewrite this and say this is nothing but, so 5 rupees per hour into 2 hours per unit. Guys, correct. This 10 I am breaking up and saying, sir, every hour you should have taken 5 rupees absorption rate into every unit you should have taken 2 hours. Am I right? This is the breakup of this 10. Are you clear with this? Into actual output 15,000 units. Guys, correct or not? Is everyone able to understand? Is everyone able to understand? In this case, this 5 rupees per hour, can I say this is nothing but standard rate per hour? Am I right, guys? Hello? Yes. Now, this 2 hours per unit, what is it? It is standard hours to produce 1 unit. Guys, correct? And what is this 15,000? It is actual output. Guys, correct? Now, you think and you tell me. You can write down later. Please don't write down now. Focus here. This is a very critical discussion. You will miss it out. I'll give you time to write down. Now, you understood this breakup? Now, can I say, for every unit, you are allowed to take how many hours? 2 hours. You have actually produced 15,000 standard hours per unit into actual output. Can I say this is nothing but the total standard hours? Means what? For the actual output, how many hours you should have taken is what is called a standard hours. No, guys, are you understanding this? Are you all understanding this? Are you all understanding this? For every unit, I should have taken 2 hours, and I've actually produced 15,000 units. Overall, I should have taken 30,000 hours. This is nothing but, so here I will say this is nothing but, so this is rupees 5 per hour into, so the sum total of this, how much is it? 30,000 hours. Am I right? This is nothing but standard rate per hour into, this is nothing but standard hours. Are you all able to understand? Or in other words, we proved that if you are converting the production units method into an hourly data, it is represented as a standard rate per hour into standard, or in other words, SH into SR. Are you all able to understand? That is the reason why I said SH into SR is absorbed overheads. Are you all able to understand or not? If there is any issue, please ask me. Is this clear? I am telling you, there is an underlying assumption in the question or in this scenario that the company uses a production units method. Are you all able to understand? This production units method, when converted into hours, hourly data, it arrives as a SH into SR. Are you all able to understand this? Is that clear? Suppose, sir, the company is following hours standard, they are following labor hours is the base quantity. In that case, it will be standard rate per hour into actual hours only. Is that clear? That is how the absorption works out. But here we are making an underlying assumption that the company uses what? Production units, which means how will you calculate your absorbed overheads? Standard rate per unit into actual output. Now this, when converted into hourly data, is expressed as standard hours into standard rate. Is this clear? Now, in some questions, sir, why are we doing all these things so logical, technical? Do we need to understand? Look, if there is something that is not required, I told you we will not do it. That AH explanation and all I told you. But if something is required, 100% we have to do it. Sir, why do you say this is required? In one past exam, you know what they did? They didn't give hourly data. They only gave all the data on a units level. Now, using that, you have to calculate absorbed overheads. Absorbed overheads will be standard rate per unit into actual output. Is that clear, guys? Based on that, they had to compute what? The absorbed overheads. In that case, SH into SR will not come. What will you do? You will use standard rate per unit into actual output. Is that clear, guys? Guys, if I am saying here rate and multiplying with hours, it means it's a rate per hour. Is that clear? If I am saying a rate and multiplying it with units, obviously it is a rate per unit. That is a common sense. Is that clear? Is that clear? Now, this is exactly what Institute is testing. They didn't give hourly data at all. They gave everything in units. Now they asked the students to do. Many students struggled because they mucked up the formulas. They didn't even know this stood for absorbed overheads. Absorbed overheads is basically what the original formula is: standard rate per unit into actual output. Am I right? And when you convert this into hourly data, it is expressed as a standard hours into standard rate per hour, SH into SR. Is this clear? Are you all able to get this? A very, very critical understanding, past exam question I'm talking about. Is that clear, guys? This is the fundamental understanding. Many students miss out on this. That's why they omit fixed overheads and go, guys, there is nothing to omit. It's very, very simple and logical. Is that clear, guys? Is that clear? That's about this particular area. Is this clear, guys? Hence, we have proved that standard rate per unit into actual units, that is the production units method, converted into hourly data becomes SH into SR. Is that clear? Here SH stands for standard hours. SR stands for standard rate per hour. This SR and this SR are different. This is standard rate per unit. That's why it's multiplied with units. This is standard rate per hour. That's why it's multiplied with hours. Is that clear? Cost object you need to know. Are you all able to understand? That's about this particular discussion. Is this clear, guys? Is this clear, everyone? So now tell me, guys, formula for fixed overheads cost variance. Everyone tell me one last time. Absorbed overheads. Just say absorbed overheads. Absorbed overheads could be, if you are computing in units method, it has to be standard SHSR and all. You just tell me logically. Units. Standard rate per unit into actual output. Correct? Now if it is computed in hours, standard hours into standard rate, SH into SR. Is that clear? Now, so your fixed overheads cost variance is absorbed overheads minus actual overheads, bifurcated into two. One is called as expenditure variance. The other one is called as fixed overheads volume variance. Expenditure variance, budget minus actuals. Hence, the other one, volume variance, is absorbed minus budget. Now, your volume variance further classified into two. What and what? No, just now I finished. What is it? CE and all I told you. Capacity variance, efficiency variance, capacity variance. I asked you to remember something. AH into SR minus budgeted fixed overheads. The other one is the balancing figure. Absorbed overheads minus AH into SR. That's about this area, guys. Right? There's one more thing called calendar variance. We will see it when it comes. Is that clear? Is everyone able to understand the background logics and everything? Any question that comes in this area, will you be able to handle? Yes. Now let's see. Let's go and do these questions. Question number 10. Question number 10. Shall we get started? Yes. Question number 10. Let's do this. Now, guys, I want full focus, no mistakes. Will you guys do that? Now, one second. Before we do this, now, can you guys tell me what are the ingredients for this fixed overheads cost variance? First, you need absorb for that SH, SR, then SH SR minus actual, then expenditure, budget minus actual. Hence, you need budget overheads, then finally you need one more figure called AH. So you need 5 ingredients. With these 5 ingredients, if you list out, you can calculate all the fixed overhead cost variances. Are you clear with this? Hence, open secret to crack fixed overhead variances is that first read the question, list out these 5 ingredients. Once you list out these 5 ingredients, plug and play. Is that clear, guys? Shall we begin? Let's do this question. Now, the cost detail of J&G Limited for the month of September is as follows. Budget, actual. Fixed overheads, budgeted, actual is given. Units of production is also given. Standard time to produce 1 unit. To produce 1 unit, you are allowed to take 2 hours, right? And actual hours worked is also given. Is that clear, guys? Everyone? Is that clear? Yes. Now, calculate all the variances. Now, one second. You need to list out the ingredients, right? Tell me, what are the ingredients? First, standard hours, standard rate, actual fixed overheads, then budgeted go in the same order. Budgeted fixed overheads, then actual hours. If you have these 5 figures, the entire sum can be solved. Agreeing with me or not? Now, standard hours. How much is it? Logically think and answer. Logically think and answer. Now, I have actually produced how many units? 7,800. Standard hours means what? For actual output. How many hours you are supposed to take? 7,800 into 2. How much is that? Write down 15,600 hours. Okay, anyways, we will do. Don't worry. Next, standard rate means what? Per hour or per unit? So obviously, since you are multiplying it with the hours, it has to be per hour. Is that clear? Now, for every hour, what is the standard rate? Can anyone tell me? 100. Very good. How did you get 100? Now, budgeted fixed overheads divided by budgeted hours. Budgeted fixed overheads is 15 lakh divided by what is the budget hours? Sir, budgeted production is 7,500. Every unit should take 2 hours, which means 7,500 into 2 is 15,000. 15 lakh by 15,000 gives me 100. That's all, guys. Very good. Next, actual fixed overheads. How much is it? 15 lakh 60,000. Yes, this is given. What is budgeted fixed overheads? 15 lakhs. This is also given. Then what is my actual hours? 16,000. This is also given. Plug and play. That's about it. Simple, guys. Such an easy area, no? All you need to do is first remember the logical flow of the formulas. Number 2, list out the ingredients. Number 3, arrive at the ingredients. Number 4, plug and play. That's about it. Simple, isn't it? Shall we do this? Yes. Now let's get started, guys. Question number 10. That's about the sum. Quickly, let's do it, shall we? Good, good, good. Write down question number 10. Question number 10. Yes, shall we? Okay. Ingredients. Come on, tell me, guys. Standard hours. First list out. Standard hours. Standard rate means standard rate per hour only. Then actual fixed overheads. Good. Budgeted fixed overheads. Everyone tell and write. Then actual hours. Very good. Very good. Now, guys, tell me. Standard hours. Now, how do you compute? I have actually produced 7,800 units. Every unit I'm supposed to take 2 hours, which means a total of 15,600 hours is what I'm supposed to take. Am I right? Yes. Next, standard rate. Standard rate, how will you arrive at it? Budgeted fixed overheads divided by budgeted hours. What is the budgeted fixed overheads? 15 lakh rupees divided by budgeted hours. What's my budgeted hours, guys? 7,500 units into 2. Guys, correct? So, which means, how much does it come out to? Yes, every hour I'm supposed to, take, what is the technical absorption rate? How much is it going to be? Rupees 100 per hour. Is that clear? Next, actual fixed overheads. Rupees 15 lakh 60,000 within bracket. Given. Next one, budgeted fixed overheads. It's going to be 15 lakh rupees. This is also given. Am I right, guys? That's about it. Next one, actual hours. How much is that? 16,000 hours. Within bracket, also given. Everything is given, guys. 3 figures are given. That's about it. Now, shall we do this? Now, first, write down what is that? Fixed overhead cost variance. Right? Here, write down formula. Absorbed, instead directly you can write SH into SR minus actual fixed overheads. Now, SH into SR. How much is that? Now, please write it properly. 15,600 into 100 minus actual is going to be 15,60,000. Am I right? So, what is my absorbed fixed overheads? 15,600 into 100. 15,60,000 is my absorbed fixed overheads minus actual is also 15,60,000, which means 0. Are you all able to understand? A or F? Bowling or fielding, nothing. It has to be 0 means 0. That's all. It is neither adverse nor favorable. Guys, which means, what does it mean here? There is a no under or over absorption. Is this clear for everyone? Now what do you do here? Branch it into 2. Everybody, do it. Now, branch it into 2. Fixed overhead, expenditure variance, fixed overhead, volume variance. Expenditure variance formula: budgeted fixed overheads minus actual fixed overheads. And on the other side, volume absorbed, that's nothing but SH into SR minus budgeted fixed overheads. Is that clear, guys? Is everyone able to remember the formula? Very good. What's the budgeted figure? 15 lakh. We've done everything. So 15 lakh minus, what's my actuals? 15 lakh 60,000. Now tell me, guys, you were supposed to spend 15. You have actually spent 15 lakh 60. So it's going to be how much? 60,000 rupees more you have spent. Adverse. Is that clear? Volume variance, SH into SR, absorbed. We already know the figure. 15 lakh 60. Am I right? So 15 lakh 60,000 minus, what's my budgeted figure? 15 lakh rupees. Is that clear? So how much is this? The balancing figure, 60,000 favorable. Is this clear, guys? So now what do you get? 60,000 adverse knocked off with 60,000 favorable. Hence your under or over absorption is 0. Is this clear for everyone? Is this clear for everyone? Now what do you do here? Now pull this and branch it into 2. What and what? CE. Yes. Fixed overheads, capacity variance, fixed overhead efficiency variance. Capacity variance, I asked you to remember one thing. What is that? AH into SR minus whatever is there on the right hand side. What is that? Budgeted fixed overheads. Right on, minus budgeted fixed overheads. Is that clear? Is that clear? And on the other side, balancing figure. What is it? Absorbed SH into SR minus AH into SR. Is that clear? Any problem? No. Now, AH into SR. AH, actual hours, we have the figures. 16,000, huh? Yes, right down here. 16,000 hours into, what is the standard rate? 100 per hour, huh? Yes, 100. Minus, what is the budgeted fixed overheads? 15 lakhs. So, AH into SR, how much is it? 16,000 into 100 is 16 lakhs, huh? 16 lakh minus 15 lakh gives you 1 lakh favorable. And on the other side, SH into SR, we know it is 15 lakh 60,000 minus AH into SR. Just now we got 16 lakh rupees. How much is that? It's going to be 40,000 rupees adverse. Is that clear? Is that clear, guys? That's about it. That's about it. Try to knock off your 1 lakh favorable, 40,000 adverse. Net gives you 60,000 favorable, 60,000 favorable, 60,000 adverse gives you 0. Is this clear, guys? That's all it is. That's all it is. Is this clear? Now, 1 second. To the extent possible, I will give you guys the logic here for capacity variance. Okay. Now, guys, quickly, if you see, now this is just a logic not required for exam. I told you that for you to understand this, some other areas which are not a part of your syllabus are required, but to the extent possible, I will just explain it here. I will not go deep. Now, AH into SR minus budgeted fixed overheads is the formula for calculating what? Everyone, capacity variance, correct? Okay. Now, just guys, this is just an explanation here I'm giving. AH into SR, we did here, minus, guys, focus here. Nothing needs to be written down, just focus here. Budgeted fixed overheads, can I say, is nothing but budgeted hours into budgeted rate. Budgeted rate is actually called standard rate. Am I right, guys? So I am just, I'm just splitting it. Is that clear? Now here, if I take the rate out in common, can I say this is nothing but actual hours minus budgeted hours into standard rate? Guys, correct? Or in other words, we are seeing, look, this is the actual hours which you are actually working with. In this case, it was 16,000. Now, in this question, budget hours are they given? 15,000. Huh? Budget hours 7,500 into 2. Guys, here actual hours is how much? 16,000. But what is the budget hours? 15,000 into what is the standard rate per hour? Huh? 100 rupees per hour. Guys, correct? So here we are seeing, look, I budgeted to have 15,000 hours, but you are actually having 16,000 hours. Guys, correct? Are you all able to understand? Which means how many extra hours you have actually consumed? 1,000 hours. For each of these 1,000 hours, you would have charged the product with how much? 100 rupees. Guys, correct? Or in other words, you are recovering right from the product, which means from the customer, 100 rupees on how many extra hours? 1,000 extra hours. Hence, it is a favorable variance. Are you able to understand? This is the capacity variance. Capacity means overall hours. Is that clear, guys? Are you now able to understand the capacity difference? So, because of this, I'm comparing what with what? Actual hours and budgeted hours. Is this clear, guys? Is everyone able to understand this? Any problem here? Any issues here? You guys are able to understand. Now, on the other hand, you have what? Efficiency variance. Guys, you have what? Efficiency variance. Efficiency variance is what? SH into SR minus AH into SR. Now, here once again, SR is common. Guys, so literally, if you take SR in common, you get standard hours minus actual hours into standard rate. This is nothing but our normal efficiency calculation. No, standard hours minus actual hours into standard rate. Guys, are you all able to understand? So they are saying overall the volume variance is attributable to because of two reasons. One is your capacity variance, the other one is your efficiency variance. Capacity compares actual hours with budgeted hours. Guys, correct? Whereas this one compares standard hours with actual hours. Is that clear? If you net off everything, ideally speaking, AH and AH gets knocked off. Ideally, you will get the difference between standard hours and budget hours. That's why on the top, we have volume variance. This compares absorbed with budget overheads. Is this clear, guys? Right? This is the logic for this. To this extent, if you know it is enough. Sir, I didn't understand. It's okay, leave it. Is that clear, guys? Beyond this, if I get too technical, then I will have to get into those portion of your syllabus which is not applicable at the intermediate level. Hence, this is sufficient for you to understand. Is everyone able to get this, guys? Are you all able to understand? So fixed overheads cost variance formula. Absorbed minus actuals. Absorbed overheads means two ways you can arrive at it. Units method means standard rate per unit into actual output, or hours converted SH into SR. Clear with this? So absorbed overheads minus actual overheads. Branch it into two. What and what? Fixed overheads expenditure variance. Fixed overheads volume variance. Expenditure variance. Budget minus actuals. Volume variance. Absorbed minus budgeted. Volume variance classified into two. Capacity variance, efficiency variance. Capacity variance, remember this. AH into SR minus whatever is there. Budget overheads, right? Budget fixed overheads. The other one, efficiency variance, is your balancing figure. Absorbed overheads minus AH into SR. As simple as that. Beyond this, nothing is there. Is this clear, guys? Are you all able to understand? Is there any issue here? Is there any issue here? No. With this, have you guys written down the library of adjustment? No. Please write down. Please write down. Fixed overhead cost variance hyphen. Fixed overheads cost variance hyphen direct computation. Write down direct computation. Within bracket, write down, guys. Within bracket, write down without calendar variance. What is it? We will see in the next sum. Without calendar variance. Without calendar variance. Is that clear? Okay. Shall we move on, guys, to the next sum? Okay. Shall we get started with the next question? Okay, let's get started. By the way, guys, this question number 10A, ideally it's a wrong classification. This should come under 11. So 11, I think under 11 already we have 11A. This should ideally come as 11B. Okay, this is ideally not coming under this question. It should come under the next question. Okay, shall we begin, guys? Yes. Now, look at this next question. Question number Guys, question number 11. Now shall we get started? Yes. Now question number 11. Now guys, in this question, one more concept we will learn called as calendar variance. So this sum is fixed overhead cost variances with the calendar variance. With this, officially we would have completed all the concepts in this particular chapter. Whatever are the remaining sums, they are just meant for additional practice or variant, different variety of sums. Is that clear, guys? Shall we do it? This question has the last concept of this chapter. Shall we get started? Yes. Now, a company has a normal capacity of 120 machines working 8 hours per day of 20 days, 25 days in a month. Is that clear? So normal capacity, what they are saying, so generally, sir, 120 machines I have, every machine will work for 8 hours a day. Like that, it works for 25 days in a month. Is that clear? The fixed overheads are budgeted at 1,44,000 rupees per month, which means budgeted fixed overheads available. Yes. The standard time required to manufacture one unit is how much? 4 hours. To produce one unit, you are allowed to take 4 hours. In the month of April, the company actually worked for how many days, guys? 24 days. Now, of 840 machine hours per day and produced 8305 units of output. Actual output is available. Yes. Now, the actual fixed overheads were 1,42,000. Compute the following fixed overheads variances: efficiency, capacity, calendar, expenditure, volume, total. Basically, compute everything. Now, if you notice in this question, there is one new value addition. What is that? Now, calendar variance. Sir, when will you have calendar? Calendar means what? Calendar means what? Calendar, no? You will see your calendar, month. Basically, calendar represents the duration, right? Days, months, whatever it is. Now, in this question, if you notice, they have budgeted. The budget data is pertaining to 1 month. Guys, correct. Actual data is also pertaining to 1 month, but there is one small catch here. What is it? In the budgeted data, in a month, I expected to work for how many days? 25 days. But I actually worked only for 24 days. Or in other words, remember, when the number of days in the budgeted period and the number of days in the actual period are different, in that case, you will have something called as calendar variance. That's why one look at the previous sum I told you, don't do it now, because budget days were 25, actual days were 27, which means you have calendar variance here. So the moment you look at the question, if it has the number of days is different in the budget and actual period, it means what? You have something called as a calendar variance. Is that clear, guys? Is that clear? Everyone able to understand this? Yes. Sir, in this case, sir, what will I do? What will I do? Now, 1 second, guys. Now, there's one thing that is different here. What is it? Now, if you notice, guys, I budgeted to incur an overheads of how much? Everyone, 1,44,000. Now, 1 second. Now, you all know your fixed overheads is not dependent on units, but it is dependent on the duration. It is period. It is periodical. Sir, 2 months, sir, I am staying in a place. You need to pay 2 months rent. So it varies depending on the period. Am I right, guys? But it doesn't vary based on the output. Guys, correct? Now you guys tell me. In this case, 1,44,000 I expected to be the fixed overheads for how many days? 25 days. But actually, I spent only 24 days in a period, which means in this case, I need to compute something called as possible budgeted fixed overheads. Is that clear, guys? What is it, everyone? Possible budgeted fixed overheads. Is that clear? Sir, what is this possible budgeted fixed overheads? Simple. It is going to be budgeted fixed overheads 1,44,000 divided by number of days in the budgeted period. So this is for 25 days. Then how much will it be for actual days? 24 days. Logical or not, you tell me. Logical. How much is it? 1,44,000 divided by 25 into 24. How much is it? 138,240. Is this clear, guys? I compute something called as possible budgeted fixed overheads. Means what? So budgeted overheads divided by number of days in the budget period into number of days in the actual period. Is this clear? Now, sir, with this, what are we going to do? I will tell you. I will tell you. Now, guys, you all tell me what is the formula. The entire tree. Once again, you tell me fixed overhead cost variance. Once again, fixed overhead cost variance formula. Tell and write along with me. Please tell and write along with me. Yes, write down. What is it? Can I say directly? Absorbed fixed overheads minus actual fixed overheads. Correct? Very good. Now this can be branched into two. Very good. What and what? Fixed overheads expenditure variance, fixed overheads volume variance. Am I right, guys? Now, fixed overheads expenditure variance formula: budgeted fixed overheads minus actual fixed overheads. Am I right? Yes. Volume variance balancing figure: absorbed fixed overheads minus budgeted fixed overheads. Is that clear? Everything is same. No difference here. Now, this gets further branched. Now, not into 2. I branch it into 3. Is this clear, guys? Is this clear, everyone? Is this clear, everyone? Now, what are the 3? First one I have fixed overheads. C, capacity variance. And on the end, I have what? Fixed overhead efficiency variance. Is that clear? Now, capacity variance. Generally, what is the formula? I told you AH into SR. Now, wait. Minus, generally what we do? Budgeted fixed overheads. Now, what we are saying, don't take budgeted fixed overheads. Ideally, it's not the correct figure, no. We should take what? Possible budgeted fixed overheads. Am I right? Or I can say revised budgeted fixed overheads. Whatever it is. Some people call it revised, some people call it possible. Is that clear? So here, instead of taking this figure, what will I do? Take a red ink and say minus possible budgeted fixed overheads. Is that clear? Guys, are you all understanding this? Are you all understanding this? Sir, now if I do this, it will not tally, no sir, with the top. Wait, don't worry. Introduce another guy called fixed overheads calendar variance. Now what he will do, he will just reverse it. Don't worry. What he will say is, he's saying this is nothing but budgeted. One second, sorry. So what he will do is possible budgeted fixed overheads minus budgeted fixed overheads. Is that clear, guys? So what he does, literally, if you take this out, this and this gets knocked off. Are you understanding? Literally, you get AH into SR minus budgeted fixed overheads. Are you all able to understand? So this guy calendar variance will come in and he will neutralize this. Is this clear, guys? So he says possible budgeted fixed overheads minus budgeted fixed overheads. The difference between the two is called as a calendar variance. Because of this calendar only it's coming. No. Are you all able to understand? That is nothing but 1 day's fixed overheads. Guys, correct in our example. Is this clear, guys? Is everyone able to understand? So, when the number of days in the budgeted period is not equal to the number of days in the actual period, you have something called as a calendar variance. Is this clear? Is everyone able to understand? Now in that case, what will you do? Capacity variance. What is the formula? AH into SR minus possible budgeted fixed overheads. Immediately, calendar variance will reverse this. Possible budgeted fixed overheads minus budgeted fixed overheads. This and this gets knocked off. Guys, this is positive, this is negative. Is this clear? And literally, this is what you will get. Now, efficiency variance, no change. That is always the balancing figure. Same formula. What is it? Absorbed fixed overheads minus AH into SR. Is this clear, guys? That's all it is. Literally, we have covered the entire chapter itself right now. Is this clear, guys? Is everyone able to understand? Any problem, any issues here? So when the number of days in the budgeted period is not equal to the number of days in the actual period, you have something called as calendar variance that will have a new line item called as possible budgeted fixed overheads. In that case, capacity variance will be what? This one. Fixed overheads capacity variance. AH into SR minus possible budgeted fixed overheads. Immediately, calendar variance, possible budgeted fixed overheads minus budgeted fixed overheads. Then efficiency variance, balance figure. That is always, that will not have any impact. Is that clear? Because this new line item is getting knocked off here itself. No. So this will not impact my efficiency variance. Is everyone able to understand this? Guys, is everyone able to understand this? So in this case, now if you have a calendar variance, additionally you will have one more line item called as possible budgeted fixed overheads. So AH, SR, then actual AH into SR is going to be your absorbed, no? Then actual budget, your absorbed minus actual is only going to be a top line item. Guys, correct? Actual third, then budgeted fourth, then AH fifth, then possible budgeted fixed overhead. Sixth line item. 6 line items and you will be done. Ingredients are these 6 line items. What are they? AH, SR, actuals, budgeted, sorry, this is SH, SH into SR, sorry, SH, SR, actual fixed overheads, budgeted fixed overheads, AH, possible budgeted fixed overheads. 6 line items if you compute this entire area you can cover. Is everybody able to get this? Perfect. Now can we do the sum? Can we do the sum? Now what have they asked? They've asked us to compute everything. Now list out the ingredients, start solving the question. Shall we solve it? Question number 11, no? Righto, let's begin. Question number 11. Question number 11. Now ingredients. List out standard hours, standard rate, actual fixed overheads, budgeted fixed overheads, actual hours, possible budgeted fixed overheads. Is that clear? Now, standard hours. Look at the question. What is a standard hours? Now, I've produced how many units? Read. So, 5,305 units I've produced. Every unit I'm allowed to take. Everyone answer. How many hours? 4 hours, right? So how much is that going to be? 5,305 into 4. 21 to 20 hours is what I'm supposed to take. What is the standard rate per hour? Come on, can anyone tell me what's the standard rate per hour? Calculate. Come on. Budgeted fixed overheads divided by budgeted hours. 6. You got? Excellent. How did you get? Now read the question. Budgeted fixed overheads. How much is it? 1,44,000 is the budgeted fixed overheads divided by, in a month, how many hours am I planning? Sir, I have 120 machine. Each machine will work for 8 hours and I planned for 25 days a month. Am I right? So 120 into 8 into 25 gives you 24,000. 144,000 by 24,000 gives me 6 rupees per hour. Very good, guys. 6 rupees per hour. Is that clear? Next one. Actual fixed overheads. How much is that? It's given in the question, rupees 142,000. Guys, pick it up. Now, most of the students are answering. Some students are not answering. Please be careful. Do it by yourself. If you have any issues, let me know. Online folks, try it, attempt it by yourself. You will definitely get it, right? If you still have any issues, please let me know. Is that clear? Next one, budgeted fixed overheads. That's given. How much is that? Rupees 1,44,000. Am I right, guys? Yes. What's my actual hours? That's also given. How much is that? 20,160. How did you get? In a day, 840 machine hours. Machine hours means number of machines into hours. They have calculated. It worked for 24 days. Excellent, guys. Write down within bracket 840 machine hours into 24 days. Excellent. Very good. I'm very happy. 20,160 hours. Very good to see that you guys are answering it correct. 20,160, right? Perfect. 840 to 24. Next one. Possible budgeted fixed overheads. Red ink and do it. First time we are doing, hence red ink. Now it's going to be what? It's going to be what? So, budgeted fixed overheads. 1,44,000 is the cost I expected for how many days? So, for a 25 day in a month period. So, into 24 days. So, for 24 days, how much is that going to be? 144,000 by 25 into 24. Rupees 138 240. Is this clear, guys? That's about it. All the ingredients are available. Then what are we waiting for? Let's do this. Come on, come on. Repeatedly do it. It will stay with you for a lifetime. Write down fixed overheads, cost variance. Now, formula SH into SR minus actual fixed overheads. Now, what's SH into SR? 21 to 20 into what's the standard rate? 6 minus what's the actual? 142,000. So 21 to 20 into 6 gives you 127. 320 is my absorbed overheads. What's my actual? 142,000. So how much is that? 14,680 adverse. Is that clear? One second. So now this is the absorbed overheads. Am I right, guys? And what is this? This is the actual overheads. Am I right? Now I have absorbed only 127, 320. But at the end of the year, I got to know that 1,42,000 is the actual, which means under or over absorption. Under absorption. Under absorption means what? Sir, I have till now absorbed only so much. I need to actually charge how much? 142, which means 14,680. I now need to introduce a fresh cost. Guys, correct? If I introduce this cost right now, my profit will reduce. Anything that has an impact of reducing the profit is an adverse variance. That's how you should look at it. Are you all able to understand? Logic, you guys are understanding. So, under absorption will have an adverse variance. Why? Because under absorption means now you have not yet accounted some cost. Now you are accounting for it. The moment you account for it, it will reduce your profit. Anything that has an impact of reducing the profit is called as your adverse variance. Are you guys able to understand? Excellent. Very good. Next. Now, this needs to be bifurcated into what and what. So, fixed overheads, yes, expenditure variance, and fixed overheads, volume variance. Very good. Expenditure variance formula. Budgeted fixed overheads minus actual fixed overheads. And how about the other one? Volume variance. SH into SR absorbed minus budgeted fixed overheads. Figures. Budgeted fixed overheads, we have it. 1,44,000 minus 1,42,000. Now look at this. I am allowed to incur 144. I have incurred only 142, which means 2,000 rupees I've saved for the company. 2,000 favorable or adverse? Favorable. On the other hand, volume variance absorbed was how much? Rupees 127,320. Am I right, guys? This is the line item. Yes. Minus what's my budgeted figure? 144,000. So subtract the two. How much you get? 127,320 minus 144,000. So 16,680. Yeah? 16,680 is going to be adverse. Is that clear? Now check it once. 2,000 favorable, 16,680. Net off you get how much? 14,680 adverse. Is this clear, guys? Yes. Now I'm going to the next page. Now volume variance is bifurcated into 3. What, and what? So now fixed overhead, capacity variance, fixed overhead now, calendar variance, fixed overhead, efficiency variance. Very good. Capacity variance formula. AH into SR minus possible budgeted fixed overheads. Calendar variance immediately reverse. Possible budgeted fixed overheads minus budgeted fixed overheads. Finally, efficiency variance. Balancing figure. What is it? Absorbed SH into SR minus AH into SR. Is everyone able to understand? Yes. AH, how much is the figure? AH. 2160 into SR, 6. Write down. 2160 into 6. Minus what's my possible budgeted fixed overheads? We saw this 138,240. 138,240. 1 second. So 2160 into 6. How much is that? 120, 960 minus 138, 240. Yeah? So 138, 240 gives you 17,280 adverse, is it? Yes, 17,280 adverse. Is that clear? Perfect. Then, so here, possible budget fixed overheads. 138, 240 minus budget 144. 144,000. How much is that? 5,760. Once again, adverse. Is that clear? Next, what is that? SS into SR. We already got this 127, 320. 127, 320 minus AH into SR. We got this 120, 960. 120, 960. You get a favorable law. 127, 320 minus 120, 960. 6360 within bracket favorable. Is this clear? Is this clear, guys? Now try to net off these three. 17,280 plus 5760 minus 6360. You get 16,680. Get your daddy. Yes, 16,680 adverse. Is that clear? That's about this area, guys. Very simple, isn't it so? Very simple, isn't it so? You guys tell me. You guys have to tell me. Yes, that's about this particular area. Please go and update your library of adjustments. Write down. Question number 11. Question number 11. Write down. Fixed overhead cost variance FOHCV hyphen direct computation with calendar variance. Direct computation with calendar variance semicolon. Now in this question also, calculation of standard rate. Some of you struggled. Write down. Calculation of standard rate. Calculation of standard rate and possible budgeted fixed overheads. This is a new calculation. Calculation of SR and possible budgeted fixed overheads. Is that clear, guys? Right? That's ideally about this entire chapter itself. But anyways, we have done question number 11 now. Okay, we just have 5 more questions to do. Right? We will cover this in the next session and we'll be done with this particular chapter. One second. So question number 11A is there. That 10A also is there. Will you do it? Guys, will you please do it? Please do it. Take these as homework. There is no value addition in me doing this question once again. It is direct only. Is that clear? If there is any, if you remember in the previous chapters and all, if the sub question is a little tricky, you do it fully also, right? But if there is nothing great and all, it is meant for your practice, please do it. We are also doing the sub questions wherever it is challenging. Here it is easy, hence I am asking you to do it. Is that clear? Please do it. Take it as a sincere homework and please do it. So with this, I am concluding this session. Please revise and practice all the sums we've covered till now, and I will see you all in the next one. Thank you all so much. Bye-bye. So you're imitating me, is it? Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now, let's continue our discussion in this chapter, standard costing. So we've done 11 questions now. We have covered all the variances of this chapter. Material cost variances, labor cost variances, variable overhead cost variances, fixed overhead cost variances, everything, and fixed overheads with calendar, everything has been completed now. So now we just have to do some practice questions. That's about it. Shall we get started, everyone? Let's do this question in number 12. Shall we begin? Right. Now will you guys be fully focused? Huh? Perfect. Let's do this. Question number 12. Now, the following information was obtained from the records of a manufacturing unit using a standard costing system. Standard actual. Okay. Now, production is how much? 4,000 units. Actual production is 3,800. Guys, wait. Now, they have used the word standard. Is it correct or wrong? Is it correct or wrong? Is it correct or wrong? Standard means what? For the actual output, what is the cost you should have incurred or hours you should have spent and all that? This is pertaining to how many units, sir? 4,000. Literally speaking, the correct word is budget. Don't think I made a typo error. Now, this is how institute keeps the questions. They will confuse you. In this case, this is not a standard. Ideally, this is a budget data. Is that clear? How do we know, sir? Standard means for the actual output, what should have been spent or incurred or whatever it is. Is that clear? Hence, this is your budget data. Production, they have given. Actual is given. Now, budget working days, 20. Actual working days is 21, which means you have calendar variance. Machine hours, budgeted actuals. Fixed overheads, budgeted actuals. Variable overheads, budgeted actuals. You are required to calculate the following variances. What is it? Variable overhead variances, fixed overhead variances. This is all they have asked us to compute. Is that clear? Now, one second. Now, guys, we will do something. What? Two variances they have asked. That is two categories. That is part 3 and part 4. Variable overhead, fixed overheads. Now, I am not going to do the variances, but we will compute the ingredients and keep. Shall we do that? Then once you compute the ingredients, what you should do? Plug and play. That is a homework for you. Will you do that? I will compute the ingredients and we will do it. Is that clear, guys? Shall we get started? Okay, fine. First one, what is it? Variable overhead. So question number 12. Okay, so you can leave some, once I compute the variances, ingredients, leave some gap, you should fill it in. Plug and play, you should know what to do. Is that clear? Now, whatever is the value addition, we will do it fully in the class. So now, question number 12. Now, first one, write down part 1. What is it, guys? Variable overhead variances or cost variances. Okay. Now, what are the ingredients for variable overhead variances? Guys, come on, everyone. Standard hours, standard rate, actual hours, actual rate. While doing this, forget your fixed overheads. Just focus on variable overheads. Variable overheads. First one, your standard hours means what? For the actual production, how many hours you should have spent? Come on, tell me, guys. Tell me. Tell me, how will you compute? How much is the standard hours? 7,600. Excellent. How did you do? Simple. Sir, they have clearly given. They should have spent 8,000 hours. For how many units? 4,000 units, which means per unit you are allowed to take 2 hours. You have actually produced how many units? 3,800. For the actual production, you are allowed to take 3,800 into 2. Is that clear? So, write down your standard hours within bracket, calculation. 8,000 hours is allowed for producing 4,000 units. How many hours is allowed for producing 3,800 units? Is this clear? Guys, this presence of mind you should have. Is that clear? It's going to be how much? 7,600. 7,600 hours. Is that clear? Now, standard rate, how much is it? Variable overheads. Compute. Very simple. 15 per hour. Excellent. How did you get? Sir, 1,20,000 is the budgeted variable overheads. For how many hours? 8,000. Which means per hour, how much is it? Very good, guys. Compute it. Write down here. Computation should be written down clearly. Write down. It's going to be rupees 1,20,000 divided by 8,000 hours. Budgeted variable overheads divided by budgeted hours. Is that clear? How much is it? Rupees 15 per hour. Now, what is the actual hours? They have given in the question. It's going to be 7,800 hours. What is the actual rate? Can anyone tell me the actual rate? 15.38. Excellent. How did you get? Simple. Actual overheads, variable overheads divided by actual machine hours. That's all. No. Guys, write down here. It's going to be how much by how much? 1,20,000 actual variable overheads divided by actual machine hours of 7,800 gives you 1,20,000 divided by 7,800 gives you rupees 15.38 something per hour, but retain the decimals in your calculator by doing the calculation. Is that clear? Done. Now. That's all. I'm going to stop here. But from this, you will do. What will you do? First, variable over cost variance formula, everyone. Standard hours into standard rate minus actual hours into actual rate. Segregated into two. Variable overhead, expenditure variance. Very good. Responsibility. Maintenance department. Excellent. Formula. Standard rate minus actual rate into actual hours. Excellent. On the other side, variable overheads, efficiency variance, responsibility, production manager, formula, standard hours minus actual hours into standard rate. That's about it. Will you guys do that? Leave some gap. Continue with part 2. Will you guys do that? Plan your space. You should know how much space you need to leave. This space is for you to fill it up. Will you do it? You should do it, guys. When you are doing it as a homework, online folks, tell and write. Do it. Is that clear? Next one. Go on to part number 2. Part 2. What is it? Fixed overhead cost variances. Is that clear? Shall we get started? Yes. Now. Fixed overhead cost variances. Now, in this question, you guys tell me. You have calendar variance or not? Yes. How do you know? You have your number of days in your budgeted period, number of days in your actuals is different. Is that clear? Which means you have something called as, yes, calendar variance. Possible budgeted fixed overheads. Which means now you need to compute what all. Now, once again, hours are available. Yes. So, which means your standard hours, standard rate, SHSR, actual fixed overheads, budgeted fixed overheads, actual hours, possible budgeted fixed overheads. Excellent, guys. List out the ingredients. Let's find it out. Then plug and play. You need to do it. Will you do it? Yes. Come on, let's do this first. Write down. What is it, guys? First one. Write down. Standard hours, then standard rate, then actual fixed overheads, then budgeted fixed overheads, then actual hours, then possible budgeted fixed overheads. That's about it. Now, standard hours. Now, don't break your head. Already computed before. Correct? How much was that? 7,600. Write down here. 7,600 hours. Within bracket, part 1. Already computed in part 1. Yes. Now, standard rate. Can anyone tell me what is the standard rate? Can anyone tell me what is the standard rate? Come on, tell me. 50 per hour. Very good. How did you get? Simple. Budgeted fixed overheads divided by budgeted hours. It's called as budget rate. Standard rate. Guys, correct? Excellent, guys. Very good. This shows your understanding in the subject. Write down. 4 lakh rupees. Sorry. 4 lakh divided by 8,000 hours. How much is that? Rupees 50 per hour. Is that clear, guys? Next one. What's my actual fixed overheads? Rupees 3,90,000. How did you get this? Your friend gave a given. By whom? Of course, the question. Next, budgeted fixed overheads. Given once again. Very good. 4 lakh rupees given. Next one. Actual hours. How much is my actual hours? Once again given. How much is that? 7,800 hours. Within bracket given. Now, possible budgeted fixed overheads. How will you do it? Budgeted fixed overheads, sir. 4 lakh is the budgeted overheads for a budgeted days of 20, but actual days is 21. For that, how much is it going to be? Tell me, how much is that? 4 lakh by 20 into 21 gives you rupees 4,20,000. Is this clear, guys? Is this clear? Are we done here? Are we done? Is everyone able to understand this? Guys, correct? Now, this possible budgeted fixed overheads is also known as revised budgeted fixed overheads. Some people call it as possible. Some people call it as revised. Both are correct. Is that clear, guys? You can say revised budgeted fixed overheads, or you can say possible budgeted fixed overheads. Is that clear? Right. Now. After this, you guys will do. Anyways, once again, revise. Now, formula. Everyone tell. It's okay. Learn like a child. Bring the child mode. Fixed overheads cost variance. Formula. Absorbed fixed overheads minus actuals. Absorbed is nothing but SH into SR. Perfect. Classified into 2. Fixed overhead expenditure variance. and fixed overheads volume variance. Expenditure variance. Budgeted fixed overheads minus actual fixed overheads. On the other side, absorbed fixed overheads minus budgeted fixed overheads. Now volume variance is classified into three: capacity variance, fixed overheads, calendar variance, fixed overheads, efficiency variance. Capacity variance, AH into SR minus possible budgeted fixed overheads. Very good. Next, your what is the name? Calendar variance, possible budgeted fixed overheads minus budgeted fixed overheads. Finally, name fixed overheads efficiency variance, balancing figure. Absorbed, that is SH into SR minus AH into SR. Simple. Will you do this? What you need to do, just plug and play. That's all. Everything we have done. Is that clear, guys? Go update your library of adjustment. Write down. Write down. Variable overhead, VOHCV, variable overhead cost variance, plus FOHCV, VOHCV plus FOHCV hyphen VOHCV within bracket direct computation, VOHCV within bracket direct computation, semicolon, FOHCV within bracket with calendar variance, FOHCV within bracket with calendar variance, FOHCV within bracket with calendar variance. Is that clear? Guys, will you do this? Any issues, any problem here? Any issues, any problem here? Are we done? That's about this question. Let's move on to the next one. Is this clear, guys? Right, that's about it. Let's go on to question number 13. Shall we? Okay. Mark this sum as important. It's a study material question. A good question. Shall we do this? No. Let's do this. Yes, guys. Let's do this question number 13. Now, the overhead expense budget for a factory producing to a capacity of 200 units per month is given as follows. Description they have given: power and fuel, repairs and maintenance, printing, stationery, other overheads and all. We are not bothered about that. Breakup, fine. Overall, what is the fixed units, fixed cost per unit? How much is it? 3000. What is the variable cost per unit? 1500. Total cost per unit 4500. When the output level is 200 units. This is budget. The factory actually produced only 100 units in a particular month. The details of the overheads actually incurred have been provided below. What have they given? Actual overheads is how much? 3,75,000. Okay. Breakup and all they have given. That's not required. Overall, total overheads is how much? Oh, sorry, this is not total. I am so sorry, guys. I am so sorry. They have given breakup wise power and fuel, repairs and maintenance, printing and stationery, other overheads. Okay, this is the amount they have given, which means how much is the total overheads? I'm so sorry. How much is the total? 4 plus 2 is 6 plus 1 is 7, 7.75, 8.5, yes, okay. 8.5 plus 3 is 11,50,000. Huh? 11,50,000 is the total overheads actually incurred. This 11,50,000, is it variable or fixed? Variable, fixed? Huh? Both. It is variable plus fixed. Okay. Now, what are they asking? Simple. Calculate overhead volume variance, overhead expense variances. Means what? Expenditure variances. Huh? Are they asking fixed or variable? Volume. Are they asking for fixed overhead or variable overhead? Fixed. Why? Only there you have volume variance. Okay, then how about expenses variance, expenditure variance? For both they are asking. That's why it's plural. Overhead expense variances. You have expenditure variance there, variable. Even in fixed, you have no. Yes, correct. Expenditure variance is what? Budget minus actuals. So that's why they have given plural. Look how they've asked. Look how they've asked. Sum, no? Superb sum. So, volume is only for fixed overheads. Expenditure is for variable and fixed. Separately, you need to compute. Compute. Don't look at the answer. Compute. Compute, guys. I'll give you 2 minutes time. Do it, and then we will continue with the discussion. Online folks, pause the video now. Attempt this question by yourself, and then we will get started. Now, guys, a very good sum. First, they have asked for what? Everyone, they have asked for. Okay. First, we will do fixed overhead volume variance. Okay, this is question number. Okay. So, question number 13. Now, first one, fixed overhead volume variance. Now, guys, tell me what is the formula to compute fixed overhead volume variance, everyone? Now, here the formula is going to be absorbed fixed overheads minus budgeted fixed overheads. Am I right? Now, please don't say SH into SR. In this question, all the data is given in terms of units. You can't calculate absorbed overheads by using what? Your hourly data and all. It needs to be done by using units method. Guys, are you all able to understand? Right? Now, in that case, absorbed fixed overheads. Can I say, guys, what is the fixed overheads absorption rate? Standard rate per unit is how much? 3000 into actual production. How much is it? 100. So 3000 into 100 gives me 3 lakh is the absorbed overheads. Guys, correct? Now, minus actual, minus budget only. They have given minus budget only. No, what is budgeted fixed overheads? 3000 into 200. Guys, correct? Are you all able to understand? Is there any issue here? That's all it is, no? So absorbed overheads is going to be, come on, write down here, 3000. What is this? Predetermined rate, standard rate per unit into actual output, 100 units. Is that clear? This is going to be my absorbed fixed overheads minus what is budgeted. Sir, they have given 3000 rupees per unit for how many units level? 200 units level. If I multiply the two, I get budgeted fixed overheads. Is this clear, guys? This is the smartness you should have. Excellent. Almost every one of you got it right. Others, now you're getting it? Yes, very good. How much is this? Rupees 3 lakh minus rupees 6 lakhs. Is that clear? How much is that? It's going to be 3 lakh rupees adverse. That's all, guys. Nothing beyond this. 3 lakh adverse. Is this clear? Are you all able to understand? The next thing they have asked is what? Fixed overhead. We will do fixed overheads first. Fixed overheads expenditure variance. Write down fixed overhead expenditure variance. What is the formula for expenditure variance? Yes, write down budgeted fixed overheads minus actual fixed overheads. Is that correct? Now, budgeted fixed overheads, we know it is 6 lakhs. Now, what is the actual fixed overheads? Now, sir, actual overheads is how much? 11 lakh 50. That is not actual fixed. It is fixed plus variable. Now, from my actual overheads, I need to subtract the actual variable overheads. I will arrive at the actual fixed overheads. Now, how much is the actual variable overheads? 1 lakh 50. How did you get? 1500 into 100. Now, 1500 is the variable overhead cost you should have incurred per unit. Actually, you incurred 1500 per unit. Have you actually incurred 1500? Have they given anywhere? This is your budgeted data, no? Every unit you are supposed to spend a variable cost of 1500. But actually, how much have I spent? Not given. In this case, we will assume that variable cost per unit, right, incurred, actually incurred, is also 1500 per unit. Is that clear? Are you all understanding? Variable cost should remain constant on a per unit level. So whatever I budgeted to incur per unit variable cost, I have actually incurred. Is that clear? That is an underlying assumption you should take in this question, else you can't solve. Is that clear, guys? Right? Now, this is what you need to do in the question. Institute, this is how they have done, but they have not given this assumption explicitly. Is that clear? So, write down here, write down here, write down here, write down here. Take a red ink, write. Assuming that actual variable overhead per unit is also rupees how much? 1500 per unit. Now in that case, what will you do? Come on, write down. Actual fixed overhead will be equal to total overheads minus variable overheads. Am I right, guys? Hello, everyone. Now, what's my total overheads? 11,50,000 is the total amount. From that, remove the variable, actual variable. Sir, variable, how much, sir? I assume that every unit I incurred only 1500. How many units did I produce? 100 units. This is going to be rupees 11,50,000 minus rupees 1,50,000. It's going to be how much? It's going to be rupees 10 lakhs. Is that clear? Guys, are you all able to understand this? Are you all able to understand? So 10 lakh is the actual fixed overheads. Now tell me, guys, fixed overhead expenditure variance is going to be budgeted fixed overheads. How much is it? 6 lakhs you should have incurred minus what is the amount you've actually incurred? Rupees 10 lakhs. Is that clear? Guys, are you all able to understand this? Are you all able to understand? Any problem here? No. How much is this, guys? Rupees 4 lakh adverse. Is that clear? Guys, is that clear? It's going to be 4 lakh adverse. Are you all able to understand? Any problem? Any issues here? Any problem? Any issues here? No. That's about it. Now, variable overhead, once again, variable overhead expenditure variance. What is the formula? Standard rate minus actual rate into actual hours. Now, in this question, you can't do that, no? So yes, you can't do expenditure variance for variable overheads because the data is not available. Suppose, sir, if I want to do it on a per unit level, in that case, it will be standard rate per unit minus actual rate per unit into actual output. If at all you do that, we assume that the standard rate is equal to actual rate. Just now we saw, no? Assume that actual variable overhead is also 1500. So don't worry too much. Leave it there. So the data is not sufficient for you to do it. I think in the institute also they have done only that much. Look. Fixed overheads alone, they have done it. Is that clear, guys? That's about this question. Very small question. It just requires a very good presence of mind. Is that clear, guys? Please go and update your library of adjustments. Has everyone understood this? Yes, please go and update it. Write down, write down, write down. Write down. Calculation, write down, write down. 1 second. Here, 13th, no? Yes, write down. Fixed overhead cost variance hyphen calculation calci of fixed overheads volume variance and fixed overheads expenditure variance. Calculation of fixed overheads volume variance and fixed overheads expenditure variance using units only. Using units only. Mark this as important. A good sum. Mark this question as important. A good sum, small but good. Are we done? That's about this question number 13. Guys, question number 13, A, will you solve it? Now the company has the following standards. Variable overhead per unit you should incur 10. Fixed overhead per month you are supposed to incur 1 lakh. This is what? Budgeted fixed overheads. This is standard overheads per unit they have given. Capacity of the plant is how much? 20,000 units per month. The actual data is given. Base means what? Now this is the amount. I mean, this is the budgeted quantity. Am I right, guys? Hello. Budgeted output is how much? 20,000 units. The capacity is given in the question. Am I right? Guys, everyone, please answer. Right now, what have they asked for? Now, based on this, actual overheads is 3 lakh, actual output is 15,000. Calculate what, guys? Calculate your volume variance and your expenditure variance. Once again, they have asked only a very similar calculation. I think both are meant only for your fixed overheads. Clear? This very similar sum, no? Right? Please do it, guys. That's about it. Now, shall we move on to the next question, number 14? Shall we get started? Hello? Hello? Yes. Okay. So, now question number 14, 15, 16. Now, guys, these three questions are relating to missing figures. These three questions are relating to what? Missing figures. You need to do missing figures questions here. Shall we get started? A different variety, guys. That's about it. Now, in missing figures, you can have so many varieties of problems. Simple. If they give one data, ask you to find another data, that is missing figures. They can give some other data and ask some other data as missing figures. Now, in that case, missing figures, you can have so many variety. So, we are just going to do some varieties of questions, whatever it is. Is that clear, guys? So, still, I want to do it. Ideally speaking, all these things I can give it as homework and ask you to practice. But in the classroom, I wanted to do a few missing figures problems. Literally, we have covered the chapter, right? Some variety of questions we will do. Shall we get started? Yes. Question number 14. Shall we begin, guys? Now, look at this. CAP Limited operates a system of standard costing in respect of one of its products which is manufactured within a single cost center. The following are the details, budgeted data. What have they given? Now, look at this budgeted data, guys. Budgeted data. What have they given? Material A, B. Quantity is given. Standard price is given. Correct? They have multiplied, arrived at the value. The total input is 100, allowed a normal loss is 20, output is how much? 80. Correct? Hello? And for this, the cost is also given. Actual data given. What is actual data? Actual input is 80. Actual output is 80. Now, they have given, look at this, material A. Actual quantity is given. Actual price, you need to find out. For B, actual quantity is not given. Actual price is given. Actual quantity of B you need to find out. Amount they have not given. Is that clear? Now, next one. Material price variance. One second, guys. I think there is an issue here. I'm sorry. This is material price variance of A. That is product A alone, I'm saying. This is material price variance of product A. Is how much? 105 adverse. Only of product A. Is that clear? Is that clear? Hello? Done. Next, they have given material cost variance. One second. Material cost variance. This is total material cost variance. A plus B put together. Is that clear? 275 adverse. Are you all able to understand? Now, you are required to calculate what? Actual price of A, actual quantity of B. Material price variance of what? A plus B, total. Material usage variance, A plus B, total. Mix. Sub-usage means yield. Sub-usage, yield variance. All other variances you are required to calculate. Simple, guys. Now, once you calculate these two, everything else you will be able to calculate. Am I right? Now, one second. In this question, 60, 40, what are they? 60, 40, can I say they are standard quantity? Standard quantity, or with this you will arrive at the mix only? Are they directly standard quantity? Yes or no? Yes or no? Yes. Why? Guys, in the budgeted data, what is the output level? Wow, how much is the output? Hi, so how much is the output? 80. Actual output is how much? 80, which means the budget data itself is standard data. Am I right? Guys, are you understanding? The budget is also pertaining to 80 units. Don't consider input, ma. This is pertaining to 80 units, no? To get 80 units of output, you should input 60 kgs of A, 40 kgs of B. Actual output is how much? 80. For this 80 units, you need to input 60 kgs of A and 40 kgs of B. Or in other words, this itself is your standard quantity. Are you able to get this? Guys, clear? Now, with the given data. What is given? Material price variance of A alone is given, and total material cost variance is given. Is that clear? With this, now first one I want you guys to tell me. Now I'm not going to do the full sum. We need to calculate this and this. Now once again, so standard quantity is available. Yes. Standard price is available. Yes. Now if I get actual price of A and and actual quantity of B, then all of the data is available. With this, you can do the entire sum. So here the catch is to calculate the actual price of A and actual quantity of B. Now with this data, you need to compute. Try something, guys. This is like solving a puzzle. That's all it is. Try and do it. I know you will get it. Try and do it. Attempt it. Online folks, I will give you all 3 minutes, 180 seconds for you guys also. Everyone, 180 seconds time. Your time starts from the moment I complete this sentence. Finish it. Try to arrive at it. Fine. So, online folks, pause the video now. Now, try attempting it and then continue watching the lecture. Now, guys, now let me do it. Now, first one, this is question number 14, am I right? Okay. Now, question number 14. Now, guys, now the first thing is we need to calculate what? The actual price of A, right? So, first let us calculate. Calculation of actual price of raw material A. Yes? Now, calculation of actual price of raw material A. Now, guys, how do you do it? Now, they have given material price variance, no? Hello? So, material price variance of A is given a raw material A. How much is it? 105 adverse. Am I right? Now, what is the formula? Now, what is the formula for material price variance, guys? So, it's going to be standard price minus actual price into actual quantity gives me how much? So, minus 105. That is the meaning of this. Am I right? Now, standard price. How much is it? Guys, how much is the standard price? 20 given in the question. Minus actual price we need to find out into actual quantity given 70 is equal to minus 105. Now 20 minus actual price, can I say this 70 goes to the other side, it becomes 105 minus 70 is going to be minus 105, 1.5. Sorry, 105 divided by 70. How much is it? 1.5 only, no? Correct, guys. So it's going to be equal to minus 1.5. Guys, correct? Or AP goes to this side, this comes to this side. Can I say AP is equal to 20 plus 1.5 or actual price is equal to 21.50. With this we have calculated actual price. Very good. Who got it? Who got this answer? Very good. Very good. Guys, clear with this? So now my actual price is how much? Going to be 21.5. Is that clear, guys? That's about it. Next, how about actual quantity of B? Now here, what have they given? What have they given? Come on, everyone. They have given the total material cost variance of what? A plus B put together is how much? 275. With this, we need to calculate. Fine. Write down. Calculation of what? Actual quantity of raw material B. Right? Now, what is this? What is this? How do you do? In the question, what is it given, guys? Everyone, what is it given? 1 second. Material cost variance of A plus B is given. Am I right? How much is it? 275 adverse. Am I right, guys? Now, material cost variance of A plus B is what? Material cost variance of A plus material cost variance of B. Am I right, guys? Am I right or not? Right? Now, material cost variance of A is what? Standard quantity into standard price minus actual quantity into actual price of A. Similarly, plus standard quantity into standard price plus actual minus actual quantity into actual price of B. Am I right, guys? Everything put together is going to be 275 adverse. Am I right, guys? Now, you guys tell me, For A, we have everything. Am I right? So now tell me standard quantity A, standard quantity into standard price minus actual quantity into actual price. This is for A. Correct or not? Right? Plus standard quantity into standard price B plus actual quantity alone I don't have into actual price I have. This is equal to minus 275. This is the only missing figure. With this I can find out. Guys, correct or not? Very simple. Write down here. So this is going to be, now tell me guys, what is the standard quantity for A? Now, can I say this is going to be, yes, sir. Standard quantity of A 60 into standard price 20 minus actual quantity of A, how much? Read the question. 70 into actual price of A. Just now we found out 21.5. Guys, correct? This is going to be your material cost variance of A plus what is the material cost variance of B? 40 into 30. Standard price, standard quantity into standard price minus actual quantity of B we don't have. That's the missing figure into actual price, how much? 30. Is that clear? Is equal to minus 275. Is that clear, guys? 1 second. What I will do is, so this is equal to what? Minus 275. Am I right? Guys, correct? So now quickly solve this equation. That's all. So if you notice, the only missing figure is this. Guys, correct? Now 16 to 20, how much is that? Yes, so 1200 minus 70 into 21.5 gives you 1505. Am I right? Plus 40 into 30 is once again 1200 minus, yes, so this one 30 into actual quantity of B. Am I right? Is equal to minus 275. Am I right, guys? Guys, correct? So I'm taking this to the other side, bringing it here. So now, this is a net of figure, you tell me, no? So 1200 minus 1505 plus 1200, 875, 895. So 895 minus 30 of actual quantity of B is equal to minus 275. Bring that to the other side. So 30 of actual quantity B is equal to 895 plus 275. How much is that? So 30 of actual quantity of B is equal to 1170, or actual quantity of B is equal to 1170 by 30. How much? 39. Is this clear, guys? Now you guys understood. I understood, ma? Now you understood. That's all, guys. Presence of mind. Simple. Apply it and see. You need to have practice. Only then you will get this. Missing figures cannot be taught. You need to have the practice. Can anyone teach you how to solve Sudoku? They can only tell you the rules of the game. Now, simple. Chess. You know how to play chess? Yes, I know. But immediately you can't become Vishwanathan Anand. Now, for you to get there, now it's like a puzzle. You need that practice. Only by practice it comes. Is that clear? Rules only can be told. Maybe one or two hacks here and there I can tell you. Beyond that, you need to practice and find out. Is that clear, guys? Still, I am doing missing figures. Generally, not many faculties will do this in the class, guys. Honestly, the reason I'm telling you is because you should know in the classroom we are doing. That's an added advantage for you. Please practice beyond this. Is that clear? Right? Because there is nothing to teach. Did I teach you anything? No, but I'm just opening you up to, I'm giving you an exposure in this area. That's about it. Exam, you could have these kind of questions. Is that clear? So now we got this. So what is this? 39. Am I right, guys? It's going to be 39. Are you clear with this? So now you tell me, you got standard quantity, standard price. So for both the products, actual quantity and actual price for both the products with this. Whatever is the remaining, can you do it, guys? Plug and play. That's about it. Is that clear? Write down, write down, write down. Question number 14. Write down missing figures hyphen material variances. Write down material variances. Material variances semicolon semicolon calculation of AP of A, AP could be A, AP Kutty A. Kutty A means small a. Kutty, don't write Kutty. I am saying small a. So AP of A and AQ Kutty B. Yes. Yes, done. Is that clear? That's about it. Shall we move on to the next one? 14A, I think, once again, it is something related to material variances. Will you guys attempt it? Look, cost variance is given, price variance is given, right? And similarly, they have done something. Will you guys attempt it by yourself? Will you guys do it? There is nothing much to teach here. Now let's go on to question number, 15, right guys? Similarly, 14B also, please plan it up and do it. Let's go to 15, shall we? Hello. Let's do this. Question number 50. Penultimate question, huh? Penultimate means what? Last but one. So I am also value added education. So little bit of English. So here and there, along with something like sweets. Remember sweets. So instead of suits, sweets. Penultimate. Then certain other British English, American English here and there. Okay. So English classes also taken. Okay, language classes also taken. Anyways, guys, shall we go to question number 15? Yes. Paras Synthetics uses standard costing system in manufacturing of its products. Star 95 mask. Okay, maybe this was a COVID question. N95 we had mask, you remember? During COVID, popular, no? That will be like parrot's beak and all. You guys have seen that on N95 mask. So that they have copied, but originality they wanted to maintain. Star 95. Okay, so the details are as follows. Guys, full focus here. Good question. Now, direct material, 0.5 meter at the rate of 60 rupees per meter, 30. Direct labor, 1 hour at the rate of 20 per hour, 20. Variable overhead, 1 hour at the rate of 10, 10. Total 60. What is this? Standard data. Guys, to produce 1 unit, you are allowed to take 0.5 meters of material. Every meter of material you are supposed to pay 60. The standard price is available. Similarly, to produce 1 unit, you can take 1 labor hour. Every hour you should pay 20. Similarly, variable overheads. Every unit you can take 1 hour of variable overheads, and every hour you should pay 10 rupees of variable overheads. Is that clear? So it's given. Next, during the month of August, 10,000 units of the product were manufactured. Right? Now the details are as under. Now, direct material consumed how much? 5,700 meters at the rate of 58. What is 5,700? What is 5,700? Actual quantity. Very good. This is actual quantity. What is 58? Actual price. Not rate. Price. Rate is for labor and variable overheads. Is that clear? Similarly, can I say 60 rupees is a standard price? Am I right? What is the standard quantity of material? 10,000 units. 10,000 units into 0.5. Every unit I am allowed to take 0.5 meters. 10,000 into 0.5. 5,000 meters will be standard quantity. Is that clear? Very simple. No problem. Next. Direct labor. Hours not given. At the rate of a rate not given. Labor cost actually incurred alone is given. Is that clear? Variable overheads. Once again, hour and rate not given. What have they given? Total variable overhead cost incurred is given. Now, sir, how can we compute? Variable overhead efficiency variance is how much, guys? 2000 adverse, and the variable overheads are based on direct labor hours. We know that, no? This is also per hour only. Guys, correct? Yes. Now, you are required to calculate the missing data. Once you compute missing data, compute all the relevant variance. That you know how to do. Now, in this question, you need to calculate what? You need to compute actual hours. Guys, correct? Now one hint is what? Efficiency variance. So, actual hours if you compute. Now, then the remaining part of the question you can do. This actual hours for variable overheads is also the same actual hours for labor. Am I right? Guys, actual hours worked. Guys, are you all able to understand? Now, can anyone do this and tell me what is the actual hours? Guys, very simple. What is the given data? Efficiency variance, variable overhead, efficiency variance. Write the formula. Try attempting something. Guys, don't give up. Attempt, you will get it. Attempt to avoid attempts. Attempt to avoid attempts. Do it, guys. So deep meaning, no? Yes, absolutely, guys. Absolutely. Attempt now to avoid attempts later. Do it, do it. Online folks, pause the video now. Take a minute time, not beyond that. I want you guys to tell me actual hours. Actual hours is the actual hours for variable overheads. It is also the actual hours for labor. Right? Once you do that, everything else is ready. Right? Online folks, pause the video now. 2 minutes. Do this and then continue watching. Now, guys, very simple. They have given us what? Variable overhead, efficiency variance. Come on, shall we do this? Question number. Guys, question number 15, huh? Okay, question number 15. Shall we do this? Yes, write down. So, first one is what? Calculation of actual hours. Write down, guys. Calculation of actual hours. Guys, please. Do it. Packed, huh? Class is not yet over, ma, please. Ready to leave. Huh? Okay. Now, guys, now what have they asked? Variable overhead. Now, in this question, they have given efficiency variance. Write down, guys. Variable overhead, efficiency variance is equal to how much? 2000 adverse. Right? Now, efficiency variance, how will you compute? Standard hours minus actual hours into standard rate. Am I right? Is equal to how much? Minus 2000. Am I right? Now, what is the standard hours? What is the standard hours? So, standard hours is going to be 10,000. Guys, correct? So, here standard hours is equal to, how did you get 10,000? 10,000 units. Every unit I'm allowed to take 1 hour. It's going to be 10,000 hours. Am I right, guys? Yes. So, standard hours, 10,000 hours minus actual hours, I need to find out into what is the standard rate per hour. Given in the question, 10 is equal to what? Minus 2000. What is the big deal, guys? Very simple. So, which means 10,000 minus AH is equal to what? So, minus 2000 divided by 10, it's going to be minus 200. Correct? So, now this goes to this side. This comes back to this. What happens here? Actual hours is equal to 10,000 plus 200. It's going to be 10,200. Guys, that's nothing but actual hours is equal to 10,200 hours. Did everyone get this? Very good. That's about it. That's about it. Is that clear? So now we got what? 10,200 hours, guys. Correct? Now what is this? 10,200 is the actual labor hours for labor as well as for variable overheads, guys. Correct? So now what is going to be my actual rate for direct labor? Actual rate. So 2,24,400 is the total labor cost for how many hours? 10,200 per hour. What is the actual rate? So it's going to be 224,400 by 10,200. How much is that? 22 rupees. What is the actual rate for the purpose of computing variable overheads? 1,12,200 divided by 10,200. How much is that? 11. That's about it. So now actual data you have. No. Material, actual quantity, actual price. Labor, actual hours, actual rate. Variable overheads, actual hours, actual rate. That's about it. Everything is there. Standard data is fully available in the question. Right? Go do the question. That's about it. Are you all able to understand? Write down here. Write down. Calculation of. Write down calculation of actual rate of direct labor. How do you compute this? Actual rate is equal to actual labor cost divided by actual hours. Am I right, guys? Now, what is the actual labor cost given in the question, right? How much is that? 2,24,400 divided by what is the actual hours? Just now we computed 10,200. 10,200, no? Per hour, how much is it? Rupees 22 per hour. Is that clear? That's about it. Next one. Once again, compute actual hours for variable overheads. Write down calculation of actual rate of variable overheads. Now, once again, it's going to be the same, But here what will you do? Actual rate is equal to what by what? Actual variable overheads divided by actual hours. It's going to be rupees 1,12,200 divided by 10,200 hours. It's going to be how much? Rupees 11 per hour. Is that clear, guys? Now with this, you can compute all the other part of the question, normal vanilla computation. Correct? Everything is simple, guys. Correct or not? That's about this particular question, guys. Nothing great beyond this. Missing figures, this is all it is. So you should know how to compute. This requires presence of mind. Practice sums like this and you will be able to get that. Is that clear? Can we just go and update our library of adjustments? Now, please leave some gap. You need to finish this question. What plug and play you need to do? What overheads you need to compute, guys? So you need to compute all the relevant variances. Means what? Material, labor, variable overheads, all the variances you need to compute. Will you compute it? Very good. Yes. Okay, do it. Write down question number 15. Write down missing figures hyphen labor and variable overheads. Write down missing figures hyphen labor and variable overheads. Is that clear? Is that clear, guys? Sorry. Okay, you wanted to write that. Okay, labor and variable was only missing figures. No, that's why I said. Missing figures hyphen labor and variable overheads you have done. Semicolon. Write down semicolon. Write down calculation of all material, labor and variable overhead variances. Calculation of all material, labor and variable overhead variances. Is that clear? That's about it. Now let's go on to the last test question here. Now what is that? Question number 16. Yes. So no matter how you start, someone was waiting. Finish it like Dhoni. Yes, guys. So let's start. Question number 16. This was a past MTP question. Shall we begin? Guys, shall we begin? Easy peasy, huh? Easy and get empa. Shall we do it? Is this a missing figure? I don't know. Okay, let's do this. Okay. Anju Limited produces a product called Picked, which is sold in a 10 kg packet. Okay, guys, full focus. What are they saying? They will sell it in a packet. Every packet will have 10 kg of the product. The standard cost card per what? Packet of Picked means what? It will have 10 kgs of the product. Guys, correct? One packet has 10 kgs. So to produce 10 kgs, standard cost is given. What is that? You can use 10 kgs of raw material at the rate of 45, 8 hours at the rate of 50, 8 hours at the rate of 10, fixed overhead is 200. Is that clear? Now, budgeted output for the third quarter was how much? 10,000 kgs. Actual output was how much, guys? 9,000 kgs. Very good. Done? Now, the actual cost for this quarter are given below. Actual quantity, material, actual rate is given. Labor, actual hours, actual rate. So their material, actual quantity, actual price. Here it's actual hours, actual rate. Variable overhead, total amount is given. Guys, with this you can calculate. Variable overhead, 72,500 is given. What is the actual hours? What is the actual rate? Actual hours into actual rate of variable overheads gives me 72,500. No. Guys, correct? What is the actual hours? What is the actual rate? Not given. Guys, you can take 7,000 hours. Actual hours is given. 7,000 hours into actual rate, sir. I do not know. 72,500 divided by 7,000, you get the actual rate. Are you all able to get this? Are you all able to get this? Is there any problem here? Any issues? Any problem? Right? No. That's about it. Next up. Fixed overhead cost incurred is also given. Now, guys, in this question, what have they asked? Material, labor, variable overhead, fixed overheads. Basically, entire chapter they have asked in this question. Okay. So, summary of the chapter literally has been tested in this question. Now, guys, once again, I will list you out the ingredients for solving. Guys, last sum we are going to do in this chapter. I want a complete control. Will you guys do that? Let's finish it properly, and with that we'll be through. Shall we do this, guys? Let's get started. I want you all to compute all the ingredients. Will you do? Yes. And of course, I will compute the ingredients. Plug and play, you will do it. There is no value addition there. Shall we get started? Let's get started. Will you? You guys know? You guys know what to do? What to do? Everything you know? You should say yes, sir. Yes. If I ask suddenly, that confidence is dropping. Yes, sir. Yes. Come on, guys. Stop. Enough. Write down. Question number 16. Okay. First one, guys. First, part 1. What is it? Material cost variances. Now, write down, guys. Write down material cost variances. What do you need to do? Ingredients. So you don't have multiple product and all. So only one product, which means standard quantity, standard price, actual quantity, actual price. Write down 4 figures. You compute, one entire thing will be over. Standard quantity, standard quantity, standard price, actual quantity, actual price. So, can anyone tell me what is a standard quantity? What is the standard quantity? Come on. Which means for the actual production, how many kgs of raw material should I consume? It's called standard quantity. Correct? How much, ma? How much is it? How much? 9,000. Okay. Others, any other answer? Standard quantity means for the actual production, how many kgs you should have consumed. Actually, how many kgs am I producing? How many kgs am I producing, guys? 9,000. Correct? Now, with this, compute standard quantity. How much? What, ma? Meghna? You got it? You got the answer? Vachindiya? Okay, what was the answer, ma? You got Yarni? 9,000. How did you get 9,000? No, to produce 1 unit, you need 10 kgs. Sir, here we are producing 9,000, no, sir. So then it is 9,000 into 10, no? How much is it? 90,000, huh? Read the question carefully. Read the question carefully. This is why I said you are talking. This is why I said read the question carefully. What did they ask? Now, every packet is sold in 10 kgs, which means for one packet, you need to consume 10 kgs. One packet has 10 kgs of output. To get 10 kgs of output, you are allowed to consume 10 kgs of input. Are you clear with this? Right? Which means for 1 kg of output, you can consume 1 kg of input only. Are you all able to understand? Guys, correct? Which means if 10 kgs of input is required for 10 kgs of output, how many kgs are required for 9,000 kgs of output? It is only 9,000, not 90,000. Many students miss out not because of lack of knowledge, they miss out because of their focus, lack of focus. I will do, what is the big deal? This is the reason why many students have this issue. Guys, I keep on telling you, focus. What is the problem here? Now, please don't talk in between the class, right? Focus here. Now, 10 kgs is for a packet containing 10 kgs of output, which means per kg of output, you can only consume 1 kg of input. Is that clear? Excellent, ma. Very good. You got the answer. I'm very, very happy. Others, did you now get it? Write down here. Calculation. Write down here. Write down within bracket. Take a red ink. 10 kgs of input is allowed for 10 kgs of output. For actual output of 9,000, how much is it allowed? How much is it? 9,000 kgs. Many of you would have got 90,000 kgs. It is absolutely wrong. It is 9,000 only. Is that clear? Now, what is the standard price? Every kg given, you should have incurred a cost of rupees 45. No problem. What is the actual quantity given? Okay, this one is also given. What is the actual quantity? Very good. 8,900 kgs within bracket given. Actual price 46 given. Is that clear? With this, you can do the entire sum. Is that clear? Guys, one small observation lapse should not cost you a question, guys. You have not come this far only to come this far. You guys are so dedicated. I'm repeating this again and again because of a small observation lapse. If you just miss an attempt and all, trust me, that hurts a lot. That really hurts a lot. Right? So now, shall we? Are you guys clear with this? Any issue, any problem here? That's about it. That's about this particular area. Is that clear, guys? Any issues here? Any problem here? No. That's about material cost variances. Will you guys do the balance? Right. Now, leave some gap. So you need to do all the other material cost variances. Right. Leave some gap. That is material cost variance bifurcated into two. Price and usage variance and all these things. Right. Now, let's go on to part number 2. What is it? Write down part 2. Labor cost variances. Now I want you all to tell me now. Labor cost variances. Once again, what do you need to do? Standard hours, standard rate, actual hours, actual rate. Tell me, guys. Now, standard hours. How much is it? Now at least you tell me properly. 7,200 hours. How did you get 7,200? So, to produce 10 kgs, I am allowed to take 8 hours. To produce 9,000 kgs, how many hours can I take? How many hours? 9 8s are 7,200. So 7,200. Is that clear? Write down here. Write down here. So within bracket. So 8 kgs, sorry, 8 hours I can take for 10 kgs of output. So how many I can take for 9,000 kgs of output? Is that clear? That's the difference, and hence I wanted to do the sum. How much is it? 7,200 hours. What is the standard rate per hour? Given. Rupees 50 within bracket given. Actual hours given. 7,000 within bracket given. Actual rate 52 rupees per hour. How do you know? Given. Is that clear, guys? That's about it. Next one. The other part, will you do it? Labor cost variances. Standard hours into standard rate minus actual hours into actual rate. Bifurcated into two. Labor rate variance, labor efficiency variance. Other things, will you do it? Yes. Leave some gap. Move on to the part number 3. The next part, which is part number 3. What is part number 3? Variable overhead cost variances. Variable overhead cost variances. Now, variable overhead cost variances. Now, what is that, guys? Now, first, once again, you need to compute what? Standard hours, standard rate, actual hours, actual rate. Am I right? Now, tell me, guys, how will you do that? How will you do that? Yes, how much is it? Simple. So standard hours continues to be the same, 7,200 hours. Within bracket, whatever you got in part 2, that's the same, guys. What is the standard rate? How much is it? Standard rate, it's given rupees 10 per hour. How do you know? Given. What is the actual hours? You should know this is 7,000 hours. Guys, clear? Write down. It's going to be 7,000 hours. How do you know this? It's given. And what is the actual rate? Now, 72,500 divided by 7,000. Write down. 72,500 rupees divided by 7,000. How much is that? 10.3571. Right? But please retain the decimals in your calculator. Is that clear? Any issues? Any problem? That's about this part of the question. But they have only asked for the total. They have not asked for what, guys? They have only asked for the total variable overhead cost variance. Further bifurcation not required. Is that clear? Is that clear? Now, similarly for fixed overheads also, they have not asked for bifurcation. Fixed overheads cost variance, how will you compute? Absorbed fixed overheads minus actual fixed overheads. Am I right, guys? Now, absorbed minus actuals. How will you arrive? How will you arrive? Now, absorbed. Actual fixed overheads I have guys, actual fixed overheads, how much is it? 1,92,000. Absorbed fixed overheads. How will I get it? Can anyone tell me what is the absorbed fixed overheads? Directly we will find the amount of absorbed fixed overheads. How much is it? Logically think. Absorbed fixed overheads. How will you do it? Come on, guys. Yes, guys. Can anyone tell me how do you do that? Guys, very logical, ma. How much is absorbed fixed overheads? Can anyone tell me? If you are doing it on the basis of hours, it is wrong. How much? Come on, guys. Excellent. 1,80,000. You also got. How did you get? Simple. They themselves have given. This is a standard rate. 200 rupees is the absorption rate for 10 kgs of output, which means per kg it is 20 rupees. So 20 into actual output 9,000 gives you 1,80,000. That's about it. Are you all able to understand? Guys, correct? Write down part 4. Part 4, leave some gap for you to fill up this variable overhead. Only one variance, variable overhead cost variance. So just leave some gap. Next one, fixed overhead cost variance. Now what we need to compute? We'll compute absorbed minus actual. That's all, right? So now absorbed fixed overheads is equal to. Now how do you do it? Simple. So they have said the budgeted fixed overhead cost is going to be 200 rupees for 10 kgs. So per kg the absorption rate is how much? 20 rupees. Is that clear? Now that into what is the actual output? 9,000 kgs. So how much is this going to be? Rupees 1,80,000. Is that clear, guys? Now what is the actual fixed overheads given in the question? Rupees 1,92,000 within bracket given. So which means fixed overhead cost variance is going to be absorbed 1,80,000 minus actuals. How much is that? 1,92,000. How much is that? It's going to be 12,000 rupees adverse. Is that clear? That's about this entire question, guys. That's about this entire chapter also. Are you all able to understand? You guys tell me, is it difficult? Was this chapter difficult, guys? Damn easy. Damn easy. Provided you have the right conceptual learning, any kind of question, you will be able to approach it. Go on and update your library for adjustment. Look at the finishing here. We got single question covered the entire chapter as a whole, which we did here. Is that clear? And this question on top of it, it also had one observation issue. So the data was not given per unit, it was given per packet that contains 10 units, 10 kgs, which means accordingly you need to take that into account. Is that clear? Mark this sum as important. Excellent question. That's why I'm doing it here in the classroom. Please mark this question as important. Anyways, over and above the supplementary questions, we'll be doing it. Don't worry about that. For regular students, we'll also be doing supplementary questions. Do not worry about that. But anyways, guys, here, this question I felt is a must to do. That's why I'm doing it here. So mark this sum as important. Write down. Comprehensive question. Write down comprehensive sum. Comprehensive sum hyphen material, comma labor, comma variable overhead and fixed overhead variances. Material, comma labor, comma variable overhead and fixed overhead variances. This sum is a must visit the day before your exam. Material, labor, variable overhead and fixed overhead variances, semicolon. Calculation of SQ and SH. Calculation of SQ and SH. SQ is for standard quantities for material variances. SH is for labor as well as variable overheads. Is that clear? Right? Calculation of SQ, SH and absorbed fixed overheads. Write down. and absorbed fixed overheads, that also is there. Excellent question. So touching upon all the important concepts that we've covered in this entire chapter. Is that clear? Fine. Guys, another question 16a is also there, right? Once again, this also covers all the variances here. I think material, labor, fixed and variable, everything is covered. Can you attempt it, guys? Right? Beyond that, there is nothing great here. Guys, are we done here? Are we done? That's about this particular chapter. One second. Now, in your concept decoder, okay, all these things are there. Literally, whatever we have covered, I have put it in a neat presentation, and I mean, whatever we have seen it in a very proper manner. Now, guys, 1 second. Now, here, if you notice, so in your concept decoder, this is how I have given it. Now, this is the overall summary. Total cost variances. You have material, labor, variable overhead, fixed overheads. Am I right, guys? Now here I have given all the formulas here. So separately I have given in a detailed manner, reasons and all I have given it. But more than that, we have literally covered everything in the classroom. Nothing to worry. Now quickly, guys. Now I want you all to do one thing similar to what you did in your marginal costing chapter. I assume you guys did. Now, guys, please, online folks, I hope you guys are doing it. Take it seriously. So once you stick that on the wall, please take a photo and send it to me on Telegram. I will personally view it and reply. Right? And I also told you, I will also put it on my social media handles. If you do not want, please let me know that also. But definitely sending that pic is not a choice. That is a part of your homework. Please do that. Now, similarly, in this chapter also, standard costing, all the formulas, I want you to neatly put it very simple. Material cost variances, labor cost variances, variable overhead cost variances, fixed overhead cost variances. Neatly put it in one single chart, single chart paper. Do it. Stick it on the wall. And what should you write in that? After you finish it, write down hashtag what? Standard costing is easy. And one smiley also. Yes, I didn't miss that. And stick it on the wall. Now, guys, you will not believe the power of subconscious mind. Stick it in a place where you visit every day. Right? If you're a person who keeps looking at the mirror, stick it on the mirror only. So every time you want to look at your face, you need to take efforts to look at it. Right? But first, only marginal costing and standard costing will come in. Right? Now, guys, please do that. Please do that. Not mirror sticking. I'm just saying, please properly do this. And of course, share it to me. Send it to me on my, Telegram. My Telegram ID goes by my name @CA Ganesh Bharadwaj. Right? So now, of course. So if you share it, I will look at it, and I will also post it on my Instagram that also goes by my name @CA Ganesh Bharadwaj, as well as my YouTube CA Ganesh Bharadwaj. The same name only, right? Clear with this? Please do that. Now, guys, before we wind up, one last time, can we revise the entire formulas of this chapter? Yes, excellent, guys. No. This is the roadmap of this chapter. Now, trust me, guys, entire chapter, 2 minutes we will cover. Deal? Full chapter, 2 minutes. 10-mark coverage. That is the power of conceptual learning. My commitment to you, no mugging up. Shall we do it? Let's do it. Now, first one, material cost variances. Now, visualize material cost variance formula. Standard quantity into standard price minus actual quantity into actual price, bifurcated into two. Material price variance, usage variance. Price variance, purchase manager formula. Standard price minus actual price into actual quantity. On the other hand, your material efficiency variance, responsibility, material usage variance. I stand corrected, reading to myself. Okay, so usage variance, who's responsible? Production manager. Formula, standard quantity minus actual quantity into standard price. Right, now this gets bifurcated into two. Material mix and material yield variance. Mix variance formula, revise the actual quantity minus actual quantity into standard price. Yield variance, balance figure, or standard quantity minus revised actual quantity into standard price. Is that clear? With this part is over. Next one, labor cost variances formula. Standard hours into standard rate minus actual hours paid into actual rate. Now this is broadly bifurcated into three, including idle time. Right? One, Labor rate variance formula. Standard rate minus actual rate into actual hours paid. Responsibility HR. On the rightmost extreme, labor efficiency variance formula. Standard hours minus actual hours worked into standard rate. Now in between you have idle time variance, responsibility, maintenance team, idle time into standard rate. Is that clear? Always adverse variance with this. This is also not over. Now efficiency needs to be further classified into two. Now what and what? Labor gang or mix variance and labor yield or sub-efficiency variance, gang mix variance. Revised actual hours minus actual hours into standard rate and yield variance balancing figure. Standard hours minus revised actual hours into standard rate. Is that clear? Here when I say actual hours, it stands for actual hours worked only because it is under efficiency. Is that clear? Now this is also over. Next, now variable overhead cost variances. Come on. Standard hours into standard rate minus actual hours into actual rate. Remember here actual hours stands for actual hours worked only, right? Bifurcated into two. Variable overhead expenditure variance formula. Standard rate minus actual rate into actual hours, right? Responsibility, maintenance department. Similarly, your efficiency variance formula. Standard hours minus actual hours into standard rate. Perfect, guys. Final touch. What do you have? Now you have fixed overhead cost variances. Now fixed overhead cost variance formula. Absorbed overheads minus actual overheads, right? Now bifurcated into two. Fixed overhead expenditure variance, fixed overheads volume variance. Expenditure variance, budgeted fixed overheads minus actual fixed overheads. Now your volume variance, absorbed fixed overheads minus budgeted fixed overheads. Now this is branched into three including calendar. What are they? First C, capacity variance. On the other corner, efficiency variance. In between you have calendar variance. Capacity variance formula. Actual hours into standard rate minus budgeted. No, minus possible budgeted fixed overheads. Is that clear? Now immediately calendar variance. Possible budgeted fixed overheads minus budgeted fixed overheads. Finally, balance figure. Absorbed fixed overheads minus AH into SR. Is that clear? Absorbed fixed overheads. How can you compute? Two methods. One, directly using units, which means in this case, standard rate per unit into actual output. Now, this, if you want to convert it and write it readily in hours, SH into SR, standard hours into standard rate per hour. Is this clear, guys? And that's about this entire chapter, guys. You tell me, was it difficult? Now, guys, for those who say difficult, tell them it is super logical, right? Hashtag also you can show, right? So this is what it is. That's about it, guys. Clear with this? And one more thing I want to tell you. Now, revise the actual, madam, the class is not yet over. So revise the actual quantity and revise the actual hours. These two. Now, in exam, please don't use the word RAQ or RAH. Use the words revised standard quantity, revised standard hours. Terminology alone is different. Manner of computation is the same, right? One more thing here in my in our calendar variance, we did this. What is it? Possible budgeted fixed overheads. It is also known as revised budgeted fixed overheads. Any which ways you can term it. Is that clear, guys? That's about this entire chapter, guys. Was it great? Perfect. So with this, I am concluding this session, guys. Please revise, practice all the sums, and of course, also try your supplementary supplementary questions, the latest exam RTP, MTP questions. Anyways, I'll be doing it for regular batch students. So for AEO's batch students, please do it, practice it, right? So please do all the sums, and I will see you all in the next one. Thank you all so much. Bye-bye.